Check 1, 2. Am I live? This is the second attempt to go live. No. Check 1, 2. Check 1, 2. Flip that over. I don't know what upcoming. Delete that forever. Oh. Morning. How are y'all doing out there? Did y'all take the money off the bell? I grabbed 57 cents off of calls overnight. Let's see here. Give me a second. Save. Give me one quick second here. Just get right into it. So we'll cycle through this morning. There's a bounce off the hourly trigger off the opening bell here. We were also at the top of the key here before the open on the daily trigger. This was right before the open right here. So right up in here. Came right back down, slamming down right now into the hourly trigger. We'll talk about this too here this morning. Just one quick second here. Just got to do some technical stuff in the background. Let's see, we'll go back here. Morning, everybody. Happy Fed Day, of course. The last cumulative, no, not the last. We still have end of month or end of quarter. Kind of a big deal too. Like end of the month is, yeah, there's another argument here too. Yesterday we were having a conversation about, good morning, everybody. Good morning, David. How are you? Good to see you, brother. So yesterday we were talking about end of month, right? And like what do we have left on the docket into end of month after today? We've got expiration today. We've got end of month today. We've got a lot of watershed moments, right? A lot of the bad news is out there. And something I want to point your attention to would be if you are on the bullish side of things, sometimes even if, you know, we'll leave this open. We're going to leave the chat open today to, because it's Fed Day, we're going to leave on YouTube, we're going to leave the chat open to general public. But you have to be a subscriber, so that takes 2 seconds. You don't have to be a member on YouTube today to comment or chat on YouTube this morning. So I'm going to leave that open for you. So just subscribe remote only. So if you're not a member and you want to chat this morning, all you have to do is subscribe. It takes 2 seconds. And you can join us in the chat. Now, if you are on team, like we're going up to that caller, you might be afforded an extra week to go to that caller. So now that doesn't mean the caller prints for this quarter. Sometimes after quarter end, you'll see an additional move in the same direction that the market was headed. So I'm fast, not always. If we tag it before, if we tag that upside caller target, I would, of course, I'm not going to expect more upside from there. We'd sell the new quarter right away. If we achieve that goal before, though, I'd sell it. So if we were to achieve that caller before we get to the 29th, I'm not going to expect the extra week given to you. It is possible that we'll go there the week after, though, if they burn all of the shit that was saying we were going there in within that time period, within that quarter. Yeah, good morning, everybody. You guys can all chat this morning. I've got a few more things to do here. Just give me a brief moment. We'll do a market overview on what to expect here this morning. Give me one quick second here. I continue to forget to do this shit. Well, not forget, but just I either forget or the market's going crazy or something like that. Give me just one quick second.
Pound dollar erases earlier drop to trade at 1.2399.
What are all of your thoughts on? What are all of your thoughts on? I've got some. It's really weird. I have some. This isn't Fed Day related. P500. Jerome, Powell. FOMC. Rate decision. I have a question for you all. What are your thoughts on? So like, I don't know if you know this, but I'm not really a fan of. Hold on here. There we go. I'm not really a fan of. Well, I guess I'm partially a fan of some of the concepts behind what Twitter X is doing. Like some of it, I'm like, yeah, I get this and I get that, I get this. Other parts of it, my head is a little. I'm scratching my head here, and then other parts of it, I don't like it at all. And hold on here. I got one more quick thing I got to do. It's really bizarre. Overall, Twitter is bizarre. Now they're going to they're contemplating, or I'm going to assume at this point, if you're going to be a user of Twitter or X, whatever you prefer to call it, all members, they want to charge all users of Twitter a small fee. It's bizarre. I don't know what to think of it all. Let's see here. So think about that. We'll talk about that in just a few minutes because I just have some questions about it. See what everybody's take on it is. Good morning to all of you out there. How are you all doing? Happy Fed Day. Happy Rate Decision Day. Happy Jerome Powell flexing his muscles day. Fighting inflationism is a play on communism. It doesn't mean anything. It's more of like an 80s reference to really bad, or not really bad, really funny 80s action flicks. So we're going to switch over right now to we'll have the rate decision live for you. We'll have the interview live for you this morning. That kind of stuff. We're going to first start with the Webull chart, just do the basic, get the basic stuff out of the way. So you've got the bounce on the hourly trigger this morning. You can see it right down here. We have the sell down on daily trigger. We already know that when price is below the hourly trigger, let's see, the price is down here, and you've got the hourly trigger above, and you got the daily trigger above here. It's typically bearish. We're coming back up right now to check, of course, the daily trigger. We were pushed down off of it, and we likely need the help of the hourly trigger to get above it. So you can see it right here, and you can see the buyers step right in this morning, trying to push price above this daily trigger. These can be very powerful to the up and down side, these moments in the market. They create 4 trigger clusters, and when you're in now these clusters can be both positive and negative. We're going to take a look in just a moment as to, are we positive and negative, and do we get pushed to the downside, pushed to the upside? Oftentimes, notice in these rate decisions, it's like the Harlem Globetrotters or pre-show, before the show, from like old school traditional traders. So cute, easy setups for a little bit, like like this stuff and that stuff, and then after the pregame show is over, they trap you in, and then we go up or down. So just be careful of being trapped in here as we get closer to that rate decision. Hey, what's up, X? How are you? I hope all is well, brother. Good day. I appreciate you stopping in this morning, X. By the way, the chat is open on YouTube this morning to anyone. Oh, not anyone. You gotta be a subscriber, not a member though. So you can just click subscribe, and you can speak this morning. Chat on the open chat. If you're a moderator, if you see anybody stepping out of line, just insta ban. So if like the Russian bots come in, any of that kind of stuff, we'll do an insta ban this morning.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear all the futures, forex, and stock instruments.
There's two things to understand.
Get a free trial at
if
tickstrike.com.
Price does break above here, you're still always looking for the hourly trigger to confirm. So if that hourly trigger runs up, you want to see the confirmation on hourly trigger and then that move higher. This is the big money trade. Always looking for that confirmation. We can get major squeezes to the upside. We can get major squeezes to the downside. Those are typically short-lived. So remember that line right there. If we do get a major squeeze here, they're usually short-lived. We'll come back to reality. One of the best ways to not have to come back off of being above the daily trigger is consolidation above, not the squeeze. So the consolidation above, giving the hourly trigger, the half-hour trigger to get up here, is the best way to actually go higher and not come back and check. So let's head over to the trigger screen really quick. We're going to go to the 30-minute chart. Oh, hold on here. Take a look and see if we can get any insight into what to expect here. So here's the 30-minute chart right now. I've got the down channel right there, got the down channel right there, and we're kind of parked right here, right? So that conversation I just had with you about coming back, right? If we wind up squeezing above the daily trigger, as long as we're above the hourly trigger, we're bullish. So if we squeeze above this daily trigger, and if we come back down, you want to make sure that's holding for you to get bullish to the upside, right? I'm going to assume here that all of you are interested in that squeeze, making all this money right here, right? On a 30-minute basis right here. I'm sure this is all juicy to you, right? Like big money. You can see all this right here. This is all that squeeze money in there. What does that pay? Another note this morning. By the way, if you want to know, I think they trap you here. I don't think it's this easy. It might be this easy, but it looks juicy. I'll say that. The 15 minutes, the half an hour. These are a little too long for my liking. I'd prefer to see these down here. I'd prefer to see, like this kind of a move down here. I'd prefer to see, where's gray? Prefer to see this one down here. And I'd prefer to see, this one down here. This one right here is the most concerning. This one is actually the most bullish, which is good, I guess. It's good. This is what matters the most for an upside move. And also, we're trading neutral on daily velocity right now. So is it bullish? Yeah. What I'd really like to see, though, is that half hour get up there and that 15-minute get up there and try to help push it up. But we'll see right now if we get up there. If it happens right now or if it waits until it gets front run. Very unusual action into this Fed rate decision. A lot of this has to do as well with today being VIX-piration. You can see the buyers stepping in right now trying to get this thing to squeeze once more. We'll take a look above. We've got that tick right there. Hasn't been ticked yet. So we'll leave that one yellow. Hold on here. Get a little dotted line there. We got another one above it. Another pivot right here. And then we got the squeeze above it. Here's the squeeze. Squeeze is just above right here. Then we're going to switch over to the 1 minute chart and see what we're doing on a smaller time or a shorter time frame. And just watch this with me real quick, okay? So your squeeze is there, right? You got some volatility up here, a little bit of vol. A little bit of vol in there. And then you got a little bit more vol right there. And you got the full measured move right about there. Right now, trending up. So this is a smaller time frame right here. You kind of see that trend line going that way, trend line going this way. And you don't want to see that breakdown right here, right? So anything below 443.24, this is what bulls don't want to see. So none of that down there. No trading below this number right here. So just keep it on your home charts. You don't want to be below 443.31. You're trying to break above daily trigger right now, trying to get above daily trigger and have help from the hourly trend to push us higher. So you kind of know the no-go zone. Let's look back on a classic chart. So you can see it right here. We'll do this real simply,
Eurozone
right?
banks on track for the biggest daily rise since June 2nd, last up 2.3%.
Bearish below. And then bullish above, right? Apologies. If you don't know, I'm very sick, so bear with me this morning. I'm feeling somewhat better today. I have more leftover crap than anything today, but I have been pretty sick. So this is your bearish below down here. This is your bullish above, i.e., if you're a bull, you're buying all these dips. If you're a bear, you get a couple half-hour bars down there. You're selling that rip down there, right? If you're like, oh, Cap, I don't want to buy these dips down here. I'm too scared. We start to break above, consolidate for a move higher. This is your place to buy that dip, right? Or not dip, but the above.
Russian oil producers send first cargoes of CPC blend to the UAE.
If you're a seller and you're trying to sell this right here, we have known sellers here for sure. I don't know that I would be on that trade though. I don't know that I'm down with like trying to sell this. I like the idea of getting underneath trend and then selling that. That's going to be a big money down there. So down here is where all the action is for sellers. Even though we have selling above, we've got pressure from the upside there. Buyers still in charge right now. Buyers still trying to squeeze this up and above. You can see them. They stepped in down here. They bought. Personally, if you want my take on this morning, I think we ping pong around in here. Okay, we got our rate decision, the weakness into the before the decision, and then we either go way up, or we go whoop, for some liquidity and then blast straight down to the depths of hell. We'll look at the expected move, the implied move this morning for the day. This is another question about, we'll go to the main screen here. So I'll write the implied move in for you. And you can see here, even on Bookmap, there's a lot of volume up and down here. It's kind of like the finger trap of death over here. If you look down below, it's kind of like the finger trap of death in here. I don't want to be any part of this, and I don't want to be any part of this noise in there. We're going to look at the implied move today. And also a key note would be, and by the way, HYG is ripping right now. And VIX is dying. We've got VIXpiration. VIX is at 1396. But we were talking yesterday that some of the vol crush from some of the vol crush expected today, some of the vol crush that was expected today was stolen yesterday. We had a lot of vol crush actually yesterday, second half of the day. And does that impact the whatever upside move there possibly could be today? Rather than saving it all, this bound up volatility into today, they did a bunch of crush into the end of day yesterday. We actually had a really nice push up. Matter of fact, though, they only paid me like 90% on that trade overnight. It was 57 cents. I think I bought it for 23 or something like that, 23 or 26 or something like that. But this move yesterday that came up here, we had a bunch of vol crush already, and we got a bunch of vol crush right here. Does it lead to, less of an impact on the market today? So we're going to find out. We're going to find out here in just a minute. We've got R2 to the upside, 445.33. R3 to the upside, 447.35. So we'll plot those two upside moves. 445.33. Make that 4, make it solid. Make it white. I'm going to go with R2 up there. Put that right there. R3 to the upside. Let's see where that R3 winds up. Hold on a second here. See if we can switch back over so you can see it. So here's your squeeze zone right in here. Oh, no, I got that in the wrong place. Squeeze zone is up here. So your squeeze zone, R2, your squeeze zone is right here. And R3 is only this 447.24. So I'm going to give an STX sell right there. I wrote STZ. It sounds like that sounds like STZ. Right up in there. So you can see that. Starting to squeeze now above the daily trigger, hourly trigger pushing us up higher. Target to the upside. Got this one right here. That one right there. Bulls just trying to explode to the upside right now. Bulls, I think bulls and bears. I don't think it matters if you're a bull or bear. Everyone wants that squeeze. Everyone wants that big push higher. Let's see here. 445.95. Tag that one right there. Oh, hold on there. Put that back where it was. Trying to get that squeeze. Move that in there for you to see. One quick second, leave that right there. I think that's everything you need right now. I think that's all you need. Bullish above the yellow bar, bearish below the green and gray bar. I think that's what you need. I think that's all we need right now. Let's take a look at ARM. ARM shouldn't be hurting you. ARM's pretty easy to trade. Well, we'll take a look at ARM right now. Or give me a few minutes, we'll look at ARM. Hold on one second. Give me one quick second here. Effective funds rate, 5.33%. September 19th versus 5.33% on September 18th. Secured overnight financing rate, 5.131 for September 19th versus 5.31 September 18th. What else do I got here? Interest rate prep. Let's talk about that. So today on the 20th of September, September 20th, of course, at 2 p.m., the Fed is set to release its latest interest rate, according to the CME FedWatch tool. As of 10 a.m. Eastern Standard Time, Monday, the 18th of September, there is a 99% chance of no change this meeting. So attention will turn to the rate statement in the summary of economic projections for clues as to whether this marks the end of the tightening cycle or not. This is a big conversation that we had in stream yesterday, right? So listen to this close. I'm going to read it to you one more time this morning. And we were discussing this yesterday, which was, do we get a rate hike today? Do we get 25 BPS? The answer yesterday was that we were. Most of our participants thought we would still get a 25 BPS today. The second place winner in our poll yesterday was a skip. And people betting on this are saying we're going to get a skip or a pause. Skip or pause, we're not getting 25 BPS. The question becomes, can Jerome thread the needle to make the market and its participants believe that we're just pausing? So let's say we don't get a rate hike today, can Jerome, which I think he can, he showed that the last rate decision, that he was able to weave through to get his point across. He's outstanding at it. So can he do that today? If he does, skip. Is he able to project to you that we're still not done raising rates, and you believe that we're not going to continue to, or that we're going to continue to raise rates in the future? And if he goes from rate decision to rate decision, hold on one second here.
According to Interfax, Russia's Novax.
If he goes with a pause, is it just a skip? That you actually believe it. If you don't believe and you think we're about to squeeze right now, baby, come on, get it up there, squeeze me. Now trading above the hour or the daily trigger. It's actually lower. It's right here. Starting to squeeze above the daily trigger, starting to get bullish here. Would like to see a 1 or 5 minute closing bar above that daily trigger. We're pounding on the door right now to go higher. Give me one quick second here. The question becomes, can Jerome make the market believe that the rate hike cycle is not finished. The other mechanic in the background is if they don't believe him they believe that he's actually pausing and we'll never see another rate hike again, does that get front run into the marketplace? Is there an initial exuberance where we squeeze higher just for liquidity to actually roll this market over and down on the anticipation of rate cuts months down the road, 2 to 4 months down the road? Is the skip believed where the rate increases are not done yet? So that was a huge conversation we had yesterday. I'm going to read this to you one more time. According to the CME FedWatch tool, as of 10 a.m. on Monday the 18th, there was an 88 or 99% chance of no changes meeting. So attention will turn to the rate statement and the summary of economic projections for clues as to whether this marks the end of the tightening cycle or not. Let me know in the chat if you think, if this is, the question is going to be in the poll this morning, if you think that at any point they're going to signal an end to the rate hikes, or if we're at the end of that rate hike cycle, whether he says it or not, whether he projects that or not, but if the market believes that Jerome is at the end of his rate hike cycle, do you believe that the market will front run a roll in the market? So I'm going to ask that question to you right now. It's kind of a, give me one quick second. I'm going to start this new poll. So if the market thinks or believes there we go. Squeeze. We'll go with squeeze and roll. Rolls over. That's 2. This is the bottom. Sorry to laugh at that one. So I'll ask these questions right now. Start this poll. So it's down. You'll see it in the bottom left-hand side of your screen. We'll leave it over here for right now for you. We'll leave it over there. How you vote on these polls is you'll type into the chat box. If you're on, by the way, if you're on YouTube this morning, I've opened up the chat to not members, but subscribers. So if you just subscribe, it's a simple process. You just say click subscribe, and then you can chat in our stream. So if you want to answer this poll, you just click, or you type in !VOTE. That's all one word, !VOTE, a space bar, and then the numbers 1, 2, or 3 to answer the poll question. The question is, if the market believes this is the end of the rate cycle, does the market squeeze and roll over? Rolls over? You just think that that's it? They're going to front run a roll to the market? Or this is just the bottom, like we continue on as normal, no squeeze, no roll, just the number 3 would be, we're just trading the market as it is. Market's just going to blow it off like it's nothing. No big deal. Let me know what your thoughts are there. And I think it's a big question because I think all eyes are on today. Regardless of 25 BPS or no BP, 0 BPS. Well, let's ask that question. So I mean, I'm not going to ask this in a poll, but think this through a little bit farther down the cycle. So yesterday, everyone thought we'd get 25 BPS, and I do too. I think they should nail us with at least one more. If we don't get it this time, my second best guess is a skip with a promise of 25 BPS. Like, hey, you're getting one in the next rate decision. Now, saying all that, right? Saying all that, there is a point here that if you get your 25 BPS today, is that it? And the second question is, if they skip today and tell you, guaranteed we're getting another one, do they promise you that we might still not be done, or is that it? We know the market is forward-looking, right? It's usually forward-looking. So even if we know that, hey, we skipped today, but we got our next rate hike, we know it's coming, but that's still it. Once the market knows that there's a pause, what's the reaction to that? That's a big question, right? So it's a huge question. We are a forward-looking market, up or down, and once the cat's out of the bag, I don't know what else there is to say. Now, if you want to know my personal opinion, I think we need more than 25 BPS over time. Do you get that? Time's running out. They got an election coming. Time is running out. He better get a move on it. So far, we've got 40 votes already this morning. Thank you for voting. I appreciate it. So we've got if the market believes this is the end of the rate hike cycle. Now, notice the question that I'm asking you. Because the question I'm asking you is, it does not matter if we get the 25 BPS or the promise the next time. If this is the pause, regardless, right? If we get the 25 BPS and he tells us that's the expectation is that this is the last 25 BPS, does it get front run? And what does it get front run into? And what we're being told is we've got 29 votes of squeeze and roll over. So you have the initial exuberance. Woohoo, everything's awesome sauce. Bulls are like, yeah, it's over, right? So they get all trapped in, right? You get homeowners out there, they're all sucking each other off. They're ready to, they're like, hey, realtors are out there telling people, and that's what I think. I think when that happens, whenever that happens, you're going to get realtors telling homeowners, oh, dude, the Fed just said that was it. You go out there and sell your house right now. You make all the bulls believe it. You get all the bears out there, and all they think is, oh, shit, the market's running higher. It's going to go crazy. My thesis is ruined. Rip up your Elliott wave. Break out your eraser. You didn't get your 430. And meanwhile, bears aren't positioned for the roll. Bulls think we're going to the moon. It's like the perfect. It's like the perfect storm, right? Sellers are like, "Oh no, we're gonna go to 5,000 or something. Take all my shorts off." All the buyers are just buying for 5,000. And what do you do if you're a dealer? You just roll the fuck out of the market, right? You just roll it way the fuck to the depths of hell. No one's positioned up or like the bulls are positioned for the upside, buyers are positioned for the upside. Sellers are sitting on their hands. Like nobody's in the right place. And I see that a lot on Twitter. I see a lot of on Twitter. I'm shocked sometimes when I see the zeitgeist saying, the end of rate hikes is bullish, and I see bulls saying that, bears saying that, and then I see, I'm like, that's not true. That would be the ultimate. I can't wait until that does happen because it's going to be hilarious to see people positioned inappropriate or in the wrong positioning, and when that happens. I ascribe the same thing to homeowners. If you're at the end of your home ownership cycle, which a lot of buyers are at the end, the starting of the end of an average ownership cycle, they just need to hear their realtor tell them rates are going to be cut soon, brother. You know, because right now the homeowner has no motivation to sell, none. So they need to believe that rate cuts are coming, and that, of course, creates a flood of stock into the real estate marketplace. Yeah, we need that's the thing, though. The cuts don't begin. The cuts don't begin until we start rolling, right? So they got to believe this bullshit, right? Then we start rolling, then they're cutting, right? So there's always a front run to that pause and roll. We'll look at that chart this morning. We'll take a look. We looked at it yesterday, but I know some of you that are joining us haven't seen that chart. We'll talk about that chart and look at it this morning about that roll. So I'm going to turn that poll off in a few minutes. Yesterday, we had two polls. The winner yesterday was 25 BPS. The second place answer was skip, but a firm hawkish promise of another rate hike to come. Threading the needle so that the market does not believe we're paused forever. Now, the third place was an actual pause. And last place was 50 BPS, a surprise rate increase. The next poll we ran yesterday was what is the expected move? Number 1 was 4,500. Number 2 was 4,300. Number 3 was this is what came in first, second, third, and fourth place as the expectation. 4,500 is the first move. 4,300 is the second place answer. 46.65. The JPM caller came in third place. Fourth place was a pin of the market into end of quarter. And then last place was 42.10, the JPM downside caller into end of quarter. So here goes the trap right now. Here's the finger trap we talk about. They got you in here, locking you in down here for the rate decision. We know that hold on one second here. One quick second here. I'm going to sneeze. Give me one quick second. We know that at 2 p.m. we get the press release, and then at 2:30 we get Fed Chair Jerome Powell with his press conference. Usually two different things, provides two different types of information. So we're going to look at the Webull trigger chart right here, or this is the Webull traditional chart right here. And we're going to focus on, I don't know what's going on here. Hold on one second here. So you have 11:30 in the no 11:30. Sorry, I'm thinking two. There we go. 2 o'clock. So the 2 o'clock mark. This is when the press release comes out, and then we've got the 2:30 presser right there. So press release, presser right here and here. And I always like, look at this. I always like the weakness into this part right here. The squeeze higher. Then I like the talk from the Fed or the press conference, and that's where we get weak again into that press conference. And then they make a decision which way we're going, up or down into the close. So just be aware of that right there. Be aware of that blood that might come down. Another key point here would be if we get weak into the 11:30 to 1:30 hour, if we get weak in anywhere in here, sometimes they'll lay off it early and we start to squeeze up again. So we'll pay attention to if we're weak earlier in the morning or not, or if we're weak later in the day. We'll also pay attention if we get above that yellow line and that green line and we start to squeeze higher. Whew. Let's check on that. Check on that poll again. Now we've got 51 votes in the poll. If the market believes this is the end of the rate hike cycle, does the market squeeze and roll? Rolls over. This is the bottom. So far, we've got 36 votes on squeeze and roll. We've got 9 votes on rolls over, which is quite strong. And then this is the bottom. We brush it off would be 6 votes. I'm going to close that poll now. One quick second here. Complete. All right, we're going to close that poll. Zaza Drunts is saying, I'm still swing short from 3 weeks ago, but funny thing is I've made more and realized profits buying dips in between. Yeah. I find myself in that same predicament often, Zandrunts. It's a very, very good insight. All right, so let me go back here and just read the rest of this. So going back to this, so attention will be turned to the rate statement and summary of economic projections for clues as to whether this marks the end of the tightening cycle or not, and comments from Chair Powell at the press conference to give any clues on how the data is influencing Fed decision making. This is another key point. How the data is influencing Fed decision making. Do we just have a natural cycle of gas right now? Are they paying attention to oil and gas right now? And regardless, here are some views on what to expect. So I'm going to give you the rest of this statement here. At the last Fed monetary policy meeting in July, Fed Open Market Committee raised the Fed fund policy rate range 25 VPS to 5.25 to 5.5%. You know that I want to be over that. I want to be over like 7.5 personally. The minutes to the decision also showed officials continue to have a bias to hike further since most participants continue to see significant upside risks to inflation, which could require further tightening of monetary policy. End quote. At the Fed's Jackson Hole conference in late August, Chair Powell said the policymakers are, quote, attentive to the signs that the economy may be cooling as expected, end quote, indicating a sense that it may indeed need to do more to ensure inflation sustainability returns to target. Nonetheless, the FOMC minutes also suggested differences of opinions are forming. While all voting FOMC members backed the hike, there were 2 non-voting members who indicated that they favored leaving the target range for the Fed funds future rate unchanged. Moreover, a number of participants judged that it was important that the committee's decisions balance the risk of an inadvertent over-tightening of policy against the cost of insufficient tightening. In recent months, we have had some encouraging news on core inflation with 2 consecutive 0.2% month-over-month prints, with a third coming in at 0.278%, much better than the 0.4 to 0.5% month-over-month consecutive prints we got over the prior 6 months. There has also been evidence of moderating labor costs, the employment cost index, and cooling average hourly earning growth, together with more modest job creation. Yet we have to acknowledge that the activity data has remained strong, with the U.S. economy on track to grow at an annualized 3% rate in the current quarter. U.S. economy is on track to grow at an annualized 3% rate. That's pretty good, right? 2.6 to 3. GDP, it's not bad, is it? Commentary from officials including the hawks, such as Neil Kashkari, suggests a willingness to pause again in September, just as it did in June, but to leave the door ajar for further hike at either the November or December FOMC meetings. So Neil Kashkari is willing to pause, but this is the skip scenario, right? This is where we pause, but you get a hawkish Jerome almost guaranteeing in the presser today that you're going to get 25 VPS at a meeting in the winter. Now, the question there still brings up the question of, okay, so we skip this and you're guaranteeing a rate increase in the future. Is still though, is that the last one is the question? Or so I would pay attention closely today. If we get a skip, let's say we get no rate increase, right? Pay very close attention to the language of, hey, we skipped today. We're going to guarantee you 25 BPS at a future meeting. And then what? Like that, then what part? If he says we're not done after that next 25 BPS, you want to hear that. So the market just wants to know if we're done. I don't think the market necessarily cares if we get 25 today, get 25 in the fall, or early winter, late winter, any of that kind of stuff. Next one. Given this situation, economists are universally expecting the Fed funds target rate to be left at 5.25, 5.5, with markets not pricing even 1 BP of potential tightening. While the European Central Bank hiked rates but indicated it may be done, the Fed is set to pause, but keep its options open. As with the June decision, the Fed is set to suggest that the decision should be interpreted as part of its process of slowing in the pace of rate hikes rather than an actual pause. While inflation is moderating, it is still too high, and with the jobs market remaining very tight, activity holding firm, the Fed can't take any chances. Let's see here. I got a couple more to read to you here. I'll read something. That was from IG. I'm going to read J.P. Morgan, what they have to say on the topic right now. J.P. Morgan is saying, in the week ahead, the Fed Reserve will report on their view from what should be the top of a tightening cycle. While we do not expect any further rate hike at this meeting, they will release a summary of economic projections, giving their updated perspective on the likely path for economic growth, unemployment, and inflation. They will also provide some indication on whether they intend to hike one more time before pausing and how rapidly they intend to cut rates in 2024 and beyond. Listen to that closely. We talked about that in depth yesterday, right? I'm going to show you a chart here on that topic that JPM is speaking about in this rate decision. I'll read it one more time to you. In the week ahead, the Fed will report on their view from what should be the top of a tightening cycle. While we do not expect any further rate hike at this meeting, they will release a summary of economic projections, giving their updated perspective on the likely path for economic growth, unemployment, and inflation. They will also provide some indication on whether they intend to hike one more time before pausing and how rapidly they intend to cut interest rates in 2024 and beyond. I'll show you in a few moments. I'm going to show you what that implication is historically in the stock market. They may even adjust their perspective on where the federal funds rate should be in the long run. That's another key point. For investors, this will all be important information. However, it is also important to keep an eye on building pressures that have the potential to tip the economy into recession in 2024, i.e., they're implying that roll, how deep that roll is too, right? So that's a second thing we'll look at today. which is, do we get that roll, and how deep is that roll? Is that roll just rechecking our prior low? Is it the trough check? And you guys that know what a trough is, we'll look at that too, where that trough, are we going back just to check the trough? Are we going back to check the low in 2022? Are we going lower than 2022? While the Fed may plan for a very gentle decline in rates in the years ahead, there is a significant risk of an economic stumble that would precipitate much more rapid easing. Listen to that again. While the Fed may plan for a very gentle decline in rates in the years ahead, that's that promise, right? Higher for longer, not bringing rates down, please believe us. Listen to that closely. The Fed tries to tell you, we're gonna keep rates higher for longer, but this is the last rate increase, 25 BPS, now or later. But this is the pause, right? When do they start to roll the market, right? And the banks want to know, right? The banks are gonna try to front run whenever that's gentle or like holding of rates or that gentle reduction of rates, or if there's a rapid reduction of rates, right? The rapid reduction of rates is implying that market roll. Last one I'm going to read to you is Wells Fargo. The FOMC has gradually slowed its pace of tightening since late last year, consistent with the policy rate nearing, if not already at, its ultimate destination for the cycle. We look for the FOMC to leave the Fed funds rate unchanged at 5.25, 5.5 at the conclusion of its upcoming meeting on Wednesday, September 20th. Economic activity has continued to hold up relatively well, considering the 525 BPS of cumulative rate hikes since March of last year. Recent readings of core inflation also suggest that the price growth continues to ease on trend. Core CPI rose at 2.4%, three-month annualized rate in August, its slowest pace in more than 2 years. Notably, the disinflation is broadening beyond just a handful of categories, while still higher than the traditional core. Median CPI moderated to 3.6%, three-month annualized rate in August. I'm not going to read the rest of this crap. I'm reading the rest of this stuff. However, we expect the committee. We expect the committee to closely split on whether additional tightening this year will be the most likely outcome. The September meeting will include an update to the summary of economic projections. In the most recent dot plot published in June, projections showed a median Fed funds rate of 5.625% at the end of 2023. Assuming that the FOMC does not hike on September 20th, that would imply one more hike in November or December. We would not be surprised to see the median projection for 2023 slip to 5.375%. As expected, progress on inflation has started to turn into realized progress. To that end, we look for participants to lower their year-end projections for core PCE inflation a couple of ticks, which would be the first downward revision to core inflation projections since 2020, and a sign that policymakers are feeling more confident about inflation easing. That said, we also would not be surprised for the median projected Fed funds rate to stay at 5.625%. The last thing participants likely want to do is send an overly dovish signal about the future path of interest rates when the fight against inflation remains incomplete. As such, even if the median projection for the end of 2023 dips, we believe the median dots for 2024 and 2025 will not change much, if at all. Such a result would signal that while the hiking portion of the current rate cycle is likely to come to an end, the cutting phase remains some ways off, with policy likely to remain restrictive for the foreseeable future. So the banks are looking towards do we get rapid rate cuts, or do they actually hold for a much longer period of time? Currently, right now, the Fed says, yes, they are going to hold much longer than expected. Excuse me. Yeah, it's a pretty good point there, stretching walls. Jackson Hole last year wasn't pretty, was it? This year, much, much better. It's bring this over here. Oh, hold on here. So far we've got the Chinese finger trap in here. We've got everybody getting blocked in here, everybody getting blocked in here, nobody getting out, up or down. My expectation is going to be to the downside, weakness into the downside from between 11:30 and 1:30 this afternoon. If we do, though, trade above, if we do begin at any point trade above that daily trigger, I'll take that trade. We want some closing bars up here, closing half-hour bar above the daily trigger. Outside of that, I'm looking for a dip to the downside. So we're going to look at the implied move for today and the week, and we'll chart that out right now for you. Give me just a moment. So I can bring that so you can see it. Maybe make that a little bit wider there. Maybe that's helping. Hopefully that helps you down below. Give me just one quick second. We'll look at the implied move for this week. $446.81. What do we got there? 446.82. Let's go over to the Weeble chart. So we got 446.82. Upside expected move, downside expected move, 440.45. You want to see this at home? You got this expected move right here. And you got this downside expected move right there. This is how the options market is positioned. So I'm going to be looking, if we see weakness in the market, into either the rate decision or the presser. If the news is still good, right down in here. And then, of course, that upside move is way up there. Put that right there for you so you can see it. Give me a few moments. I'm going to read a couple more things to you. Read a couple things to you this morning. On SPX today, the call wall is at 4,500 on SPX. The gamma flip is at 44.75. So we'll take a look at SPX right now. So the call wall Move this back. Or we'll scroll back over to the Weeble chart here. This is SPX. So call wall. $4,500. Gamma flip is at $44.75. Whoop. First minor put gamma is going to be $44.25. Right where that gap is, right there in SPX. And then the put wall is that 4,400 down here. Here's your put wall. Let me make this shit smaller here. Hold on a second here. Push that shit over there, make me smaller. This is the SPX expectations, downside put wall 440, call wall above at 450. This is that STX sell on SPY above, right? Your STX sell to the upside. You've got this band up here that gamma flipped to positive. So you want to be above this first level of vol right here to get positive again, start to get bullish. And then the downside expected move to that put wall 440.42 to the downside in case we get some waterfall puts, any of that kind of stuff. Until we get that, that's kind of your top and your bottom right here, what you expect. Start to get bullish above 4475. Let's take a look at this in a higher time frame. You want to snap that for yourself at home, you can. We'll now look at it on a 15-minute chart. See it right there in a 15-minute chart. Let's go to a 1-hour chart. Does this maybe help right here in a 1-hour trend chart, right? If you're a bull, you want to get above that daily trigger, right? You want to slap that daily trigger. It's right about here. Confirm that and then start to head higher, right? Now, remember, call wall right here probably send you back down until more the call wall raises for us to go up here, right? So that upside target for the day likely maxed out up here, right? Likely maxed out. We'll look at that right now on SPY. You guys want to see this in a higher time frame? Oh yeah, baby. There's that collar on the upside. Whoop. Hold on a second here. That's what you need if you're a bull, right? If you're a bull, you need to be up here. You need people to believe everything is awesome sauce so that we can get up to that 45, 75, right? You need that up here. You need these buyers to come up here and start buying so that we can get up there, and squeeze up into. It's actually right here. We'll get rid of that stuff over there. So you're going to need people to believe that everything is good to go. We're going to go higher. We're going to squeeze up, take all the vol off the market, vol crush, any of that kind of stuff. So you can snap that if you want right there for your at home. You see where the put gamma is down here. All right. We'll look at SPOOs. There's your R3 up here. And then your put wall is up. Wait a minute. Make sure I get this right. Your put wall is way up here. Put wall is, or your call wall, I should say. Right there. That's also STX sell, right? STX sell, come back and start buying puts again so we can drive it higher. Start buying puts right up there. So we'll make this one white. This is make that white. Make it thick. Big boy thick up there. Let's see here. We were talking yesterday in stream. Yesterday in stream, we were talking about is it the right time to go long the market permanently? Not zero dates, but with a larger positioning to the upside. And I didn't. I'm hoping that there's some kind of weakness here. I'm hoping that there's weakness into 11:30, 1:30 this afternoon. Maybe even within the presser, so that I can get a good discount. Give me that nice fat discount to go long the market. I'm feeling better. So my wife last night was feeling like I was feeling. Last night I actually slept hard, which was good. I feel better this morning. My throat still is fucked up. But other than that, I don't feel nauseous this morning. I've got some hot flashes. That's it. Just hot flashes, sore throat. So I'm feeling slightly better this morning. And I actually got good rest. I slept like a baby last night. I appreciate you asking. Okay, so you guys know your gamma stuff, right? You got your book map stuff. You got your traditional charting stuff. You got your all your levels. You got your implied move. You got your triggers and velocity and all that kind of stuff. You guys can see all that stuff. Market looks like it's supportive right now. Just a matter of finding the right dip to buy and putting the right time on your trade. I got some coffee and water this morning, so got my water jug here. Got my little Nalgene bottle. Still using Nalgene all these years later. Can't stand those metal fucking bottles, man. I don't like them on my teeth. Do you guys like metal bottles or not? Sorry. I'm not a fan of metal bottles. They've been trying to push that shit for like a decade and a half now, and I'm just not down on it. I don't know if it's because of canteens. I don't know what the reason is. I'm getting tagged in a deep fake meme. Right on. I got a deep fake meme. I want to see it. How do I see the deepfake meme? Is Chewy dead? Is Chewy dead or what? For glass, really? Nalgene's are so easy to use, but wind up having an off smell. I don't get the I get the BPS free one. I get some mustiness sometimes, but not like metal mustiness. Electric lemonade. Hold on. Well, it's on X at Trader Podcast. Let me look right now. At Trader Podcast. Hold on. I'll check it out right now. Hold on. Let's see. I'll check it out. Let me get on X really quick. We're gonna talk about X this morning too. We're gonna go back to that conversation about X. Where the fuck is X? Checking it out right now. Hold on. Trader Podcast. I like the E at the end, by the way. Is that like cast? Let's see which one is it? Trader Podcast. Which one do you want me to play? I'll play it on stream, brother. Which is it? The one with Jerome Powell? Let's see if I can bring it up real quick. Is it your pin tweet? Or is it today? Is this the Breaking Jerome Powell podcast? Oh, baby, you got ARM in there, too? I'll play it right now. Hold on. I'll play it. Hold on a second here. Let's see if I can bring it up down below here.
Transitory if you don't stop asking me about our terminal rate. You got that. Good afternoon. My palms are sweaty, knees weak, arms are shaky. Inflation's back up already. Dollars confetti. I'm nervous, but on the surface, I look calm and ready. Before I take questions, I have some prepared comments to make about the market and some of the participants. First, you're about to become transitory if you don't stop asking me about our terminal rate. You got that. I saw a bunch of you were talking up the ARM IPO and were heavily subscribed to it. You must really hate money. Masayoshi is going to dilute the fuck out of you when he needs money for his cocaine habit or bailing out the non-performing companies owned by SoftBank. All this talk about the Fed tapering also gets my blood boiling. It reminds me of my wife's nagging, and I have to tape her mouth shut. Also, you dumb fucks freaking out over the blip in bond yields on Sunday night, like the economy was gonna crash. How did that go? If you understand this, then all these subscription sellers and so-called investigative journalists putting on the tinfoil about NVIDIA and CoreWeave. Yes, we all believe that NVIDIA and Jensen are engaging in multi-billion-dollar fraud. I remember when you shorted NVIDIA below 300 and how wonderfully it worked out for you. Oh no, I hope you increased the subscription fees for your trading club from $350 a month to capitalize on the mayhem. But I checked your website and no, you didn't. Pathetic. It is more proof that you actually don't have any business sense. So instead of listening to these charlatans and clowns and giving them your FD money, you could just subscribe to actual professionally run services like TraderAid or Spot Gamma. You could just follow Jam Croissant or Eliant on X for free to get actual information you can use and understand how your short positions are going to inevitably cause you pain. Then President Biden goes on and opens his yap about draining the SPR. Bitch, neither you or I can print more oil. What the fuck are you even doing? Do you want me to keep hiking into the election? Want to see how well that turns out for you? Anyways, I'm sick of coming out here every few weeks and bitch slapping you. I'm just a mergers and acquisitions lawyer who somehow found himself to be the most powerful man in the world, with the finger on the print button. All I want to do is be liked by my banker friends. So I am going to keep hiking till Jamie Dimon gives me a reach around one of these times for letting him buy up all these banks for cheap. Maybe I will get a sweet gig on a couple of boards for banks when I retire. Yeah. Overall, I'm really getting tired of this shit. So fuck your options, fuck the economy, fuck your stocks, your bonds, and I want you to see D's nuts on your chin. I'm fucking done. As always, fuck your puts. Fuck your calls. Jay Powell has you by the balls. God bless my money printer.
Oh, man. I got to use the dimming one. But make sure you follow at Trader Podcast. It's at TRADERCASTE on Twitter. How many followers you got? So this guy, he's got 3,832 followers. His
afternoon, my
handle is great. So
palms are sweaty, knees weak.
Make sure you're following this guy. I already follow him. Oh, dude, he follows Pelk, dude. Dude, Pelk is the man. I love that guy. No worries. No worries at all, man. I got you covered. So follow him on Twitter for your hottest, freshest memes. Let's look at ARM. On that topic of ARM, let's talk about ARM. ARM's been great. I don't know how it's been difficult for people to trade ARM, but let's take a look at ARM really quick. And we'll look at Chewy next. I saw the Chewy comment earlier. Let's take a look at ARM. Oh, still in downtrend, huh? Still in downtrend. The low here, 52.33. Woof. Woof. 30-minute time frame. Let's take a look at it. Still selling down and now down below its opening price, right? Got the opening price down here of 55.62. We're going to take a look at this on a 1-minute time frame and see what we can gain or garner. So what can I tell you about ARM? We've taken some trades up to this half-hour trigger. We took a trade. Then we took another. Oh, we didn't take this trade right up. We talked about this trade yesterday, and we had said we are not bullish unless we were above that $55, right? $56. Did not get above it. Take a trade higher. So again, for you, if you are an ARM trader, if you want to buy ARM, listen closely. Please, please listen closely. If you are an ARM trader, looks like we're coming into some kind of bottoming on ARM down here. With that said, though, again, not a buyer of ARM unless on today we're above 55.74. So I'll draw this out for you right now. So here's ARM, right? Whoop. What you want to see if you're a buyer of ARM, you want to see price. Well, you want to see a cross of the 1 and 5 minute, right? Just like right here. Watch that right there, right? You want to see a cross of the 1 and 5 minute. You know that they're going to try to sell down this 30-minute trigger, right? And they're going to try to sell this one down, right? So can you be long here? Yes, you can be long here if long if 27 EMA it crosses above 129 EMA on a 5-minute chart, right? We'll go with 5-minute chart. Make it easy. And your targets to the upside on 53 would be 54.67, 55.74. I will say something, though. I will say something. This is a garbage trade, and I don't like these trades. You little tiny bit of money, sell it down on you, you're fucked. Tiny bit, or they don't sell it down, you tiny money. Not guaranteed. I don't like these trades. Not a fan of them. What I do like, though, is if price goes above and then confirms on the hourly trigger and goes higher. So if I was to be a buyer of ARM, I would be a buyer Cap is a buyer on successful back test. Right there. So if we had some kind of move like this, where you break above, we start confirming this kind of nonsense right here. We begin to move higher. So have the buy button right around here. And what are the targets on this? So there's your previous right here. That's that previous one right there, right? You can see that high right there. You need to break that. That one right there. But then your targets become there, there, there. All this crap up here. That one right there. That one right there. That one right there. Right there. That one right there. So you see that right there? Caps buyer. Take that up. Try to trade this right here. PT1 57.61. As long as trend continues higher. So I'll show it to you right now. You'd see if as long as you stay on trend, whoop, right there. You'd have the one target right there, two targets right there, three targets right there, and then Valhalla to the upside. Price target 60.54. That's the price target if we can get above 55.74 is $60.54. Actually, it's higher than that, but right there. Cap buyer and successful back test of 55.59. So if you're an ARM trader, you got what you need from here. You know where to buy. You know where to take it. You know if trend breaks, what to look for. You see that trend is changing on SPOOs here, right? We're now to a downtrend. You see the crossover right here. This is a bearish cross. See the positioning here is short. And they're trying to rain this down right here. 442.80 target to the downside on SPOOs. If you can't see it, I'll show it to you right here. Bearish cross. See if I can get something. Let me see if I can get a better read on this if we do go down. Time is that 11:30. 11:30. 442.70. Right down there. 11:20, 11:30. Right down there. See if the Bears can do it. Yeah, unless we get a 1/5 turn cross, not down on that trade, on that arm trade. I want to see the cross first on arm. All right, let's see what you guys are talking about this morning. I'm flat right now. I got nothing. I'm looking for a dip to buy today around 11:30 or 1:30 this afternoon. Possibly even better to grab the presser low. That's what I'm waiting for. So I've got no trade on right now. I've got no puts, no calls, no nothing. I'm looking for a dip to buy today. If you are watching us on YouTube, let me see if I can open up the Twitch comments this morning. Let me see if I can open up to everybody. I don't know if I can or can't. Chat settings. Show chat appearance. Chat highlights, lead message, pause chat, pop out chat. Subscribers only. Okay, here we go. Followers, subscribers only. Okay, so I think I've opened up the chat on Twitch today as well. So Twitch and YouTube. I think you can chat right now on Twitch if you are not a subscriber or follower. I would appreciate if you did follow or subscribe on Twitch, but today the chat is open for anyone on Twitch, not just members. And although you can subscribe for free on Amazon Prime, you can go to Amazon Prime, subscribe there, and the chat is always open to you. It's a way for you to always chat. If you're a YouTube user and the chat is ever closed, you can always go to Amazon Prime Gaming and subscribe via Twitch and then chat on Twitch. YouTube today is open to anyone to chat, and Twitch is open to anyone to chat this morning. I think on YouTube you at least have to subscribe, which is free. Just click the subscribe button. Please do me a solid if you can this morning. If you're out there right now, if you follow me, do me a solid, and can you repost this stream on Twitter or StockTwits or wherever it is you hang out? If you could repost the live stream wherever it is you hang out, I'd appreciate that. On Twitter, wherever it is, and give me a like and a subscribe on these videos. If you really, really like me, but you hate giving me money, you could always comment on the actual live stream, not in the chat, but on the live stream. Just be like, I can't stand Captain Jim James. I don't care if it's good or bad. YouTube doesn't care either. They just care about lots of comments, not in the chat. So I'd appreciate it if you could do that for me this morning as we lead into this event. If you restream this, as a matter of fact, right now, if you restream this on Twitter and you tag me and follow me, I'll follow you back. I'll get on Twitter. So I'm going to get into, if anyone's out there, if you follow me and restream this, I'll follow you back on Twitter. I got your podcast, man. I see you now. I'm in my notifications. Thanks, Cowboy Starfish. I appreciate your I did post the stream on Captain Jim James's handle, so you could just retweet it. You can just retweet the post that I made this morning with the stream. Cowboy Starfish, I appreciate you reposting the stream, brother. Let's see what we got here. Dylan Brown, baby. I appreciate that. I'm following you. Oda Nabunga, I appreciate it, brother. Who else we got there? Bull Bear Bust, appreciate it. Brad Armitage, my man. Career low, baby. What up, brother? Roller Coaster 46 reposting. I appreciate that. Cannot be helped. Appreciate that as well. Make sure I'm following all of you guys. Yeah, I think I got all of you guys. I'm following all of you guys. Henry GL, I appreciate you following me. I followed you back. Henry GL has now has 8 followers. His handle, he only has 8 followers. His name is Henry Got Long, at Henry Got Long. Follow him. Try to find him on FinTwit if you could. Try to get that guy some more subscribers. Maybe he doesn't want subscribers. I don't know. If you want to join us, Hepcat, my brother, what's up? Following you, brother. So what has he got? Sydney. Following you, Sydney. Sydney V. Scotty Smithberger. Done. Followed you. Blissowitz, thank you very much. Exclamation point, followed you. Who else we got there? Lawrence G, brother, followed you. All right, there we go. Lopan, what's up, Lopan? Appreciate the shout out there on FinTwit. Followed you back, brother. Don't read this. Already following you. I like your pick, by the way. Let me make sure I got all you guys out there. Son of a debiche. FX Retracer. Got you, brother. Following you. Who else we got out there? Little Big Bear following you. I got you, Little Big Bear. Who else we got? Who else can I follow out there? Let's see, I follow a bunch of people out here. Andre La Romaine. Reposting the stream. I appreciate that. Right on. Oh, yeah, baby. Getting some reposts. Digging it. Appreciate that. Definitely appreciate it. Squeezing higher right now. The trap is in full force right now, right? Look at that. Just grinding. Bam, bang, 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 bang. When does the hedge come off is the question. If you're trying to trade this today, we're gonna do a segment on attempting to trade this today. I will say this. We'll start with trying to trade this. I'm going to say this. As usual, the best trade on today is no trade. Seriously, best trade today is no trade. There are so many days of the week, so many sessions where we don't have these unexpected events, and the market just kind of follows normal patterns, right? Normal trading, up, down, pretty easy to see. Your best trade is no trade today. That's my only financial advice. Do not trade this. If you called your financial advisor, they would say, are you out of your fucking mind? So I'm going to tell you the same thing, okay? Just stay away from this. You don't want none of this, Dewey. Second thing I would say, this is the not financial advice part. If you do choose to trade this, don't be trading your hold accounts on days like today. Don't be doing that shit. You want to take a lotto trade or something for fun, like you're playing squares or something at a football game. You're at, I don't know, a bingo hall or something. You're not letting your rent ride as you make your grandmother the money to pay off her mortgage or something. That's fine. You know, like that's just we're having fun kind of a deal. If you are going to trade this, though, some other things I want to say to you is this. Oftentimes on days like today, let's say you get positioned in the wrong way, right? Let's say you're taking puts or calls, and you've got stops on a day like today. They might not help, and it might be better to just hold whatever you're holding until it prints. So if you're a bear out there and you're like, I got puts, there might be an opportunity. If let's say you buy them for 50 cents and they go down at 20, yeah, I'd probably leave them on. There's probably a chance at some point today that you're going to get a print out of those puts or an escape. Same thing with the call side. Now, saying that, make sure that you're taking the money and running as the market is repriced. So you have heavy positioning in the market for this event, and you're going to get volatility crush, right? Vol crush or interest interest leaving this event, right? As this interest leaves, if you've got 10 people that are interested in protecting their underlying holdings in the market, so I've got a bunch of 0 to 8 puts protecting my my underlying in this market on this market today, and the market nothing major happens, right? And now there's only 9 of you there, or excuse me, 2 of you there instead of 10 people there. You're just a put trader rather than protecting your underlying, and now there's only 2 of you trading it. What happens, right? They reprice for only those 2 participants and not the original 10 that were there. So you got to be careful of volatility crush and the repricing of options as the event unfolds. So as the press release is released, and then, of course, Jerome Powell speaks in the presser, right? You'll see volatility crush. So let's say you were making trades yesterday. That volatility, the implied vol, that option interest was higher yesterday than it is today. As those options get repriced, it usually repricings will take place 2 to 3 times today, and then there'll be more repricing into tomorrow for whichever direction the stock market takes. So just be aware of that. You could be up on your trade, the price could be going your direction, and your options would be worth less than you paid for them. So let's take a quick look at that right now and see what I'm trying to say to you in even simpler terms. So let me give you a better explanation here. And we'll take a look at this right now. So let's say you're in puts, right? And we start to go down here. So we start to bleed down here. You get this bleed down here, right? And your puts are worth now $1. They were 50 cents. Now they're worth $1, right? Into this event, right? And we start to squeeze higher here. Let's say we get a rejection. Jerome comes out and says, fuck your calls, right? We start to head down again a second time, right? And these are, back here, these are worth $1. These likely won't be worth $1 again down here, right? $1.10, even $1.20. Nope, these will likely be worth now, let's say 50 cents. Does that make sense? Even more amplified. And up here, they're worth like 1 penny at one point, 2 pennies. Just as an example, this isn't what's going to happen. And then the same thing could even continue down here. So you get like 1 repricing, 2 repricings, and then a 3rd repricing after the event. So my point to you would be that you wouldn't hold your puts if you nail that and then come back down, right? You're not going to hold your puts through the entire move. You're actually going to take the money and run and then reposition for another down move, right? So take the money and run, take the money and run again down here. And even if we get further downside of the close, you're going to take the money and run and then reposition again. The same thing applies to the upside. So if you're a bull out there, let's say we're weak down into this 1130, 130. Let's say we're weak down here, right? And the press release says no rate increase. We begin to go higher. We blast up here, right? You should be, and you bought this down here. You take the money and run. I'm out of here. They slam it back down quickly. Go back up, right? And your options that were like, $2-3 or something, they're now like $1 right here. Then they're 2 or 3 up here. Does that make sense? So very important for you to be taking the money and running at every major pivot and then repositioning. And another key point here would be that we tend to also have failures just below major pivots. So failure. So if let's say our upside target up here at R2 is 445.33, you get a failure at like 445.20. Like just before you're going to get that big print, they'll choke you out. So just be careful of that. These dealers know exactly what is going on, and they'll trap you at any moment that they possibly can. What the dealer's job today is for you, and for you, and for you, and for you, and for you. And that guy at home that's naked right now, watching right now, that guy that's sitting in his tidy whities at home on his couch with donuts and bonbons on his hairy chest, that guy, you right there. I want you to realize that they're going to reprice along to the rest of the day, but they want you out there to make a giant bet to the downside, a giant bet to the upside. The dealer doesn't care if we go there. They just don't want to pay you. Does that make sense? So they want you to have a confirmation bias up or down, and they don't care where we go. They want to take your money no matter where we go. Do you understand what I'm saying? So be hyper aware of that on a day like today. If I was a dealer, I'd be like, well, it looks like I've got an extra $1,000 coming to me this week to pay for gas on my boat, right? Because of all these numbskulls out there that think we're going to the moon, and all these numbskulls like we think we're going to the depths of hell. And then there's like a young lady there, and she's an apprentice of the dealer, and she's like, but boss, what if we go all the way up or we go all the way down? And the dealer's like, listen, I'm going to tell you something. Even if we go there, we're going to reprice the entire way down and reprice the entire way up. And we're going to fuck all of these bettors on a Fed day. So just be hyper aware of that as the day moves forward, of that repricing that takes place on these event days. It's the birthday for the pros. You got it. You got it. So we're going to look at Chewy and then MSTR. We'll look at Chewy and MSTR. Give me one quick second here. So we looked at ARM. We'll look at NVDA. We'll look at Tesla. We'll write those down. Let's take a quick look around the market and see what's going on. Actually, I got a couple things for you here. One quick second here. I gotta do a bunch of likes, bunch of follows on Twitter. Make sure I'm following everybody. Johnny Mogs, I appreciate it, brother. Manhandle, dude. Baller name, by the way. Manhandle. Right on, right on. I dig it. I agree with you. Price action is king. Manhandle. 100%. Gotta follow a bunch of people. Anthony followed you. Who else I gotta follow here? Matter of fact, I just cleaned up who I follow. I just cleaned up who I was following this past week. Anyone that wasn't following me, I ain't following you. Bunch of people out there looking for follows, then unfollow. They're like, oh, look who's following me. Yeah, I'm following all of you guys out there. Stretching Walls followed you. Who else am I following? Cody Fushak, what's up, brother? Already following you. All right. So we're going to take a peek around the market here, and I got something special for you, I think. Let's take a look here. Give me one quick second in the background. One quick second here. We will have the presser live today. We will have play-by-play and interpretation of the rate decision and the presser. I got nothing on my list this morning. Let's take a look and see what's on my list. We'll check this one out. I'm going to go to the trigger screen here. Remember, positioning right now is short the market, just so you can see it right here. Short the market on SPY. We're going to look first at BRZE for Braze, one of our favorites. And we're getting a check right now on the hourly trigger on Braze. Positioning is short, but you want to pay close attention to this action on Braze. And if we get a confirmation on the we already have a bounce on daily trigger. It's good to see. And that's a confirmation that we're going higher. And now they're checking the hourly trigger. If this holds, we're going to be looking for an upside move on BRZE. And what is BRZE trying to do? Let's look on a 30-minute chart here. Look at that beautifulness right there. So just take a quick peek right here. BRZE with a gorgeous bull flag down here. One bounce on daily trigger, second bounce on daily trigger, now checking the hourly, and it wants to move to the upside. So keep an eye on Breeze today. It's a little long in the tooth. If it breaks 45.22, the downside move is 40.18. We are bullish here right now. So as long as pricing stays above that 45.14, targeting the upside here, 49.30. And let's look on a higher time frame here, what we're really targeting. What are we really looking for here? And this is the bad boy right here. Do you see it over here? Look at what we're actually targeting. 61.68. 76.87 and 93.34. So just keep watching this. It's all very productive right here, right? You see this? Trying to take out these guys up here. Trying to take out this guys right here, right? So trying to get up there and squeeze all this stuff. So you got that 61.68. So price target on Breeze, as long as this holds, 61.68. I would then expect some major consolidation down here. If you begin to trade higher than 61.68, the target is 78.87. Lots of grinding in here, but then for an explosive move to 93.34. Keep your eyes on BRZE. Very productive, very productive. Check out BRZE's guidance for the last 3 years. Check out their earnings reports, and then also check out what they're selling. Is it real? Is it fake? Oh, yeah, baby. Chewy. Woof. Chewy. Chewy, what are you doing, bro? Woof. So who is asking about Chewy? Price target on Chewy. Oh, man. Chewy, what are you doing? Someone said, what's your expectations on Chewy? And you ain't going to want to know. There's 0 right there. Is Chewy going to 0? Oh, boy. Is Chewy going to 0? We've got $8.04 charted as the target on Chewy. $8.04 is the target price on Chewy. 763, or no, is it $8? Was it $8 is targeted? Dude, I gotta tell you, man. Let's look at the 30-minute chart one more time. Let's just take a look. Oof. Price target on Chewy. Man, $8. I will say this though on Chewy, dude. Chewy's gonna die here. Chewy, dude. Chewy. If you think you're gonna save, I'm gonna tell you this about Chewy. So because of where you are, okay? Because of where we are in price right now, we're at 1867, right? Because we're blasting down, start to use whole numbers. Begin using whole numbers then. You get 20 bucks, right? You got 15 down below here. I always like these nice round numbers, cash market, nice round numbers. Tickers like this, what they end up doing is you got bands of auto buy sell on these numbers. So let's take a look at these two right here. You got 15, you got 10 right there, right? So let's start with just Chewy right now. Let's pretend this is not pretend. We're not pretending, actually. Let's call that S1 for the day. Let's pretend this is S1. In your own mind, that's S1. If you're like, hey, can I buy a dip? There's your 20 bucks right there, right? This is your S2 right here. Fairly easy to do this on your own. There's your S2. And then your S3 is going to be right down here, S3. Funny how all this kind of lines up, right? There's your S3 down at 8 bucks, okay? So saying this, where do I want to see? Where do I want to be a buyer here? See that hourly triggers at $19.31. I want to see price get above. Not just that hourly, but that 20 bucks. Okay, so right there, consolidate for the move higher. Your next target to the upside is going to be 24.82. Right there. And I'm not bullish. So this would be your pivot, okay? That's your pivot line, right? If you were able to get above that 24.82, that $25, right? Your S1 is going to be 30. And this weekly trigger is going to be the top for you. It says 32, but I think it's $30 by the time you get there. So I'm going to delete that one. Your price target after 24 is $30. Your weekly trigger will come down here by that time period. So like next week, week after. This will attempt to sell you back down. Right? So you're going to get something like this. Squeeze up, blast down, right? Get back down there and fight for that weekly trigger. Not a bull. Not a bull on Chewy unless it gets above $30. I need Chewy above $30 to be a bull. There are 2 trades in here for you on Chewy, but price needs to be above 20 bucks. Without price being above $20, which it is not right now, my price target is to the downside. Cap's price target currently on the downside to 804 right there. 804. Let me know in the chat if you disagree with that. So right now, just at this moment, see where it's parked right here? I'm expecting to sell all this. They sold this. Sellers are right here. They came in hot and heavy. And any kind of pullback, I'm going to expect that to get sold as well to the downside. So currently extremely bearish on Chewy. Price target $8. Let's go back, do a quick check back on SPOOs. One minute time frame. Still short, holding the half hour right now. Parked on this half an hour right now. Positioning is short. You got your first target right there. Target 1. We'll find out if this rejects and goes to the downside. Keep an eye on 4435 and 44373. If we get a rejection off of these two numbers right here, we will continue to the downside here or here. Any kind of rejection will be met to a new target to the downside. Targeting that 442.62. Move that over right there, somewhere in there. If you want to see it, it's right here. Right, whoop, down, and blast down to the depths of hell into the 11:30 hour. Keep your eyes on this one here. If it starts to roll, could be a big, big red bar. Big, giant red bar down. Be careful of it. You get some kind of rejection, and it's straight down to the depths of hell. Next up, Tesla. One-minute chart on Tesla, parked on its hourly trigger. We'd rather look at the 30-minute chart on this one. Sitting on its weekly, sitting on its daily. Just starting to get bullish. If you're a Tesla bull here, positioning is currently short. Saying that on a higher time frame, these Tesla bulls love buying these daily bottoms and sending them up, just like this previous example up here. And we're just starting here to get bullish on Tesla. See it roll higher, and we're going to expect some move like that, right? But this dip is going to get bought to the upside up here. So if you're looking for a dip buy, getting bullish on daily trigger right now on Tesla. If you're looking for a dip buy on Tesla, you are trying to buy 256.64. You are bullish above 267.25. Bullish above 267.25, trying to buy a dip at 256.41. So the idea here would be blast down, get back up there maybe on that Fed shit, and then we're running higher to right there. And then ultimately, thank you very much, I appreciate it. Ultimately, you've got another target up here, 293.52. Oof. Trading 265, 50 point, looking for like a 50-point move to 300. Bounce back down there. Yeah, right there. Move that over. There might be some consolidation in here. Right in there. Back, pulls down, then up, something like that. Bearish below 256.64 on Tesla. It looks good for you. If you're a Tesla bull, all this looks really good for a price target of 293.52 currently. So Tesla bulls, just positioning. NVDA. 30-minute chart. Ooh, not good, is it? Not good. Not bullish. You got a little bit bullish hair down here. This looks weak to me. You know what? NVDA. Price right now is below hourly trigger. I'm going to give this a price target of that weekly. 381.42, believe it or not. Unless something changes. Bearish on NVDA. Target right there. Target right there. 381.42. If you don't believe that, you're like, Cap, we're going up on this one. Only only if price holds 435.99. Price holds above 439.07. So watch this right now. I'm going to show it to you. You're an NVIDIA bull. If you want to get bullish, I'm going to show you exactly what I'm looking for here. Bullish above 439 on NVDA. And then I would expect you to trade $453.11. And I got to say something to you out there. You'll trade that, but there's no guarantees from that point forward. You need to be above 455 and likely consolidate. You'd need to be above here, grind all this out, and then you'd start to get your Valhalla type trades. You know, you take this bad boy out up here, take this bad boy out here, take that one out up there, and that one up right there. So some key levels here. They're going to try to stop you over here, guaranteed. For your squeezing, you need to be above 468.45, like holding it. Like hold, start squeezing those big numbers up on high. But currently right now, bearish to 381. See if I can show this to you so you can snip it. Not a buyer until you get above here. Not a buyer, not a buyer. Not even a buyer here. I want nothing to do with this. Don't want to get pushed back down to the depths of hell. I need to see like this move, and we're holding right there. You got to hold that right there. Got to hold that. And we're not there yet. So NVDA, not as bullish as Tesla. SPY, looking for a bloodbath here. Not a bloodbath, but I'm looking for a nice fat rejection to the downside here. Looking for some blood right here. Looking for this rejection off the half-hour trigger and the hourly trigger to the downside. Let's take a look at the Webull chart. $11.41 right now. We are weak into the 11:30 half hour, right? I got this bearish below here, right? PT down here, PT 442.70. Let's see if we can make it rain. Hold on here. See if we can make it rain. Oh, yeah. Can we make it rain today? Can they make us go down here? Can we make it dirty? Can we get a rejection of the downside? What else do we have down here? Oh, we get the pivot down here too, don't we? Get a big down move right now. Big question. Bears with the scary rate decision. Sellers with the scary rate decision. They're like, I got a hedge in the market. I need it to print no matter what. I got to get the print. There's like Carl Icahns out there right now. He's like, I don't care if we're bullish. I got a hedge and I need some money. I need to make some money. I can't be down 10 billion this time. See if we can get that more downside here. We're going to watch this very closely for a rejection. See if we can get, so this is what they're looking for. Bears looking for this rejection right here. They want to send this to the depths of hell down here. So we'll see if they can do it. Do you have the will? Do sellers have the will? We're going to find out right now. I walk away for 5 minutes and bear music's playing. Bear's trying to get a little bit of dippage in here. They want that, you know, like that 11:30, 1:30 weakness in the market before we rip faces off. They want that doom. They want that 11:30, 1:30 doom. Get down there, right? Fuck it. If Miro's out there, Miro's probably like, Miro's the kind of guy that'll be like, like if we go down here, we'll be like, yep, selling puts to everybody, right? Selling puts down there, and we're out of here. We got our hedge paid. When doom. Is Miro quiet today? If he's out there watching, what's up, brother? Hope you're doing well. Come back, retesting the 1 minute trigger once again. Put a spoos on a 30-minute over here. Man, I got some gnarly downside targets. I got a downside target here today on like extreme bearishness of 437.89. There ain't no fucking way we trade that today. I got 437.89 as an extreme low. That is stupid. 439 437.89 as an extreme low. Something like that. 437. What time is that? 1:30, 2 o'clock, 3 o'clock. Check 3 o'clock. That's somewhere down there. 437.54. God damn. Market doesn't say we're going there. Watch right now. These are the real sellers here. Follow my cursor right here. You see these major sellers. This is the last of the sellers right here. Keep our eye on these sellers, see if they hold or not. That's it, dude. That's all we got. That's the sell the market wall right there. That dude, that hourly trigger is like this shit. That hourly, or not the hourly velocity is like, we ain't going down today. That's what it's saying, at least. Give me more caffeine saying they can hit 438.5 and 455.0 on SPX today. I don't doubt that at all, man. I was like, they'll never hit this, but I'm like, it's on there at least. It's definitely on there. 11:48. 12 more minutes for a new low. The Bears got 12 minutes for a low. It ain't looking good for Bears here. They need a new low in the next 12 minutes. Otherwise, Bulls will be taking over. Bulls trying to set up a bull cross here. See if I can show you this right here. Bulls trying to set this trade up right here, right now. Trade trying to be set up right here. I don't personally take this trade. I normally wait for the squeeze higher and just a C here above that right there. Pull back down, and then I typically will buy that part of the trade right there. So we'll wait and see what happens there. Why do I wait for this? You might be asking, why do I wait for that? And I'm going to show you why right now. Go back one more. Why do I wait for this one right here, for this tag? Because of this trap for
UK PM
bulls right
Sunak says we will bring forward reforms to energy infrastructure.
See that? So right in here, there's a trap in here for bulls. So I got no love for this trade right here. And I got some love for this part of the trade, but it's such a pain in the ass. You're like managing this for like 2-3 minutes. Then it blasts you back down and you're at zero. Not zero, but let's say you bought these at 20. And now you're at like 15 over here, and the real move is right here. We'll watch this unfold. We'll see if this happens. We'll see if this is a trap for bulls in here. And might take a trade with you here in a minute. Keep an eye on it. Want to make sure this isn't a bull trap down in here. Watch this right down here. That's where a nice little trap happens for bulls. Right, you're like, oh yeah, I'm gonna buy this, and then it rolls down on you. Whoop! And once you're back underneath that white line right there, there's your trap, and we're bloodbathing it, and you're in deep shit down here. Keep an eye on it here, see how it unfolds. $440 what? $444s? Fucking dollar, dude, to bet for that? Fuck no. They want me to pay $1 fucking $4. I'm gonna pay $1 to go right here. That shit should be like, I don't know, 30 cents, 60 cents. You can get fucked with that shit. They can get fucked with that. There's a gap underneath HYG that needs filled at 74.45. Yeah, 74.45. HYG has a gap that needs to be filled. On HYG has not been filled yet. HYG is in a bull flag right now, which appears on the surface to be bullish. So Dixie just hit its previous low that we just tagged Dixie at 104.78. Do you want to know the next downside target on it? That was the actual target on Dixie. Next target down below on Dixie is 104.40. Next target below that is, just going to extend this down. Hold on here. Next target below is 103.79. And then 103.02, 103 flat. You need to get that break of 104.43 to get that 103. NDX extremely bullish right here. NASDAQ looking extremely bullish. Disney looking great. Apple recovering to its 27 EMA in a 5-minute chart. Right now, this is the Apple coming into its resistance on a 5-minute chart on the 27 EMA. VIX rolling down, but it's coming into its 27 EMA to find out if it's going to find support at that 1404, 1402. Look at the VIX on a 1-minute chart right now with a 27 EMA on it. You'll see it pulling back. If 1402 breaks to the downside, we should see an explosive move higher. If 1402 holds and starts to rip, we should see a roll and that bull trap. Apple's looking to trade 177.61. If it trades that 177.61 and holds it, next target above is 178.46. Yeah, TwitchCon. Cap's going to TwitchCon for some dude to tell him not to say the C word. See here. That's right, Purple Tom. Yeah, you get your bear music. Yeah, like I want to buy him, but I don't. Like I don't want to pay $1 for the right to play, you know? I don't want to pay the $1. I mean, I want to buy this so fucking bad right now. I'm going to sit on my hands. I'm not going to buy it. I want to buy it so fucking bad, and I'm not. I'm like, now they're not, and then they're like, they were $1.04. Now they're that whole move. It's like this whole move. I think they gave 6 pennies. So they're like, here's your overpriced calls, and there is your 6 cents. Don't spend it all in one place, kid. If there's a dealer out there right now listening into this broadcast, fuck you. Make those calls 60 cents so I can buy them for fucking $2, please. Make them 30 cents so I can buy them for $2. Well, hold on. How do I get back to the chat? And so then go back here. How do I? There we go. Buy ES. You can. You can. You already know. So if you look down here, right? I already showed you the. Here, I'll just draw it out for you. Right here. Is that clear enough? Maybe that is right there. Does that work for you to the downside right there? You see the cross right here? Here, we'll make it right there. We'll make it cleaner. I'll try to make it more exacting right there. Is that more exacting for you? If you're a bull, there you go. If you're a bull, there you go, right there. Couldn't be any more clear as day, right? I don't mind calls. Buy ES rather than calls. Dude, I don't know. I want to say something. That's a good question. Someone asked, should I buy ES rather than calls because calls are overpriced? On a day like today, I would not be trading ES, personally. I would not be trading ES. Have you ever been caught upside down in a trade? today's like one of those days you don't trade, in my view, not financial advice. You know what I like about days like today? Even though calls are overpriced, I can't get completely fucked. So, like, if I buy some puts here or some calls, right where we are right now, I buy some puts or some calls, let's say I spend $1,000, right? Let's say we're trading the micros, right? Let's try to spend $3,000, $5,000 on some micros, right? And we blast down to the depths of hell today. And I buy ES micros, like $3,500. And we blast down today. We get some really bad shit that we didn't know about. They tell you that the economic news is horrible. You get a 25 BPS today. You get a promise of 25 on the next one. Just like all nasty shit, right? Fuck you. Fuck your calls. Fuck your owning ES. On a day like today, the risk is high for you on either side of that trade, buying or selling ES, for you to be getting a phone call. So I like the idea of like trading $500,000 and you're never getting a phone call if that trade goes against you. You have low risk times for that to happen and high risk times. Today's one of those high risk times. And that's why options are more expensive today, right? People trading those, in my view, rather than ES. Now, I know a bunch of you are going to disagree with that. A bunch of you are going to be like, fuck you, Cap, I disagree. Put the risk on. But for me personally, for my trading style on a day like today, if I were talking to you and we were discussing like what you think is going to happen, what you don't think is going to happen, I would not trust you if you were like, yeah, we're definitely going up, or yeah, we're definitely going down, and there's no risk to me. I think days like today are too risky for futures. Yeah, or use heavy stops. I mean, that would be the other thing. Use hard stops. But I wouldn't want to be caught. If we start blasting down, and that's the other thing too. On days like today, we oftentimes get the real move after today or after the expiration. We should have discussed that earlier this morning on expected moves. There's a weekly expected move as well. You want to find out what that is. And then the real move, you'll oftentimes hit the up and down side expected moves on today and the week. And then you get the real move in the market afterwards, up or down. I don't like getting caught in that shit on days like today. I couldn't even believe the nightmare fuel that would be. Have you guys ever gotten fucked? I've gotten fucked. I've gotten bent the fuck over, and when you get bent over, it is, it changes. Like, you don't talk to your family, your friends. You're pacing around. You're chopping trees down outside. You're walking in the rain at nighttime at like 3 o'clock in the morning, wondering what the fuck made you think to do that. I'm gonna tell you guys right now out there, if you have never had that happen to you, you don't want it to happen to you. It's brutal. Even if you crawl out from underneath whatever shit you put yourself into, today is not the day to be making that decision. Today is not the day to be making that decision. Got a little bit of weakness here. We have weakness right here. Don't like seeing that. We'll see if we catch a bounce here. I want to see that nice new high right here. Briefly get above this previous high right here. Watch my cursor down below. So I like to see, love seeing that push above. Brief new high. Pull back, and then that trade higher. I don't like seeing this weakness right here. I'm not a fan of that. Not a fan of that. Don't like seeing it. Let's see what happens here. Got to use stops on like days like today. I mean, if you get a 30 handle move up, if you're short futures and you get a 30-40 handle up and it doesn't come back to see you, what do, right? You're totally fucked here. So let's see if this holds. Watch your positioning, this short positioning. If we break higher, you should see a flip to long. Keep your eyes on this right here as well. We'll see if we get the flip to go long or not. Keep your eyes right on that positioning. I got some calls set up here. Haven't bought them yet. I'm looking at 446C. I'm waiting for that flip to long. Hasn't happened yet. If you're just following us for the first time in some time period, we've got a tool being released. Keep your eyes right on this red. If that flips to green, yeah, I love when I get a phone call from someone. At least I feel like I'm liked. Ring. Ring, Mr. James. Nope, this is Mrs. James. Where's Mr. James at? He's gone. We got to talk to him. Closing only. Can you tell Mr. James that? Closing only, please. What did you do, Mr. James? I turned my email off. I closed my account, turned off my phone, and I moved. Hopefully they don't find me. Yeah, that's a fair point too. Fermi's pair of socks is saying E-Trade called me after hours a couple weeks ago. I got 2 stories on that from recently too. Not quite the exact, but something kind of similar. Fermi's pair of socks saying E-Trade called me after hours a couple of weeks ago. I had a mini heart attack, despite not having any margin outstanding. Just a courtesy call. That's not fucking fun, is it? There's no way that's fun. I had it's a little bit longer than 2 weeks, but maybe a month and a half ago or something like that, I had a bunch of calls open, like a fuck ton of calls. And it was crazy. I think I bought them for like 12 cents. They went to a high of 27 or 30 cents. They went insane. Into the bell. And I fucking didn't close them. They weren't a part of a larger strategy. They weren't a leg of anything else. And I was like, if they're up here at 27, maybe we'll just keep squeezing in the after hours and I'll catch like 50 or something. They rolled down into 4:15 in the afternoon. Like 4:14. They were like 12 or 17 cents or something. I don't remember what they were, but I was up. I was still up. So we closed at 4:15. I never closed the calls. And I got a notice the next day that they'd burned them to 0. I was fucking livid. I had to call my broker. I was so fucking pissed. Because they do that bullshit between 4:15 and 6 p.m. Where you get assigned or your shit goes to 0, you end up owning money. IB doesn't call you, they liquidate. Yeah, I gotta go. I'm going to TwitchCon, man. It's not gonna do it for me. No switch to long positioning yet on SPOOs, so no buying calls for me. Yeah, I got taken for. I was so angry. I called up my broker. I was like, look, I get it if I left if I left like a spread on or something. I'm not stupid to do that, but I've never had calls, just buying calls or puts, where they burn me between 4:15 and 6 p.m. That was a firm lesson for me. You bought calls for Hewlett Packard last week. Let me take a look at HP in the background here. Hold on. Let me take a look at it. What did you buy for calls on Hewlett Packard? What calls did you buy? You need them to print. Oh, I see why. I see why you're saying that. What strike did you buy, and where's your expectation? Let me see what your. Who wrote that? Who wrote that? I've got HP up right now. Who asked about who wrote that? Who wrote that? Oh, HPQ? Hold on a second here. Holy shit, you got calls last week for HP. Why in the fuck were you buying calls on HP? Holy shit. Did you really bought calls? We'll take a look here at HP really quick. HPQ. So hold on one second here. Oh man, dude. You really bought calls? What day did you buy calls? The date. What day, what time? Who did that stupid shit? Hold on a second. Sunday Never Ends. 28.5. When did you buy them? It's okay, Sunday Never Ends. When did you buy them? Like we need more details. Like what day did you buy them? I got your strike. And when do they expire? I need more information. Whatever you're doing this. Oh. Long 446 C's for 42 cents. Long calls right now on SPOOs. Sunday Never Ends. Just give me. You thought screw. Was it on like the 11th? When was it exactly? Was it 10 days ago? Was it? Here, I'll just do it for you. Hold on a second here. We're going to look at HPQ. We got a longtime friend of the show asking about HPQ. Trading 43 cents right now on SPY calls. This is HPQ. If you're watching SPY calls, it's down there. SPY calls down there.
To
comments from SEC Chair Gensler in an interview here. Says SEC oversight would be limited in the event of government shutdown.
Still trading 43 cents on SPY calls. Put that over there so you can see our
This stream
R1.
is sponsored by To The Tick. Get free daily pivot
Watch
points,
for a reversal
Fibonacci,
right
and
over
market
here.
profile levels by
So
signing
watch
up
this
at
whole thing right here.
tothetick.com.
For a slam down and then the slam up. Watch that right there. Watch that trade over there, okay? If it rocks back down to the downside over here, you're going to lose all your money. Boom, 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 boom right there, okay? HP. HPQ. Currently being rejected on its hourly trigger on a 1 minute here. Not looking too good, right? I'm bullish on HPQ above 27.51. I'm bearish on it right now. But we are tracking nicely. This is the hourly. Hourly is a little weak right now on HPQ. Oh, a second here. But as long as you're not breaking that trend. Hold on, let me just switch over to this trigger screen. You're still holding this right now. You're grinding higher. They're telling you no. Grinding higher, telling you no. You broke above the hourly. Now they're trying to send you down. The downside right here. I can see why you have some fear for that, for a rollover on HPQ. That wouldn't be fun, would it? Right? Come back down there, retest that prior low. That would kind of make you angry, right? As long as you're following trend, still bullish, though, on HPQ. Still bullish on HPQ as long as you stay above trend. But this is what I don't like here. This is what I do not like. And I want you to see this. Sunday never ends. You have a cross of daily below weekly. That's bearish. You have price below monthly. That's bearish. It's not crazy bearish, but it's bearish. And the worst part about this setup is if the daily begins to cross the monthly, this one right here begins to cross monthly, and there's a major rejection up here of price. So even if you go higher, if there's a major rejection up here of price to the downside, it's going to be really, really ugly. So this 28.54 is major. Major. $30 major. They're going to try to sell you down up here. They're going to try to, there's where the sellers are if you don't know. And there's some more major sellers up in here. Or not major. These are the young gym bros. These guys don't do leg day. They miss leg day. They're always short the wrong time. But I'll tell you what, man, like if this breaks, like you do not want this trend to break right here. You do not want this trend to break. And I'll be honest with you, I would be getting the fuck out of Dodge. If you get that move up there to $28, I would be getting the F out of Dodge. I'd be really afraid of a roll here and extremely afraid of a roll in here to the downside. So if you want to get bullish again, though, on HPQ, you need to be trading above $30. This scene right here, I got nothing for you here until you're above $30. And I am bearish on HPQ. I am very bearish on HPQ here, so it does not look good for you. And what are they trying to do? Show it to you right here. They're trying to reject it right here. Watch this right here as this happens. And they're going to try to bloodbath you to 23 and likely even lower to $19. So be very careful in here. Extremely careful in here for that downside move. You see it? That's where that bearishness is, right in there. Boom, you get that cross right there. Slamming right down. 22 and change. 22.75 price target. Sell 28.54. HPQ. Dude, HPQ. Woof. HPQ. Leave that right there. See if we can get this test and this cross to the upside. Right here. Waiting for this cross right here. Waiting for this confirmation. That move right there. See if we can catch a squeeze here. Do or die for the Bulls right here. Do or die for the Bulls right here. See if we can catch a cross. We'll watch this really closely here. This whole move right here. Bought this right here. Matt, flat right now. I'm flat right now. So I do not want to see this break right here. Do not want to see this break. I'm long calls. I mean flat, like I'm not making any money right now, so we'll see what happens.
Speaker McCarthy says, I can't guarantee a stopgap bill will pass tomorrow.
This is where I'm clutching my pearls here. Yeah, Sunday never ends, man. If you get that rip higher in a 28, 20, $29 or whatever, take the money and run, man. Like if you get a print, if you get to zero or print, not financial advice, but truly, you're looking for a recovery in HP, and then you jump in on calls, right? You don't want to be. It's not really the place to be buying HP, so. There's a lot of there's a lot of downside momentum coming into that ticker right now, unseen from above. So it's not like you can't break above that downside momentum. It's that you don't want to be there, right? You want to be like you want to get past all the bullshit and then free riding all the way up. Sitting on the 6 EMA right now on SPOOs. We'll see if this holds. Up a penny, flat again. Get the fuck out of the way, seller. Get the fuck out of the way. They're trying to revenge trade this down right now. They're really stinky right now. Give me that fucking cross, man. Oh, big red bar right there. Look at that big red. Look at that big red bar. Who is that? Is that like Bob with the stapler? Look at fucking Bob over here with the fucking big red bar. Bob in the fucking basement here. He's mad. Bob in the basement's like calling upstairs going, tell the boss I need to sell 1 million shares really quick. Fucking stapler basement Bob. Down 2 pennies right now. Yo, we got Bob in the basement, dude. Bob in the basement. Maybe like a Friday and a weekend of like Labor Day. He's like the last guy left in the building. Everyone's trying to wrap it up. Bob's trying to sell the market into the close. Fucking like it'd be like New Year's Eve. Bob's like slamming the fucking sell button down. It's New Year's Eve. It'd be like Hanukkah Eve down in the basement trying to sell it down. Labor Day weekend working a Friday. AMC, I'll look at that one next for you. We'll do AMC. We looked at AMC recently, didn't we? Hold on there. AMC. Let's get a 30-minute here. Ooh, dude, AMC, bro. Still selling down on AMC. Trading $8. You're in the beginnings of bottoming on AMC. Hold on, I got calls on right here. They're going to try to fucking torch me in these calls. AMC is trading above its hourly trigger. Well, its hourly trigger is $8.12. I'm bullish on AMC as long as you stay above $8.12. Hold on, I got to watch this shit. These fucking sellers. I'm only taking a penny right now. Three pennies total. What sucks is I bought calls right here. So I bought calls right fucking here. And I'm down. Down 5 pennies right now in that trade. AMC, bullish right now. We're above $8.12 because we are bottoming on daily velocity. We're a little long in the tooth on Velo on AMC. So AMC price target $9.08, but a roll to check back on $8.12. And then an ultimate target of, or a squeeze target of 13.27. So give me a second here and I'll do AMC for you. I'm still long here, by the way. We're going to look at AMC. Trigger screen. Here's AMC on a 1 minute. We're going to go to a 30-minute. AMC. It is beginning to bottom down here. You see that bottoming action? A little bit more push higher right now. See that push starting on AMC on the hourly velocity. So I'm going to look at it like this here. Squeeze up on 812, reject back down, and then the big squeeze to the upside. So AMC, price target $13. Well, I got $13.27, but I would do 13. Trade is dead. Below 812 or uptrend break. Of HT. Right there. Okay. Bullish here. See it right there? Bullish right now on, oh yeah, baby, printing 446 right now. They're now giving me 3 pennies on SPOOs. 3 pennies on SPOOs. So right in here. Okay. Good job on pointing out AMC. You guys know my thoughts on AMC, hopefully. Fair value, $3. Trading range, $3 to $30 at most for AMC. So it's in its zone. It's in its trading range. You know, but like you woke up one morning and saw $3 on top of the key right now on SPOOs. So you can see that. So you can see that right there, that action on SPOOs trying to push higher. Price target to the upside, 444.29. Positioning standpoint, we are long right now. See that long positioning right there? Still trading 45 cents. Daily trigger 444.29. Here's your R1. Here's your R2 targets right there and there. Follow down below. AMC, we talked about it 2 weeks ago, and I was pretty bearish on it. AMC, I'm like, see, the AMC CEO, man, is a fucking scumbag. The guy owns it at like $1.30 or something, or $3. I think it's $1.30. He had a big office interview. Loans his shares out to short. So, like, do we see that? Do we see that? $1 to $3? That's the shit that always bothers me in the background on AMC. Yeah, you know what? Sunday never ends. If you're out there still listening, even if you break above the $30 mark, right? I want you to know something. Even if you go to 30, it's too high risk to still be in that trade between that 28 and change and 30. It's super high risk. It's super volatile. There's no reason to be panicking or so fearful when you get there too. So my point being is that you want that shit to your back, not running into that shit, right? Like head on into that shit. So even if we go to 35 or 40, that part of that trade and that 28 and change, you don't want to be in that. You don't want to be long there. You're like, whenever you come into like where algos are, where momentum is like momentum is there, algos are there, and you're just like a retailer, right? You're just some poor schlub retailer, and you're trying to fuck around with the big sharks. It's not cool. It's always better to be with them in momentum than against them in momentum. And their momentum is coming down on that $30 right now. So do you want to be like the only retailer coming into that momentum? No. You want to be breaking through that momentum, jump on as a retailer with the upside momentum, and not be trading against that grain as we get up there, brother. What up? I'm Matthew Ryan. What up? Don't be calling me the GOAT. I'm Matt Ryan. You're GOAT too, dog. How you doing, brother? Good to see you, Matt Ryan. Positioning is long right now. Long. Yeah, clutching my pearls. I'm gonna do one more poll. We got a lot of people here, so I'm gonna do one more poll. We're gonna talk about polls really quick. We've run 3 polls, I think, at this point. We're gonna look at the results of those polls. I'm gonna ask you one last poll on the day here. We're getting close. 12:34 in the afternoon. We asked a poll yesterday. We asked, will there be a rate hike? I'm going to go through the highest to lowest votes. So, will there be a rate hike? I got most responders said we're getting 25 BPS. Next highest, not by a margin either, pretty close, was Skip with firm. We're not pausing. We're going to raise rates again one time before the end of the year. Number 3 was an actual pause being telegraphed to the market participants. And then number 4 was a 50 BPS. That was only 2 voters said that. Into end of quarter, we asked, will we go to 450? Will we go to 466.5? Will we pin into the close of the quarter, or will we go down to the lower pin at 42.10? Number 1 respondent said 4,500 is the target for end of quarter. That's end of month. Number 2 was 4,300. If you're an Elliott waiver with a bear thesis and a bear count, that's 4,300 is that target. That came in number 3. Not by a big margin either. There's a lot of people saying those 3 targets were the main outcomes. And then we had a low number of respondents say 42.10, the lower JPM collar target for end of quarter. This morning we asked, let me see if I can look at this. This morning we asked, if the market believes this is the end of the rate hike cycle, does the market squeeze and roll over? Remember to say that question again. If the market believes this is the end of the rate hike cycle, does the market squeeze and roll over? Rolls over. This is the bottom. Most respondents said squeeze and then roll over. So we're going to close that down right there. We're going to dump all these polls, and we're going to ask you guys one more question for the day today, heading into ask you one more question today heading into the Fed's rate decision. That question is, which way do we go? And I trust our members. Our members, I want you to be honest here. I don't care if you're a bull, bear, buyer, seller. I don't care if you're data gang. I don't care what you are. I don't care if you're a collapse bear. I don't care if you're a moon bull. I don't care if you're Tesla Q, Tesla gang. I don't care. I want you to give an honest answer here. Which way do we go, okay? I'm going to give you a couple different options here. Week on report. Presser, but up will be the first one. Second one would be start squeezing early. Add. Start squeezing early down into press report. Next option will be. I was a week on. What did I say? Hold on a second here. Weak on the reports and presser, but ultimately start squeezing early. I think I may have done this wrong. Hold on here. Start squeezing up early, down into report presser. Hold on, I got to reword this. Give me a second to think about this right now. How about just up or down? Which way do we go by end of day? I'm trying to come up with the answers here, and end of day. Just make it really simple. Up, 1. Down, 2. And flat. 3. Okay, so done. Start the poll. Okay, so here's your poll. Here's your poll right here. And how you vote on a poll is in the chat box of YouTube or Twitch. You want to type in exclamation point VOTE, one word, exclamation point VOTE, space bar, and then 1, 2, or 3. And you can vote 1 is up, 2 is down, 3 is flat. So if you think we end the day up, you type in I vote spacebar 1. If you think we end down, you type in exclamation point vote spacebar 2. I said I, but I mean exclamation point. I'm looking at and then if you think flat, we end the day flat, it's exclamation point vote spacebar 3. Is that clear enough for you out there? Got 22 votes right now. Let's see if we can get some more votes. I'll leave this poll up for you for the next 15 minutes. I'm going to find out what you think. Let's find out if you're accurate as a group. We take a lot of polls around here, and some of the polls that we take, like we take some cool-ass polls. We take polls for the demographics of our audience, the socioeconomic backgrounds of our members, how long you've been trading. We ask those questions. We ask really cool questions of people around here. And I got to say, generally speaking, like 70% of the time to about 80% of the time, you actually get it right. I'm very impressed with that. If I was to ask these poll questions on Twitter or StockTwits or somewhere else, you get all like the trolls out there, up or down. Trolls for up and trolls for down, right? You get the Tesla gang answering yes, up, 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 up. You get the Tesla Q going down, 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 down. Our members here do a really good job of giving an honest opinion. So I got to give you guys a lot of respect out there for how you answer these questions. So make your vote known. This will be the last poll of the day. Put that over there. Make that a little bit bigger so you can see the results. If you want to see the results, they're in the bottom right-hand, the current results, bottom right-hand side of your screen over there. And we'll see what they say. By the way, thank you for joining us. Trading 46 right now on 446 Cs. I want to thank you for joining us today. We got some stuff for you. If you're new to joining us right now, I'm going to post a link to our Discord. We have educational content inside the Discord. We've got trading rooms for futures and Globex. We've got Globex and futures traders that trade round the clock. We've got some long-time market participants that educate and mentor traders inside of our Discord. It is currently free to join our Discord. Always been free. If you're looking to join our Discord, I just slapped a link from Streamlabs. It's from Streamlabs, but you'll see a Discord invitation link in the chat of YouTube. And then I'm going to give another one inside of Twitch. So there's a link, an invitation to the Discord inside of your chat. Another cool thing I'm going to give to you is someone that I look up to that I really appreciate. His name is Jedi Marcus. He is a previous floor trader. And these guys, all these old school floor traders, these are the last precious market participants still in the market today. These people will be gone one day. So I urge you to follow people like Jimmy Jude, follow that guy, follow Jedi Marcus, and I'm gonna post a link to a white paper done on what's called the BGL. And this is a back-tested trading strategy from Jedi Marcus. He's on Twitter. You can find him on Twitter. You can ask him about that on Twitter. Follow him. He's worth every follow that you can give him. I'm going to leave a link now to, I did a link for you on Twitch, by the way. I gave you a link to the Discord. It's free. I'm also going to give you a link to a white paper done on Jedi Marcus, so make sure you're following him. If you follow Jedi Marcus, he's got a group of traders that he trades with. You got Vol Wiz follows him. There's a few other kick-ass traders that follow him. There's a small group. It's like 10 of those guys are longtime professionals, longtime pit traders. So make sure you're tracking those guys down. I want you to follow Matthew Ryan, too. Follow who else? Bob Kendall, another good guy to follow. Follow Figuring Out Money. You can find him on Twitter as well. What else I got going on out here for you? Next one right here. What else do I got for you guys? We've got a tool dropping for you. It's been bouncing around. People have used it briefly. We're beta testing it right now and having devs continue to work on it in the background. So if you're looking for that tool and the website to launch, it's launching very soon. Like we're on the cusp of it. You can see me using it here in stream. In the past week or so, I've been using it in stream. It's giving you fair warning if we're going up or going down, which way to take the trade, how far to expect the downside and upside moves, if we're long and short in real time. All right. HYG continues to squeeze higher. Price not following on SPY right now. It's trying to. HYG just squeezing higher. We also have VIX-piration today. VIX trading 1391. Dixie bloodbathing it right now still. Trying now to tag 104.43 and ultimately a price target to the downside on Dixie of 103.85. I'm going to give you some fair warning here as well. Be really careful of a reversal at any point heading into that 1:30 hour. The old bull trap, right? Squeeze it up, blast it straight down, and there you go, back to zero again, having a reposition. Pay particularly close attention to any kind of squeeze being sold on that daily trigger up here. If we do squeeze here, You don't want to be doing that shit into 1:30 in the afternoon. Now you're locked in, tied in. I'm going to check back now and see how many of you have voted. We've got 55 votes right here. No reason you cannot vote. We got a couple thousand viewers right now. We only have 50 votes. If you can do this voting without being paid for the chat. We've opened up the chats on both Twitch and YouTube today so that you can participate. Bull or bear, buyer, seller, don't care who you are. If you want to vote on that, you're more than welcome to. I'm going to close this poll down in the next 5 minutes. So it's been up for 9 minutes, 36 seconds. I'm going to close it at the 15-minute mark, and we'll look at those results and see what they mean. So right now we've got currently, for the day ending, we resolve to the upside at the end of the day. We've got 31 votes saying yes, we close the day up. We have 14 votes to the downside. And then we've got 16 votes as flat on the day. I'm going to assume that those people that are voting for flat saw the vol crush yesterday and are witnessing the vol crush this morning. And yet price has not followed on SPOOs, showing that SPOOs specifically is being hedged. We saw Apple go to the moon yesterday. Not moon, but pretty good yesterday, right? Blasted off. SPOOs did not follow in price. So major hedges on the market. If those hedges come off, do we get a muted response on SPOOs? Now have 72 votes. So if you are tuning in right now, you can join us in the chat. Just be nice to people, just like you're visiting someone for the first time. Introduce yourself, say what's going on, everybody. If you're in a trade, ask around. People try to help you out. Here's another free thing for you. You can always follow at Captain's Alpha. It's a private handle on Twitter where I give you levels every morning. That's actually going to turn into a tool where you just punch in your favorite ticker and you get your levels every day. So you can always follow that. In the morning, I go back every morning and check and see who's requested to follow. I let new follows in. You get that every single morning. Three minutes left to answer the poll. Doo-doo-doo. Do-do-do-do-do. Look at that 30-minute chart on SPOOs. Let me show you guys the 30-minute chart right now. The 30-minute chart is bullish as fuck, but dude, it's like such a bull trap at the same time. It's such like a secret squirrel bull trap in the 30-minute. It's like you squeeze up to that daily and they roll you down. Let me show you this let me see if I can show you guys this really quick. So I want to show you guys what I'm afraid of. Let me show you guys what I'm afraid of here. So I can show you guys this real quick. Turn that down. So just bear with. See this daily trigger right here? Watch my cursor right there. So what you end up doing is you get, like, we're in this nice big fat bull flag right here. We squeeze up, and then they send you down into the reports, and then you get your actual rip up there. Does that make sense? So whoop, right up there, down here. So just keep an eye on that. Keep an eye on that 444 and change up here. I'm going to show it to you right now. That's your, if you're a bull, this is now a 1 minute chart. So if you're a bull, you're basically like squeezing, whoop, and then you're told to hold for the press release, and then the move is actually higher. So just be careful of that right there, and then that quick drop down, that quick bull trap, waiting for the event. Just be aware of it. It's right up here. Big question mark. Is that a bull trap for a roll to hold? We get up there, and then you end up coming down here, and then you get your actual move to the upside. A little bit of a tweezer reversal right now in 1 minute on SPOOs. I am still long, trading 44 right now. Up 2 pennies. Up 2 pennies right now. Still long. Thanks, Al, for saying hit that like button. I would appreciate it if you do. You hit that like button. Hit that like button, subscribe, whatever you can do. If you go on FinTwit to my profile, CaptainJimJames, if you retweet the live stream from my post this morning and follow me, I'll follow you back right now. I'll spend some time following you back. So if you go out there and retweet that and follow me, I will follow you. I don't mind following you if you got 1 follower. I don't care. I really do appreciate new people on FinTwit or people without any followers and whatever their thoughts are, especially if you post on FinTwit. I will follow you. I don't care how many followers you got. I don't care you got 1 follower, 10 followers, 100 followers. And then we're going to really quickly discuss, we got to go through and make sure. Following everybody here. Following him, following her. Oh, follow. This is VARC mode, following you. What else am I following? Who else am I following here? Anybody new? Gregory Pacal, following you now. Zalt, XALT, following you now, brother. I got you, man. Senior Y Ricky, following you. Lore Vaughn, following you now. Who else am I following? I don't know why I'm following that person. Well, hold on here. Beatrice Fulton, following you now. Gotta watch this shit. Who else am I going to follow here? Oh, yeah, baby. Jem Carson and I are following each other. We're not blocking each other anymore. Right on, right on. Bob, my man Bob Elliott, following him. He's following me. I like that guy, too. Like them all. Zio Parco, following you. Just started following you, brother. Who else am I trying to follow here? Oh, Ace Canseco. Nice Ace Canseco. Nice picture. Nice nice picture, brother. I like that. I like the bear. It's a good bear. What else I got here? I think I've got everybody so far. Okay, cool. I got everybody. Man, Jem. Dixie bloodbathing right now, trading 104.67. HYG ripping faces off right now. VIX in full collapse. It is VIXpiration day. Can we get lower lows on VIXpiration? VIX starting to bottom right here. Has more downside possible. We got 1377, 1374, 1359, 1340, 1326, 1303, 1285, 1273. Vol curve saying that we're heading into a low volatility future, by the way. I don't know if you guys are watching the vol curve in the background. Volatility is saying that don't expect the crash. Now, of course, people take that to mean expect a crash. Apple starting to break above its 27 EMA in a 5-minute chart, trying to target 178.29. Disney coming back to test right now. It's 82.71, looking for higher highs. NDX has a bull cross back at 12:14 in the afternoon, trading and squeezing above its 27 EMA in a 1-minute chart right now. Trading 46 cents right now on my calls. I don't, if you look down below here, man, you know what I hate? I hate that, like, look, if you look down below, like, I can't stand when this happens, that roll. Now you're locked in. You can't get out, right? I've got I just put a stop on my calls because I'm like, hold on a second. I just put a stop on my calls because I'm paranoid that they're going to roll us and make me get fucking locked into some calls. So I got to stop now on my calls just in case. Trying to lock me in. Like they try to lock me into that 1:30 hour, like that 2 o'clock hour. They're like, sorry, sucker. Okay, so let's look at the poll. We're gonna close the poll here. We've got 86 votes. I'm going to close it here in just a minute. We've got 86 votes on the poll right now. We've got 40 extremely bullish audience today. I want you to see these sellers right here on Bookmap here. You see that wall right there trying to stop us from going up? Make sure you have some stops in case you get rolled to the downside. Be extremely careful here. 86, or now we have 87 votes. We've got 40 votes that we resolved to the upside at end of day. We've got 23 votes that we resolved to the downside. And then we've got 24 votes that were flat on the close. So 24 on flat, 23 on down, and 40 votes we resolved to the upside by end of day. I'm going to close that poll down now. I appreciate you taking the time. I appreciate you taking the time to answer that poll with your own insight. So general consensus is resolved to the upside end of day. All that noise, right? So I bought my calls right here. No, right here. I bought them right here. I bought them right here, right? We went down there, we went up here, we went down there, we went up here, and right now, guess what? I'm flat. I am flat right now. No joy. No joy. I fucking hate trading this shit. I do. It's like no point. It's all your risk. The risk is all on you. And you got to pay a premium for that risk. They caught on to us. You know who caught on to us too? It was the CMO. It was the NYSE. They caught on. They actually released a report saying they were aware that traders were trading zero dates.
So for anybody interested, you can trade the FOMC interest rate decision with us live. A video starting at 1:15 p.m. Eastern time. So that's just under 10 minutes time now. Our very own Tony is going to be going over the fundamental environment surrounding this latest FOMC meeting. The live video to do this is available on the feed for anybody interested, completely free of charge.
Closing, I tell you before every single time. Unless sometimes I forget, but you're talking like I'm long, I'm short. I tell you every single time when I sell. Every single time. Every single time. No, you still haven't closed. You still haven't done it to me yet. Still haven't closed me out yet. Still haven't hit my fucking stops. Still have not hit my stops. So sorry. You're trying. I know.
And again, just as an early heads up, then so at the top of the hour, that's 2 p.m. Eastern time, to get the release of that US interest rate decision alongside the latest FOMC summary of economic projections, including the release of the latest dot plot and the FOMC rate statements as well. So if you'd like to see what investment banks are saying ahead of this release, we've posted a prep article.
No. I told you I was down a penny flat, down a penny flat. I even specifically said, I'm long calls. How about this right here? You ready? I want you to watch this right here. You watch that right there. See that? See this? Watch that right there. Watch that arrow right there. This one right here. I am long if that is green, okay? I am long if that is green. Well, no, I should rephrase. You're right. Who said that? Big balls. I agree with big balls. If that is red and I'm still long, I'll tell you that I am. Sometimes I'll stay long. If they torch my calls, I'll stay long. Like so. I'm not gonna do it right now, but if they give me the opportunity to get out, I'll get out. I'll tell you, like, hey, I'm short, or let's say I'm long calls. They cost me 20 cents, right, or 50 cents. If they blast down to like 20 cents and I don't get a chance to get out above, if they don't give me the chance on a squeeze to the upside, let's say they go from 50 to 20 and they don't give me a chance to reposition it like 46 or 48 cents and they just blast me down to like 20, I'll just stay in them at that point because they've taken them from me. I've got maybe I'll DCA them later on, but I think it depends on the situation. But generally speaking, if I'm giving an opportunity to get out, I will. It depends on what they've taken. Like if they're gonna take me for like 30 fucking cents, that much, and I don't get a chance to lose just 2 or 3 pennies, maybe 5 pennies to reposition, I will stay in them. You're not taking my 30 fucking cents, and then like that's a revenge trade for me. I'm sorry, that's my own fucking personal, my own personal My own personal fuck you to the not you to but to the dealers. Good questions though. All good questions. All good points. All good questions. Yeah, I'm not your trader. I'm not your guy. I'm not your furu out there telling you after. I'm like you know what I like? I like froggy trades. That guy's always telling you when he's long, he's short, he's in, he's out. Tells you before, never after. A lot of those, like, you got people out there fucking paper trading both sides, and then posting afterwards like a screenshot saying, "I made fucking 5,000%." So you'll never see that from me. It's always before, never after. I even stand streams sometimes to like 4:15, just because I'm like, oh, am I gonna hold these? I'm gonna open all that kind of stupid shit. Oh, yeah, baby. Oh, there's your Tesla, top of the key, huh? You got that top of the key trade on Tesla. You want to see it? Let's see if we can see if we can go to Tesla. Oh, yeah. Here's Tesla 30-minute chart. Tesla squeezing up to the top of the key. Trying to breach above. Have that hourly trigger come up. Next target, 279 for Tesla. You can see that right there. This is Tesla, by the way, the Tesla chart looking to squeeze and consolidate for the move. Guess your next target is 275. I do notice that the hourly trigger is not coming up to help right now. There's your next target right there, 279. Nope, still haven't squeezed me out. Still haven't stopped me out on SPY right now. Not yet. Spoos right now. 30-minute. 1 minute. Nope. You need more than that. You need more red bar than that. More red bar than that. You got to make it rain here. Trying to sell the top of the key right here. We had the bottom of the key on SPY. Trying to sell it down on you here into the event. Yep, there I go. You got me on that one. You stopped me out at 38. Stopped me on 38 cents on that one. You caught me there. Caught me on 38 cents. I am out and flat right now. I am out of calls. Right there, that bar right there took me out right there. That bar took me out. No love, no squeeze to the upside. See where that is on the thing right there. Push that higher. No joy, no money. Yeah, they probably were, right, Blissowitz? I try not to tell them where my stops are anymore because I'm afraid they're listening. I'm serious. Like, it would not shock me if they, like, if I was in a hedge fund, I would have up every live stream that trades S&P, and I would have some kind of a model listening in for keywords, like long, short, stops, any of that kind of shit. I'd be tracking all these motherfuckers. You used to be able to do it on Twitter. Not anymore. You got to pay big bucks to do it on Twitter nowadays. Like Twitter, if you guys remember what Twitter Fall or Twitter Wall was, Twitter used to be the shit back in the day. I used to show Twitter Wall and Twitter Fall on stream years ago. People were like, "What is that shit?" And I'm like, "It actually tells you real-time sentiment in the stock market or your favorite ticker. Doesn't matter. Real-time sentiment." Let's go back to that. I'm going to ask a question, you guys. So Twitter, and tell me in the chat, Twitter and Twitter X or whatever the fuck you want to call it. So I have tons of mixed feelings on Twitter. Well, let me show you guys this right here. Roll coming up right now on Spoos. I bought this down here. Tried to give me 3 cents, I think, 3 cents. And that was like, no, 4 cents. Gave me 4 cents for that move. I was like, fuck you, you got to stop me out. They stopped me right here. Rolling back down right now to check the hourly trigger. Any normal day, that would have probably printed me 20 to 30% minimum. Didn't even get that. So let me ask you that question about Twitter and X in the chat. So I have like tons of mixed feelings on Twitter. It's like, on the one hand this, and the one hand that. Then on some shit, I'm like, I can't stand what they're doing. Other things, I'm like, yeah, that could work. That's possible. The latest thing, and it's weird because I have a hard time finding a good read on this. Like when I go to Reddit, it's the same garbage every day. A prime example of that was the new thesis of everyone's gonna have to pay to be there. They just paid me. They paid me. Matter of fact, they're paying everybody. Anyone that's got like a blue check mark, maybe 20,000 or more followers, maybe even 10,000. I don't know. They just sent me a payment. I think 3 weeks ago or 4 weeks ago or something, maybe longer. They sent me a payment for the Twitter content. That payment has now paid for Twitter Blue for me the next 10 years. So Twitter Blue for me is free for the next 10 years. And they're trying to make you pay, I don't know, $1, $2, $3, $4, something to be on there. I don't like the have to pay model for Twitter for anybody. Especially because of the real true breaking news that you want. At least with a free version, if you're like somebody that's stuck inside of, I don't know, some shithole country, and you're evading the ban of using Twitter, you can at least get your information out there. Can you imagine being like a dissident, and you have to be like, oh, I got to go down to my local pharmacia and grab a disposable card for $5 to warn everybody in the world about something going on immediately. I think that was one of the most special parts about Twitter. Like one of the most special parts about Twitter is the real true breakingness of the news that comes out of Twitter. Let me know what your thoughts are on this new proposal that's being floated in the chat if you could. Oh, they don't tell you that either. I'm going to be honest with you. If you have accounts that you're friends with out there, and they have a blue check mark and they've got some followers behind them, they're getting paid. even if they're not telling you. They're getting a payment. I'll be honest. I don't mind being honest here. And motherfuckers out there lying. Well, some people are lying, and then some people are like, oh, I got to get engagement, so I'm going to post a bunch of bullshit to get engagement. There's like two groups of people out there. Yeah, let me know. I want to know if you're going to pay or not. I guess what I'm really asking here is, if they switch to a pay model, will you be paying to be on Twitter? Let me ask you that question in the chat. Yeah, I saw the advertising down 90%. I saw that. I did see that. I saw that. Mm-hmm. You think social media is going to be the downfall of civilization? Yeah, they're paying. Everybody's getting paid. If you have high follower accounts, you're getting a paycheck. I assure you. I know you are. They already offered it to me. Never got the check mark, but at some point during the transition, my post engagement basically went to 0. It's never been high, but definitely felt like it was put there in the timeout box. You're not going to pay for Twitter. I wonder. I've spent less time on Twitter. I've had like mixed feelings on. I have like an internal monologue. I have an internal monologue that makes me feel like a hooker on Twitter. And I never wanted to mix that up. And I never wanted to become a part of the Twitter ecosystem to make money either. Kind of like Twitter, like what it was for me, I enjoyed it for what it was. TikTok is worse, right? Is TikTok worse? I'm told TikTok is worse. Facebook is worse. People don't get together like they used to. Younger people would rather type it out than physically interact with others. Yeah, there's some truth to that, right? There's some truth to that. Still in an uptrend right now. Positioning is still long. I was stopped out. They hit my stops, baby. So I did get stopped out, but the positioning is still long here. The bot is telling me that I should not have had stops, and we're going to go up. Algo McAlgo face is telling me I should have stayed long, and I got stopped out, so I didn't listen to Algo McAlgo face. Let me see what you guys are writing. I would love to be part of the group that only buys Twitter. Oh, let me read some of you guys are saying on YouTube. Tesla, baby. Hell yeah. Look at Tesla. Twitter is less news biased than MSN, in my opinion. Yeah, look, I'm not shitting on Twitter. I like what Twitter was. I don't know where it's going right now, if it's going down or if it's going up. Nothing in this world is free. We all know that. I know that. You know that. It's free to me. He literally paid my next 10 years. On the backs of who, I guess would be the question. Twitter down 90%. I read that. Twitter was a captive organization. Hopefully payments will unlock it. I would love to be a part of the group that inevitably buys Twitter from Musk. Oh, shit. I think it survives. I just don't know that it's going to be what it once was. That's a good point, though. Let's talk Powell with no balls. Humans will be. We did that all morning. We talked Powell. Humans will be the downfall. The only thing I use Twitter for anymore is getting daily levels from your private page. Right on. Thank you, Blitzwitz. I think it's worse like I like Facebook Marketplace though. I like Facebook Marketplace. And I've got a couple private groups I'm on Facebook, but other than that, I don't use it. Instagram is worse. I have a handle there, but I don't do anything there. I know that that's popular though, but I don't do anything there on Instagram. All you see is mama's breastfeeding babies. That's disgusting. I'm not disgusting breastfeeding, but I guess I don't have that kink. May X reign supreme. And then we've got X. I'm flat till the presser. Tesla 290 when. I just don't want to pay to not get likes, follows, and retweets. You know, that grinds my ass too, Gary. That's the one thing that bothers. Well, not bothers me. So Gary brings up a good point. So there's a group of Fin Twitters. So when they started the blue check mark, you guys remember when they started, they said, you're a sellout, you're a sellout, you're a sellout. If you get the blue check mark. Then you were like, no, it's all early adopters. No, they're sucking dick, all that kind of stuff. I noticed what Gary is saying. I didn't sign up for blue. And I noticed a huge fuck you from Twitter. Like, go fuck yourself. No engagement. No this, no that. Nobody seeing shit. So I did pay for blue eventually. I was like, well, I guess I'm being gently told you got to pay for blue. So I bought blue. My experience has improved. All those people that said I'll never get blue, you know what all of them said? They all said the moment they forced me to pay, I'm out. They were like, I'm out of Twitter at that point. I'll be gone. Never paying for Twitter. I'm seeing some relenting to that. Like, well, I'll pay, I guess, if they force me. Kind of feelings. I wonder if you too will do that. Will you capitulate and pay? Bob's chuckling down in his basement. People have less social skills than they used to. Agree with that. What is this? Streamlabs? Did Streamlabs just fuck around on YouTube? Hold on a second here. Streamlabs is now member only. Dude, is Streamlabs going military style in here? What's going on? Is Streamlabs fucking around? I think they are. Yeah, it's subscribers. Okay, cool. It's subscribers. It means anybody can chat. As cracked as Twitter is now, it has all the people and things I'm interested in one place. Would suck to have to track them individually. I agree with that statement, Fisted. Fisted, will you be, if you're, I guess the question, maybe make it more direct. If you do not pay for Twitter Blue, are you willing to do a $2 charge? Let's call it $5. Are you willing to pay $5 if you're forced into it? Three minutes from half an hour before the press release. I will have the press release for you. I'll read it to you and try to interpret it. The presser is at 2:30. We have one half an hour left. Give me 2 minutes. I'm going to go potty really quick. And I will be right back with you so that we're ready for that 2 p.m. release. I will also have the presser live for you as well. With audio and video. I'm going to turn on briefly Bloomberg Radio while I'm away. Just a couple minutes here. I'll be back and forth.
Bridgebank helps breakthrough ideas actually break through and remains dedicated to providing financial solutions to those committed to leveraging innovation to make the world a better place. Bridgebank, a division of Western Alliance Bank. Bridgebank. Be bold. Venture wisely.
1 minute remaining before we expect the Bank of Canada's meeting minutes.
It should look like it. And looking like it is not a weekend at Bernie's where everyone's wearing shades and shorts. And I certainly think that Susan Collins made the right point, although just the concept is just so bothersome to me that you should wake up, Chuck Schumer, and rescind and go back to a policy that really, I think, maintains the level of the Senate in a way it should be.
The response from John Fetterman, Jeannie, talking to The Hill newspaper, quote, America, it's about freedom and choice. It's like a Burger King, you rule kind of thing, unquote. Is this working for you, or does this go right back when Republicans potentially take control of the Senate someday, or both all right with you?
The Burger King thing, that goes over my head
Bank of Canada
completely.
minutes here. The governing council did not want to raise expectations of a near-term reduction in rates at the September 6th announcement. So the governing council noted that many measures of core inflation were proving to be sticky. Little progress seen since July's rate announcement. The governing council weighed whether high core inflation could persist even as evidence accumulated that restrictive monetary policy was slowing demand. Bank of Canada minutes adds that the governing council agreed that a lack of progress in underlying inflation remained a significant concern. Governing council agreed that given uncertain path forward for core inflation, price policy should remain a potential option. Only debated keeping rates steady or lifting them, so no discussion of cuts, according to the Bank of Canada minutes. Governing council noted the impact of base year effects that will decrease and large declining commodity prices will drop out of the inflation calculation. So the governing council agreed that the balance between economic supply and demand would become more important in determining the future core and total inflation. Governing council agreed that higher prices for oil and gasoline would drive inflation higher over the next few months. So the council was worried that shares of items in the CPI basket rising at an annualized pace greater than both 3% and 5% were still too high.
We could look back at this meeting as the turning point, Jeannie, that this was, in fact, the end. It became clear the end of the hikes, at least for now. That could be spun as pretty good news a few months down the road if you're this White House.
Yeah, that's right. I mean, they're going to make the case it's moving in the right direction. If the Fed holds, as everybody expects that they will, it'll be spun as good news. And, I think the White House just has to be careful about making predictions going forward, because that's where they've gotten in trouble in the past. Take the good news as it comes and don't over-predict in the other direction, because you may have to eat that on the back end. That's the problem they've had.
Yeah. Fascinating. Something to think about as we prepare to hear from the Fed chair. Jeannie, thank you. And Rick, as always, Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, the best in the business, and our signature panel here on the fastest show in politics. We'll leave you in the good hands, of course, Tom Keene and John Farrow, as they bring us special coverage now, listening not only to our own analysis, but the news conference that's going to follow. Always a fascinating thing that we want to hear right here, and always count on Bloomberg. Let's get to it now. The Fed decides. I'm Joe Matthew in Washington. This is Bloomberg.
Get a free trial at tickstrike.com.
The Fed decides starts right now.
This is a special edition of Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Bloomberg Surveillance. The Fed decides.
Live on TV and radio for our audience worldwide. Good afternoon.
I've posted out the full Bank of Canada meeting minutes on the feed for anybody that's interested.
We'll listen to this real quick.
Right now, surveillance after hours, TK.
Yeah, we're going to see if we get some clarity from Jerome Powell. He's dealing with the fog of the American economy. A lot of cross currents here. I'm really interested to hear what Kathy Jones says about what yields tell us right now.
Looking forward to that conversation, TK, and so much more. As you know, Tom, it's a three-part act. Decision at about 28 minutes. Bunch of forecasts as well. Then on to the news conference about an hour away.
Well, the news conference is going to be different, and again, we're going to go to November. And what I saw from our guest this morning on surveillance was a real tendency to look to December. How does he frame in that press conference the forward view? The people in the room are less concerned with September and the dots, okay, but I'll give you that, John. I don't care about the dots. But the answer is they're going to go to November and they're going to go to December.
Andrew Holdenhorst, Citi, looking for that hike in November. Holdenhorst joining us a little bit later. This is how the stage is set. The price action looks a little something like this on the S&P 500. Equities are higher by 0.2% on the S&P. Yields are backing away from cycle highs. We're down about 4 basis points today to 431.67. I've gone through the three-part act, the decision, the forecast, the news conference. This is the two-part act of this show. Going into that decision, coming up, Morgan Stanley's Jim Keren, Deutsche Bank's Matt Lazzetti, Kathy Jones of Charles Schwab out the other side after 2 p.m. when that decision drops. Here's the lineup for you. Citi's Andrew Holdenhorst, Diane Swank of KPMG, Jim Bianco of Bianco Research, TK, Greg Peters of PGIM.
It's going to be interesting to see. Jim Bianco's maybe the most holistic there, pulling in the markets with the economy as well. And I go back to the Arch Bianco call, now hugely prescient about the longer, and that inflation comes down to where we are and goes flat or even with a little bit of an uptick. At the time, that was controversial.
And the ultimate contrarian call that maybe yields just have to go higher from here.
Well,
hearing that from Jim, we'll ask that question to Greg Peters of PGIM. Is this a
the
buy in this bond market,
with yields going
with
up.
the 10-year where it is, where the 2-year where it is currently as well?
It could break either way. And, you know, again, I think Powell will give us some direction. You know, he's going to be cautious. He's going to say, you know, this is what we see now. But, again, I'm going to go to the gaming out of this into November, December. And, John, quickly here, that's going to come off those dot plots. That middle range here from the announcement to the press conference, the analysis by Mike McKee of those dots is key.
The median dot for 23, for 24, the growth projections, we're expecting them to mark to market. Essentially, growth has been better.
Yeah.
Their forecast might have to come up. Inflation may be a little bit softer, but I'm with you. Where do they see rates beyond November into next year?
Not expert at the dots, but certainly expert at the bond outcome. Joining us now to get us started on the special show from London is Jim Keren, to say he's Portfolio Solutions Group CIO at Morgan Stanley. Investment management's important. What you have to understand is after the physics of Bowdoin, the physics of Caltech, he knows the physics of Jerome Powell. I'm baffled, Jim. Is this meeting about today, or are you looking already to November and December?
Thanks, Tom. Look, I don't think this meeting is about today.
Nope.
As you put it, this meeting is about November and December and what he messages.
I agree with that.
If we break it down this way, very, very simply, 2023 is about the Fed cycle coming to an end and them getting the job done to do enough to get inflation down towards target and keep it anchored there. 2024 is about holding rates higher for longer or potentially even cutting if economic conditions seem that it's likely that they need to do so. So the market will have no patience for rate hikes, further rate hikes in 2024, because if that's happening, then that means the Fed has missed something, inflation is accelerating, and that they're going to have to do something more drastic to bring inflation down. So I think if we look at this more broadly, we need to see in 2023 the Fed get the job done. So look, as far as the way that I see this meeting's all about positioning their potential policy act for November or even December.
I look at this, and the overlay to me is the good work of your Ellen Zentner, award-winning economics, and she's marked down GDP off revisions and some actual present numbers, and she's come down a fair amount, 0.5 percentage point of real GDP or even more. Are we on the edge of a stagflation here, where we pull in from an Atlanta GDP guess of 6%, where all of a sudden GDP slows down and changes the Fed decision?
So I think that, third quarter GDP is likely to be still, relatively strong and robust. In the fourth quarter, there's likely to be some give back. But I think Ellen's onto something here, though. I think the markets are going to start to read through this, and they're going to say, like, look, third quarter GDP, some good technicals, things are strong, but this might be the last big thrash in the economy before it really starts to slow down. Now, if we think about this from the Fed's perspective, this is what rate hikes are supposed to do. You're supposed to see a slowdown in GDP growth, a slowdown in inflation, slowdown in wage growth, and everything, in even housing and everything else. So the goal here for the Fed is to get inflation down and keep it anchored and keep it down durably. Just getting a slowdown or potentially even a mild recession, yeah, that could help in terms of bringing inflation down. But the point is that they have to keep it anchored, because what could start to happen if they don't is by the middle of 2024, the year-over-year base effects might make inflation start to reaccelerate higher. So it's imperative for the Fed to get inflation under control between now and the middle of 2024.
Jim, Bruce Kassman, JP Morgan.
You know, just a note on that conversation that you were just listening to about getting inflation under control. I do want to make a note on that a lot of influential people do not want to address, and that would be what Jerome spoke about in his last rate decision. So he discussed in his last rate decision, he was asked pertinent questions about getting inflation under control. And his statement was, I'm not so much as concerned with getting inflation under control as much as bringing it in line, the two business cycles in line, that they had completed their job. I don't think that they have, but that they've completed their job, are doing their job, or whatever that may be, for bringing the business cycles together, bringing that COVID cycle back in line with our normal business cycle. I don't agree with that, but he did make that statement in the last presser that they've done their job to do that. So there is a question there. Do you want a full-blown recession, or is it just that mild recession to deal with the lopsidedness of the COVID and normal business cycle that we have? He seemed to say that he wasn't trying to not only bring them back together in line, but make us send us into a deeper recession thereafter. Market weak right now, trading 443.08. You know that I'm flat right now. I didn't get caught in any of that bullshit. Thankfully, I only lost a few pennies. Some of you guys are getting ass blasted right now.
Ahead of the FOMC rate decision in just under 20 minutes time now. I've seen the S&P 500 erasing its gains, now around flat on the session. Dollar's down 0.4%.
Note that this morning, if you've been tuning in since the beginning, you see the weakness at 11:30. You see the weakness again. It's now 1:45, but do you see the weakness again? Make a note of this weakness. Time frame wise, whenever we do these rate decisions, I'm always looking for that 11:30, that 1:30 weakness on these rate decisions. So if you've been with us since the beginning this morning, we discussed it a few times. You see that weakness right now at 1:45. You got all these shorts trying to get paid to get out. On a 5-minute basis, let's take a peek and just see here. You've got all this move right here that can be given up down to the pivot. You got S1 down here. And there's actually a deeper target to the downside. I think we said 437, basically 438. Way down here, 438, way down here. Expected move 440, 45 to the downside. Expected upside move 447 or 446.82, excuse me. Weakness into the decision, not to be unexpected. It's closer to expectations. And go back to the 1-minute chart here. Now underneath the hourly trigger. Nice little trap, so you're trapped into your calls. If you got trapped in that move to the downside, you heard what I had to say, hopefully, this morning about that. If you're trapped, ain't nothing for you to do. Hope and pray, I guess. There's the pivot line down below, 441.30 or 441.98. $442.64. Downside level right here, 441.98. there. Just a note, as the presser is released, we'll have the data released for you, the paper to read, and you're going to hear somebody speak. If it's bullish or bearish, hawkish or dovish, here's someone in the background speaking. And then at 2:30, I'll have the actual press conference live for you on air. Just waiting now. 15 minutes left. Can I explain the bullish bearish analysis? We do on the show. If you tune in regularly, yeah, I'll explain it to you then. If you do not tune in regularly, join us in the Discord and you can get an explanation there as well. Right down there, right down here. Right down there. That looks like that 442.70. No puts. I'm just trying to do a bunch of shit in the background. No position. I'm actually trying to facilitate the show for you today. No puts. I've got a lot of, you guys can't see it on this end, but on the back end, I got like a ton of shit going on. Just missed behind them. That was it. Not like intentionally not wanting them. What's the Discord? So we have a very active Discord. We've got, I think, 3,000 members in the Discord. I gotcha. You want to get inside the Discord? Here's an invitation for you. Here's an invitation to the Discord for you. We got people trading stocks, options, futures. I just sent a link to you inside of Twitch. Hi, Stacy. How are you? Good to see you, Stacy. Hey, Blackout Gambler. We're going to try to switch back to a free model on the chat at some point. So I appreciate you giving a shout out right now on YouTube. So look forward to that over time. We're going to try to go back to that model if we can, to a free model on chat at some point. So stick around, man. I appreciate you giving the shout out inside the chat right now. I got you guys. Yeah, the Discord's only gotten better over time. I want you to find someone in there too. Find like John L. Find David AMS. Find Blind Nest Owl. Find there's like a whole find Binky GTT. Find Ravology. Find Rob SFO. Find any of the moderators, the administrators. Those guys are not just hanging it. Those guys are killing it in there right now. Killing it. Yeah, Stevie, I got you, brother. Bots, and more bots, brother. Definitely. It's been a long road of trying to get that Discord where it needs to be. We have done a ton of work, and mostly those guys have done a ton of work to get that Discord where it needs to be. It's not. I shouldn't even say we. I got to give hats off to the admins and the moderators inside the Discord. They are crushing it in there. I'll tell you something. If you're a futures trader, right? I would fucking put any of our futures traders up against any of yours all day long. You belong to a trading group, all day long, I'd put our traders up against yours. All day long. Any trading group out there, you name it. And I'll put our traders up against them all day long. There are badasses in there. Gangsters. like S&P and NASDAQ traders, like fucking ballers. Baller traders. Yeah, if you know, it takes time, right? Like the Discord in the early days, it takes time. It takes time to get where you want to go, what you want to become. There's growing pains, all that kind of stuff. So I mean, it's to be expected. But these days, these guys are fucking
at 2 p.m. Eastern time. We get the U.S. interest rate decision. Forecast no change on the prior 5.5%. The FOMC summary of economic projections and the FOMC rate statement. Looking at some notes from analysts, ING say at the last Federal Reserve Monetary Policy meeting in July, the Federal Open Market Committee raised the Fed funds policy rate to 5.25% to 5.5%.
How did you not know that,
The decision also showed officials continue to have a bias to hike further, since most participants continue to see significant upside risk to inflation, which could require further tightening of monetary policy. In recent months, we have had some encouraging news on core inflation with 2 consecutive 0.2% month-on-month prints, with a third coming in at 0.278%, much better than the 0.4 to 0.5% month-on-month consecutive prints we got over the prior 6 months.
Setting up a rug pull here.
The commentary from officials, including the hawks such as Kashkari, suggests a willingness to pause again in September, just as it did in June, but to leave the door ajar for a further hike at either November or December FOMC meetings. Given this situation, economists are universally expecting the Fed funds target rate range to be left at 5.25 to 5.5%, with markets not pricing even 1 basis point of potential tightening.
Squeezing now into the half hour and our triggers. $30-minute velocity weak. 15-minute velocity weak. Hourly velocity negative right now. Seven minutes left. Until we get the news, if you want to ask any questions in Twitch or YouTube, I'll try to answer whatever I can. Quick answers. Quick answers. You have any questions inside of Discord that can be answered quickly, let me know. Launchpad, baby. I appreciate that, Steve M1, N1. Appreciate that. I've learned more in the past few months listening to your ideas and views and the advice of and griping on Discord than I have in the past few years of trading and self-confessed experts. Appreciate that, Steve. Do I use Benzinga Pro? No, I do not. I do not use Benzinga Pro. Good question. No, I have signed up for them in the past. I did try them out once. I wanted to see what all the hubbub was about, but I do not. I don't have anything negative to say about them other than what I've been told about them in Seeking Alpha. But I've never been a member. Good question though. Good quick question. Blackout Gambler is saying nailed 400 on Tesla. I'm done for the day. Congratulations, Blackout Gambler. I appreciate that, Steve, brother. BTC, I'll check it out in the background. Let me look. Let me check out BTC for you. Give me one quick second. BTC finally regaining its weekly. That's good to see. It's still below its monthly trigger. I'll say something to you. If you...
At 2 p.m. Eastern Time, we get the U.S. interest rate decision. Forecast no change on the prior 5.5%, the FOMC summary of economic projections, and the FOMC rate statement.
I want you to know that if you're a Bitcoin lover, you want
at more analyst notes. JP Morgan say, for investors, this will be important information. However, it is also important to keep an eye on building pressures that have the potential to tip the economy into a recession in 2024. While the Fed may plan for a gentle decline in rates in the years ahead, there is significant risk of an economic stumble that would precipitate much more rapid easing as we descend on the other side of the tightening mountain. While we do not expect any further rate hike at this meeting, they will release a summary of economic projections giving their updated perspective on the likely path for economic growth, employment, and inflation. Some notes from Wells Fargo. The FOMC has gradually slowed its pace of tightening since late last year, consistent with the policy rate nearing, if not already at, its ultimate destination for this cycle. We look for the FOMC to leave the Fed funds rate unchanged at 5.25 to 5.5% at the conclusion of its upcoming meeting today, September 20th. Economic activity has continued to hold up relatively well considering the 525 basis points of cumulative rate hikes since March of last year. Recent readings of core inflation also suggest that price growth continues to ease on trend. Core CPI rose at a 2.4% 3-month annualized rate in August, its slowest pace in more than 2 years. Notably, disinflation is broadening beyond just a handful of categories. While still higher than traditional core, the medium CPI moderated to a 3 spot.
Just a note here, we've got a 3-trigger cluster on the 1, 5-minute, and hourly trigger, looking for an upside move to the daily trigger at 444.29.
The September meeting will include an update to the summary of economic projections. In the most recent dot plot published in June, projections showed a median Fed funds rate of 5.625% at the end of 2023. Assuming that the FOMC does not hike on September 20th, that would imply one more hike in November or December. We would not be surprised to see the median projection for 2023 slip to 5.375%, as expected progress on inflation has started to turn into realized progress. To that end, we look for participants to lower their year-end projections for core PCE inflation.
Notice liquidity leaving the market right now.
Inflation projections since 2020, and a sign policymakers are feeling more confident about inflation easing.
Now that we are awaiting the Fed rate decision, if you notice on Bookmap to my right here, you'll see that all of that black area here, this is liquidity leaving the marketplace over here on the right-hand side, just so you can see it. Should be kind of a nice show. There ain't nothing down there, right? Oh, look at that hidden bar up there. You see it? Oh, you see that hidden bar up there? What's that? Oh, I'm so excited. We ran a poll earlier. Our people said we resolved to the upside today by end of day. You see that liquidity up there? Sneaky little red bar at the top up there. You see that? It's like,
1 minute remaining. I'll lead with the U.S. interest rate decision.
Listen closely. One minute left. Oop.
Ten seconds.
I've got 445 C's set up, but have not bought them yet. 445 C. Whoa, look at that drop down.
No change, no change. Rate remains unchanged at 5.5% as expected. Fed officials' median view of Fed funds rate at the end of 2025, 3.9%. Median view of Fed funds rate at the end of 2026, 2.9%.
Long 445 C's currently, no change.
Fed 2023 median rate forecast stays at 5.6%, and 2024 rises to 5.1%. 12 officials see one more hike this year, and 7 see on hold.
We have a skip.
The Fed says inflation remains elevated, and we're highly attentive to risks. Fed policymakers see much higher GDP growth of 2.1% in 2023, a lower unemployment rate, and more progress on core inflation than they saw in June.
Pivot is at 441.98.
The Fed repeats it will continue to assess additional information, and the U.S. banking system is sound and resilient. Fed forecasts show 2023 unemployment at 3.8% versus 4.1% in June, and job gains slowed in recent months but remain strong.
Whoa!
The Fed will continue same pace of reducing Treasury
blasting
and
down
MBS
through the
holdings.
bottom size pivot right now at 441.98.
So the Fed repeats language on extent of additional policy firming.
I am long calls here.
Interest rate futures erase earlier gains, turn negative after the Fed issues September FOMC statement.
Woo! Look at that blood in the market right now.
The Fed see policy rate 50 basis
slamming
points
down
higher
into the pivot right there. I'm still long calls down here. We'll see if I get wrecked. Any closing bars below this pivot, and I will cut them loose. So I'm long here on calls.
The Fed see economic activity expanding at a solid pace, and job gains have slowed but remain strong.
Fed interest rate decision actual 5.50 versus 5.50. Previous estimated 5.50.
Downside in stocks.
Are you long here? Let me know, because I'm long. I'm long for this. And look at that.
47.9.
Take a look on the downside liquidity on Bookmap down here. They're going to try to run this down.
US 2-year Treasury
be aware of this liquidity down here. They'll try to seek this stuff out, so be really careful of more downside down over here. Come on, baby, come back and pay me. Don't revert to the downside. HYG going down to close that gap that was left behind from this morning. So HYG eating up some of that gap. That gap goes all the way down to 74.41. Dixie coming back with some strength to that that points before that we talked about, 104.76. NASDAQ bloodbathing it down to its support level at 15,119.27.
Inversion in US 2 and 10-year Treasury yield curve.
Apple with a reversal to the downside.
Basis points after the Fed.
Disney holding on for dear life right now. Still long calls here on SPY,
Treasury
holding
2-year yield
445
rises
Cs.
to 5.135%, the highest since 2006. Traders slash bets on the Fed easing next year.
Also pay attention to HYG specifically. They have a gap down to 74.41. They still have not closed at all, so they're going to try to pound through this right now. Below your pivot, S1 sits at 440.08. Make sure I get that right. Hold on here. Scratch that, 440.65. Right here is your S1. Hold on 1 second here. $440.65 right here is your S1 pivot holding so far. Has not given it up yet. They're trying for it. Woo. Just so you can see where S1 is down here. Watch that liquidity downside for you on Bookmap down there. Pay attention to that liquidity. That's where the real buyers are. Lower than where we are. They're down at S1. We'll see if they get down there. I'm kind of sweating right now because I got a shit ton, not a shit ton, but I got 100 fucking calls. So we'll see what's up if I get destroyed in this trade. Get them down here. Look at them down here trying to, look at this down below here. This is trend right here. I don't know if you can see this, but I can show you this right here. Watch this big trend right here. Hold up. There's trend.
Fed swaps price in lower rate cut odds for 2024.
And they're trying to get that down to S1 right there. See if you can draw another trend line down there for that S1 right there. Make that white down there. And nice and thick. I got the wrong dots on that one, don't I? Yeah, that's better. Right there, that's better. Still long here, 2:06 in the afternoon. Oh, yeah, start printing that shit. Start printing that shit. Oh, yeah, come on back up, baby.
Back the first rate cut to September.
Come on back up. Yeah, I'm long calls here. So we have a skip and promises of more hikes to come in the future. The initial move down to the pivot line, it's holding right now. Liquidity, though, lies lower than where we are, so be careful here. If the pivot begins to break, look for S1 to the downside at 440.65. And I would also be careful at that 2:30 hour. So if you look on the bottom side of your screen right here, be careful of this right here. Watch this right. I'm going to draw this out for you. Be careful of like that upside move getting boxed in right here. And then you get that S1 hit right down there. Do you see that? So you get like the initial move down. Whoop. They pin us in here, and then Jerome comes out, and you get Ultra Hawk Jerome threatening you. So be careful of this continuation to the downside at some point. Watch my cursor in the bottom side of your screen. Yeah, you think that the statement that more hikes in the future is an attempt to stop the markets from crashing? I agree with that statement 100%. 100%. He has to tell you that you have more hikes coming. The longer he does that, the better off a bull is. I agree with that too, G-Dad Gold. 100%, brother. Trying to stop the front running, man. They're all gunning for it, aren't they? You know the banks are gunning for that pause, right? 2-3 months in advance. Trying to anticipate that pause so they can roll this market right down to the depths of hell before they get there, right? I agree with you too, Fermi Parasox. Fermi Parasox saying, Jay Powell will milk these skips for as long as he can. 100%, brother. 100%. Dude, that's what they're going to try to do. Dude, Bear, I agree with you too, Beartown Sheriff, man. 100%. You know the moment that they announce a pause, I'm going to roll this shit down to the depths of hell. Trying to break below right now the pivot target to the downside liquidity at S1. So I can show this to you. Woo!
And we have posted the live video to the FOMC press conference with Chair Powell on the feed for all those interested. Bear in mind it does start at 2:30 p.m. Eastern Time.
Well, it's parked right here. Look, it's parked right here. I'm trying to grind my calls out right now too. They are repricing me right now. I'm getting caught in repricing right now. Yeah, that's right. Bring my fucking calls back. Bring my fucking calls back right here. So you guys see all that right there? You guys see that trend? Let me take a look on the backside right now of SPOOs. That Bitcoin trader, you want to be above 27,915 and hold above that number, 27,915. Hold above that number if you want to get bullish. I meant to say that to the Bitcoin bull from earlier. Still long here. 30 minutes in a down channel still. 30-minute chart on SPOOs, still in a down channel. SPOOs trying to recover right now. I'm going to show you a chart really quick. We're going to switch over and look at a 30-minute. And we're going to take a quick look at the triggers here. On a 30-minute basis, just keep your eyes. Well, I said that's S1, but it's not, is it? I said that's S2 and S3, but that's wrong. That's S2. That's S3. I don't know why I have that wrong down there. The STX buy is at 37 or something. Somewhere down there. But I want to show you this chart right now. These lines are too fucking thick, man. Here's one. Here's one. It's making this shit all sloppy. So just keep your eyes on this down channel right here. Tag that one right there. Now we're back at the top of the key. You got that down channel right there. You don't want to do is you don't want to come into this presser and get blasted down here. So be really careful here of getting blasted down here. Even on this recovery that's going on right now, don't get blasted, okay? You want to be above that daily trigger, right? You want to be above that daily trigger. So we're going to look real quick on the Weeble chart here, right? We got bearish above or bullish above the daily trigger right here, bearish below the daily trigger down here, right? Bearish down here, bullish up here. And even on this recovery, here, look at the bearish below, bullish above right here. I'll keep that there for you. Be really careful on any kind of like bounce right here that they roll us down into that liquidity to the downside, okay? So be really careful. We're down below, told no, blast it down, give a bull a chance to breathe, and then slam it down to the to S1 or lower. Now that S1 is sitting down here. See it right here? Just be really, really careful of that right there. That blood down there. I got to put some stops on this shit. Hold on. I'm like sweating bullets here.
So again, just to recap there, US interest rate remaining unchanged at 5.5%. Headline coming from the summary of economic projections released at the same time, which imply one more 25 basis point rate hike this year and 50 basis points of cuts next year. So this was previously seen as 100 basis points of cuts next year in the June projections. So a downgrade on the amount of cuts expected from Fed officials next year. So again, following this, did see some downside movement in the S&P 500, upside movement in the dollar and the US 2-year and government bond yields in general.
Slide that over there so you can see it. Trading 28 flat right now on calls. Nope, I'm down.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Let's redo the poll. Nope. No. 29 cents, Damon. 29 cents on calls. 425. Sorry, 445 C's. $14 minutes, we'll get the presser. I'm going to set that up for you right now. Give me just a few moments. Hold on one second here. What do I have to give to you? Hold on one second. I'm up a penny right now on calls. I'm trying to get out here, though. Uh, 193,000 zeroed eights are in right now on 444C. I usually don't like seeing those. Those are usually an antithesis to more downside to come.
Sell-off here. Oil futures are extending losses as well, with US crude down by around $1 a barrel now.
Should see some weakness from those calls coming into the marketplace. I've got the Jerome Powell is up. Do you guys want to actually watch the video of that, of him speaking, so you can read his body language? Or do you want just the audio? Let me know. From time to time, you're going to hear that audio speed up. It's because I'm trying to stay faster than the delays to Jerome speaking. You want to see the video? Okay, I got you. So we'll look at the video here. Yeah, I think the way he speaks, his body language, ties that he's wearing, like all this stuff matters, right? It matters to see if he shuts down questions from reporters or if he answers questions from reporters in a positive or negative light. All that stuff really matters. Be really careful. As we're heading in right now, so
we are now 10 minutes away to the bottom of the hour. We do
issue a warning here.
With Chair Powell.
We are normally weak
on the feed ahead of this
into these pressers, even if we launch up. So if you're looking for a repositioning, if you're not currently long, you might get an opportunity to jump in long at a lower price. Yeah, 1 cough bullish, 2 coughs bearish. This is good job. 1 cough bullish, 2 coughs bearish. Do a pull for red, purple, or green tie. You guys got me fucking laughing my asses off here. When he drops the mic, we'll know if he's bullish or bearish. What time does he drop the mic?
Oil futures extend losses. Brent crude down by $1 a barrel.
2:45 or 3 o'clock. They gave us a skip, so as of right now, we are in a skip. It's a good question. We are in a skip right now. We're in the phase of the Fed trying to make you believe. We're in the phase of we're basically in a phase of a Mexican standoff with the Fed and big banks. That's where we are. That's truly where we are right now. You got big banks out there with their guns drawn, and they're like, God, just flinch and tell us you're pausing. They're literally they're setting it up. And then you got Jerome out there with his guns pointed at the banks going, not yet. Not yet. Now we're going to listen in to find out at this press conference if Jerome relents and into some kind of pause, like any kind of pause. If you're a bull, you want to hear Jerome say we are not done raising rates, I assure you. In general, that's what you want. The moment you hear him even whiff that we're done raising rates, get out of the way. Call's down 2 cents right now. We won't make the nut unless we have unlimited credit. I already gave a expectation for Tesla. You guys have my expectations for Tesla. All that holds true. Nothing's changed.
S&P says the U.S. recession risks still remain elevated amid uncertain growth prospects.
Blackout Gambler, this is where I shine. Blackout Gambler for life. 6 minutes left until the rate decision. I brought down some bears. I've got 2 ice cold bears so that wherever we go, we're drinking a beer on stream today. Haven't touched them yet. I'm staying sober for you guys.
Say the probability of a recession in the US starting within the next 12 months has moderated since the beginning of the year, but remains elevated at 30 to 35%.
Woohoo! Trading 33 right now in 445C. Still holding here.
At 2:30 p.m. Eastern Time, we get the FOMC press conference with Chair Powell. We have posted the live video on the feed for all those interested.
Up a little bit on that squeeze.
The Canadian 2-year yield at the highest since July 2001 on the Fed decision.
You overdid it last night? Yeah, I haven't had a beer in I think last time I had a beer was on last Thursday or something. I've been feeling like shit. Up 1 penny right now in that squeeze. Well, I haven't had a chance to have a drink. I'm like, I gotta have a fucking drink. I'm feeling better. Mr. Chocolate Monkey checking in right now saying the CBD is getting some life. Repricing is atrocious. I'm up 5 cents right now in calls. They've given me on 29. They're up 34. Now they're on 32 right now. This is bullshit though so far, right? So this morning I bought some calls. We went up. They gave me 6 cents. Then we went down. I lost 3 cents. I'm now up 4 cents right now. 3 cents. And they're still not paying me. Still no joy. No, I usually lose a ton of money on these days, or I make a ton of money, and I got nothing today. I got shit right now. If you see the presser cut out, it's because there's a 14-second native delay from Jerome. So I'm trying to keep us ahead of Jerome. Dude, imagine me in long futures. Yeah, I agree with that though, Jill. I get your point. I get what you're saying. Trading 32 right now in 29. 445 C's.
S&P 500 regains some lost ground to turn slightly positive ahead of Powell's presser, last up 0.02%.
Yeah, they're trying not to pay. That's what I'm sensing. They don't want to fucking pay today. They're like, fuck you. Fuck your event.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
You guys already know my thesis on let me make sure I can get this this presser at volume here. You guys already know my take on this. We talked on this channel all the time about when does Jerome Powell want to burn this market? When does that happen? How much time is he asking for before it does burn? Here we go. 2 minutes left.
Shortly expecting comments from Fed's Chair Powell.
Here we go. Chair Powell ready to take the stand here in a few moments.
Fed's Powell has begun the press conference.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship My colleagues
Fed's
and I
Powell
remain
says we're squarely focused on the dual
our
mandate.
dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular,
He's wearing
without price
purple
stability,
today.
we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary
NYMEX gasoline October futures settle at $2.61.
Policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Trading 39 cents right now, up 25%.
Proceed carefully.
Watch that hourly trigger.
The extent of additional policy firming that may be appropriate.
Trading 41 cents right now. If you are a call buyer, congratulations here.
Incoming data and the evolving outlook and risks. I will have more to say about monetary policy.
Trading 42, 43 right now.
Economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. And so far this year, growth in real GDP has come in above expectations.
GDP is good.
Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our Summary of Economic Projections, or SEP, committee participants revised up their assessments
Judy's
of real
breaking out the
GDP
chart
growth,
right now.
with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but
he's like, GDP, you can suck your recession balls.
Over the past 3 months, payroll job gains averaged 150,000 jobs
Trading
per
45
month,
cents right now to 29 cents. Call buy.
Well below that seen earlier in the year.
44 cents. Give me a squeeze.
Up in August, but
squeeze me the daily trigger. Get me up to 444.29.
The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year.
Squeeze and get me all the way to the top.
Although the jobs
get
to
me
workers
up
gap
there
has
now,
narrowed,
please.
labor demand still
Smash
exceeds the supply
through
of available
these
workers.
sellers right there on
FOMC
Bookmap.
participants expect the rebalancing in the labor market to
Oh
continue,
yeah, watch that unemployment rate.
easing upward pressures on inflation. The median unemployment
The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years.
We're going to go back and look at these later.
Well above our longer run goal of 2%, 4%.
It's calling for high on inflation in the end of 2024.
And that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5%
We're going to talk about this here in a moment. So I want to pay attention to these charts right now. We're going to discuss these charts because we go over these every week.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely.
Looking for peak rate increases in the end of 2024.
The most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025.
I can't believe he's showing this stuff.
Compared with our June,
or that he's showing it himself, I should rephrase that.
Revised for the end of this year, but has moved up by 0.5 percentage point at the end of the next 2 years.
He's basically saying,
are not a committed
roll
decision or plan.
on pause
if
until
the economy does not evolve as projected, the path of
fall
policy will
of.
adjust
I don't know if I can believe this shit.
To foster our maximum employment and price
I
stability
can't believe.
goals.
I can't believe he's showing this, and I can't believe that he's
make our decisions meeting by meeting.
He's basically telling you that you have to wait until fall for the roll of 2024. I don't believe it though. I ain't fucking believing it.
As well as the balance of risks. Given how far we have come, we are in a position.
We got a lot to go over after this presser.
We assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate. But we are mindful
that doesn't mean that this stuff isn't known. It means that he's pushing it.
Policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keep of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal.
Dude, those reporters
and keeping longer-term inflation expectations
weren't expecting
well
that.
Anchored. It's essential to set the stage for achieving maximum employment and stable prices over the long run.
Dude, these reporters have probably got their phones are just blowing up right now.
We understand that our actions affect communities, families and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
You know, there's like
Thank
a
you,
bunch
and
of
I
there's a
look forward
bunch
to
of
your
interns that are scrambling right now. They got all kinds of questions. He broke out the charts today.
Thank you.
This
Colby
morning
Smith
we
with the
talked
Financial
about.
Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting
We got a ton to talk
more
about.
benign inflation outlook for this year? There's noted uncertainty about
Oh
policy
yeah, there's a
lags.
division head in there in the airpiece,
Headwinds
guaranteed.
have emerged from the looming government shutdown, the end of federal childcare funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that.
Give me some of that
the fact
ball
that we
crush,
decided
baby.
to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year. Others believe that we have already reached that. So it's something where we're not making a decision by deciding to about that question by deciding to just maintain the rate and await further data.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, no. Clearly, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence.
should have used
really,
paint.
That we have reached the appropriate
Crayons
level.
for the reporters.
We're seeing progress, and we welcome that. But we need to see more progress before we'll be willing to reach that conclusion.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
Right. So I would say it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need policy to be restrictive so that we can get inflation down to target, okay? And we're going to need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation, really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't want to, bestow upon it the idea that it's really a plan. But what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what
holding
people
right
believe
now.
as of now will be appropriate
Dixie
to achieve
rolling.
what we're looking to achieve, which is
NASDAQ
progress
testing its
toward
2070
our,
EMA right
toward
now.
our inflation goal, as you
VIX
see in the SEP.
bloodbath.
Thanks. Let's go to Rachel.
No response yet from SPY.
Hi, Chair Powell. Rachel Siegel
Apple
from
holding its
Washington Post.
2070 EMA.
Thanks for taking our questions.
Disney, baby,
How would
pumping.
you characterize the debate around another hike or holding steady? Is it discussion around lag times, fear of too much slowing, too little slowing? Could you walk us through what this disagreement was about at the meeting?
Yeah, so the proposal at the meeting was to maintain our current policy stance. And I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think. And you have some, you saw, I think 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings that we have between the end of the year. So it wasn't like we were arguing over that. People just stating their positions. And really what people are saying is, let's see how the data come in. We want to see, what we want to see. We want to see that this
trying to
good
buy
inflation
time right
readings
now
that we've been seeing for the last 3 months. We want to see that it's more than just 3 months, right? We want to see, the labor market report that we received, the last one that we received, was a good example of what we do want to see. It was a combination of across a broad range of indicators, continuing rebalancing of the labor market. So those are the two things. Those are
all
two
getting murdered
mandate
right now
variables,
on
and
VIX.
that's the progress that we want to see. But I think people, they want to be convinced,
dude, going to
they
the
want to be
depths
careful
of hell.
not to jump to a conclusion really one way or the other, but just be convinced that the data,
target
supports
tag
that
down
conclusion.
below at
And that's why,
1373.
given
Now
how far
parked
we've
above
come
at
and how
the
quickly
target
we've come,
above it at
we're actually in a
1379.
position to be able to
Next
proceed
level to
carefully
look for
as
the
we assess the
downside.
incoming data and the evolving outlooks and risks. and make these
1359. We already
decisions meeting by
tagged that one earlier.
And in your view, what would
At 2
I know
p.m. the
nothing has been
vol
decided
slammed
yet,
down
but
there.
What would one more hike at the end of the
Next
year do
low
to the
would be
economy or to inflation
1340 on
On the
VIX.
other side, what would no hike do? If you could sort of game that out for us.
So, you can make the argument that one hike one way or the other won't matter. but
If you're
for
watching
us,
VIX
we're
right now,
trying-
1402 is the
obviously, as a
rejection
group,
point for VIX.
It's a pretty tight cluster of where we think that policy stance might be, but we're always going to be learning from data. We've learned all through the course of the last year that actually
Disney
we need to go
extremely
further
bullish
than we
on
had
this
thought.
news
If you go
today,
back a year and what we
cranking
thought,
to the upside.
what we wrote down, it's actually gotten higher and higher. So we don't really know.
Nasdaq's got
until,
the 27
and that's why,
EMA coming up
again,
on the
we're in a
129
position to
EMA,
proceed
looking
carefully
for a
at this
push
point.
higher.
A year ago, we proceeded pretty quickly to get rates up. Now we're fairly close, we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, we need to get to a place where we're confident that we have a stance that will bring inflation down to 2% over time. That's what we need to get to, and we've been moving toward it. As we've gotten closer to it, we've slowed the pace at which we've moved. I think that was appropriate, and now that we're getting closer, we have the ability to proceed carefully.
Let's go to Steve.
Oh, we got a ton of shit to go over now.
Steve Leishman, CNBC.
He
Mr.
broke
Chair, I
out the
wanna return
charts
Colby's
today.
Question here.
He's like, I'm like, what is he
what
going to
is it
say
saying
to
about
make the market
committee's
wait
view
for
of the inflation dynamic
the
in
roll?
the
He's
economy?
trying to tell you that you're going to be waiting a year. He's trying to
achieve the
get that
same
message out there
forecast
to people. I
inflation
don't
rate
know
for
if
next
it's real
year,
or not.
But need
I don't think
another
that it's
half
real.
a point of the funds rate on it. Does it tell you that? Does it tell us that the committee believes
What a
inflation
gangster,
to be more
though.
persistent, requires more medicine, effectively? And I guess a related question is, if you're going to project a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
So I guess I would point more to, rather than pointing to a sense of inflation having become more persistent, I wouldn't think that's not, we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity, I would say. So if I had to attribute one thing, again, we're picking medians here and trying to attribute one explanation, but I think broadly, stronger economic activity means rates, we have to do more with rates, and that's what that meaning is telling you. In terms of what the neutral rate can be, we know it by its works. We only know it by its works, really. We can't the models and that the economy reacts, and again, that's another reason why we're moving carefully now, because there are lags here. So it may of course be that the neutral rate has risen. You do see people. You don't see the median moving, but you do see people raising their estimates of the neutral rate. And it's certainly plausible that the neutral rate is higher than
if you are on YouTube,
the longer run rate. Remember, what we write down in the S&P is the longer run rate.
Read what I write down there if you're on YouTube.
That, that the neutral rate at this moment is higher than that. And that's part of the explanation for why the economy has been more resilient than expected.
Howard Schneider with Reuters, thank you. So you've said several times that the economy needed a period of below-trend growth to get inflation consistently back to 2%. You kind of get that in 2024, a little bit, 1.5% is just a touch below what's the estimate of potential. So the fact that you're getting so much done at so much less cost, does that represent a change in how you think inflation works, a change in how you think the economy works, a change in the mix of supply healing versus demand destruction that's necessary to achieve this?
Yes, of course, it is a good thing that we've seen now meaningful rebalancing in the labor market without an increase in unemployment, and that's because we're seeing that rebalancing in other places, in, for example, job openings, and in the jobs worker gap. You're also seeing supply side things, so that's happening. I would say, though, I still think, and I think broadly people still think that there'll have to be some softening in the labor market that can come through more supply, as we've seen as well. Also, remember, the natural rate we think is coming down, which is a supply side thing, so that the gap between any given unemployment rate that's lower than that and the natural rate comes down. That's a way for that's a way for the labor market to achieve a better balance. So all of those things are happening. You're right. In the median forecast, we don't see a big increase in unemployment. We do see an increase. And but that really is just playing forward the trends.
Apple giving up its 2070 EMA on a 5-minute chart, bearish.
There may come a time
Disney starting to roll in its 2070 EMA on a 1-minute chart, looking bearish.
That's really what we've been seeing.
NASDAQ rejecting its 1-minute 2070 EMA, going back down to retest its prior low. HYG becoming bearish here. They do have a gap they still have not filled.
To something different.
To the downside at 74.40.
Would you call soft landing now a baseline expectation?
No. I would not do that. I would just say, what would I say about that? I've always thought that the soft landing was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path has narrowed and it's widened, apparently. Ultimately, this may be decided by factors that are outside our control at the end of the day. But I do think it's possible, and I also think this is why we're in a position possible, and I also think this is why we're in a position to move carefully again. That we will restore price stability. We know that we have to do that. We know the public depends on us doing that, and we know that we have to do it so that we can achieve the kind of labor market that we all want to achieve, which is an extended period, sustained period of strong labor market conditions that benefit all. We know that. The fact that we've come this far lets us really proceed carefully, as I keep saying. So I think, that's the end we're trying to achieve. I wouldn't want to handicap the likelihood of it, though. It's not up to me to do that.
Nick Timros of the Wall Street Journal.
Oh, my boy,
Chair
Nick
Powell,
Timros
both you
right
and
now.
Vice Chair Williams have indicated that sufficiently restrictive will be judged on a real rather than nominal basis, implying some scope for nominal rate cuts next year, provided further compelling evidence that price pressures will continue to subside. Is the FOMC focused on targeting a real level of policy restriction? And can you explain what would constitute enough evidence that will allow the FOMC to normalize the nominal stance of policy while keeping real policy settings sufficiently restrictive?
I mean, yes, we understand that it's a real rate that will matter and that it needs to be sufficiently restrictive. Again, I would say you know sufficiently restrictive only when you see it. It's not something
retest
you can
on S&P
arrive
500
at with
for the
confidence
previous
in a model
low earlier in the
various
session
estimates,
at 441.56. Got a new low there at 441.47.
Through a combination of the unwinding of the pandemic-related demand and supply distortions and monetary policy's work in suppressing demand or alleviating very high demand. The combination of those two things.
Remember the conversation earlier that we had today, where you'll have 2 or 3 moments
inflation coming down. It's principally
where they
now in
reprice
goods,
throughout the course
also
of the day.
in
So
housing
you get the first
services.
rip
You begin
higher,
to see
they pull
effects
back.
of it in non-housing
You're going to do the
services
same thing a
as well.
second
So
time, and then you're going
I
to
think
actually
we think
see
that is working.
The same thing happen again at the close and tomorrow at the open.
I think as we've said, we want to reach that. We want to reach something that we're confident gets us to that level, and I think confidence comes from seeing enough data that you feel like, yes, okay, this feels like we can for now decide that this is the right level and just agree to stay here. We're not permanently deciding not to go higher, but we would, let's say, if we get to that level. And then the question is, how long do you stay at that level? And that's a whole other set of questions. For now, the question is trying to find that level where we think we can stay there. And we haven't gotten to a point.
So what we have to do here is we're going to need to review those charts that he's showing.
That yet. that's
this year, and even then, it seems possible.
We're going to have to discuss those charts that he was showing because
the median at 3.7%.
they do matter. I mean, we already have that
plotted,
plotted,
to
but
raise rates
him
still
showing
if it turned
them
out that you were going to achieve the same real rate this
is
year because the
important
decline in
to
inflation
the story
proceeds somewhat better than
he's asking for from banks, and he's asking banks to hold up.
At each meeting, and
I'm
certainly
thinking
at the
that we're
last
in
two
a
meetings
pause,
this
that
year,
we're just
it's going to
skipping.
depend on the totality of all the data. So the inflation data, the labor market data, the growth data.
And are those charts real? Like, is the unemployment rate really only going to go that high?
We take all of that into account, so I can't really answer a hypothetical about one piece of that. It'll be trying to reach a judgment over whether we should move forward with another rate hike overall, and whether that would increase our confidence that yes, this is an appropriate move, and it will help us be more confident that we've gotten to the level that we need to get to.
Thanks, Chair Powell. Following up on Nick's question, actually, John Williams, the New York Fed president, obviously, has said things to the effect of next year, as we see inflation, kind of, again, to Nick's point, as we see inflation coming down, we're going to need to reduce interest rates to make sure that we're not squeezing the economy harder and harder over time. And I wonder if that's basically the logic that you apply. Is that how you think about it? And then I also wonder, in the last press conference, you said something to the effect of, it's a full year out, those discussions, and people interpreted that to mean that you didn't see a possibility of a rate cut in the first half of next year. And I wonder if that was what you meant by that, or whether, how you're thinking about that timing.
No, when I answer these questions about hypotheticals about cutting, I'm never intending to send a signal about timing. I'm just answering them as the question is expressed. So
it's actually a big shift in policy
I
that
wouldn't
we
want to be
just
taken
said.
that way. Sorry, the first question was that how? Yeah, so we're as we go
That's
into
a big
next
shift
year,
right there.
That's the question we'll be asking.
They said they would always be
is, taking into
forward
account
on
lags and everything else we know about the economy and everything we know about monetary policy. The time will come at some point, and I'm not saying when, that it's appropriate to cut. Part of that may be that real rates are rising because inflation is coming down. Part of it just may be that it'll be all the factors that we see in the economy. And, that time will certainly come at some point. And what you see is us writing down, a year ahead estimates of what that might be. And, there's so much uncertainty around that. When in the moment, we'll do what we think makes sense. No one will look back at this and say, hey, we made a plan. It's not like that at all. These are estimates made a year in advance that are highly uncertain, and that's how it is.
Neil.
He seems a little less
Thanks so much,
confident today
Chair
than he
Powell.
was
Neil Irwin with
last
Axios.
great
I wonder,
decision.
how do you think about the question of whether the strong GDP growth that we've been seeing is driven by excess demand versus supply-side factors, productivity, labor force growth? And relatedly, if GDP keeps coming in hot, even in the absence of inflation resurgence, would that on its own be a reason to consider more tightening?
So on your first question, I mean, we're looking at GDP very, very carefully to try to understand really what's the direction of it, what's
GDP is
what's
not
driving
hot, though.
it. And it's a
2.6
lot of
is
consumer
not that
spending.
hot. That's
it's
just
been,
like
the
running
consumer's
good.
been very robust in spending. So that is, that's how we're looking at it. Sorry, your second question was?
There's GDP stays hot, but without inflation.
It's not fucking hot.
So I think the question will be, GDP is not a mandate, right?
Sorry.
Maximum employment and price stability are the mandates.
That's a fucking
The
bear
question
right
will
there,
be,
if there ever was one. GDP is hot, it should be at 0.005%.
Is the heat that we see in GDP, is it really a threat to our ability to get back to 2% inflation? That's going to be the question. It's not a question about GDP on its own. It's you're expecting to see this improvement.
GDP is running hot. It needs to be worse.
Rebalancing in the labor market and inflation moving back down to 2% in a sustainable way. We have to have confidence in that, and we'd be looking at GDP just to the extent that it threatens one or both of those.
Victoria.
Hi, Victoria Guida with Politico.
That's
there
a
are
big
multiple
question.
external factors that are playing out right now. We see rising oil prices. We see auto workers striking. There's the looming, very real possibility of a government shutdown. And I was just wondering for each of those things, could you talk about how you're thinking about how that might affect the course for the Fed and the economy?
Not a lot of time left for that,
so
right?
there is a long list, and you hit some of them.
That
But
government shutdown.
It's the strike, it's government shutdown, resumption of student loan payments, higher long-term rates, oil price shock. There are a lot of things that you can look at. And so what we try to do is assess all of them and
sounds like a kid asking a question.
And
what about
ultimately,
this, Daddy?
There's so much uncertainty around
What about that,
these things.
Daddy?
To start with the strike, first of all, we absolutely don't comment on the strike, as we have no view on the strike one way or the other. But we do have to make an assessment of its economic effects to do our jobs. So,
do you guys realize that they have shutdowns in the auto industry all the time without a strike?
Economic
all the time.
Effects, it could affect. You look
they
back at history,
increased
it could
production
affect
before
economic output,
the strike.
hiring and inflation.
They were forcing workers to work 6 days a week, mandatory
also
overtime.
Depends on how quickly production can make up.
They've got lots full of cars.
So
there's
none of
no
those things are
economic
known
impact
right
now
very
from
hard
a strike
to know. So you just have to leave that uncertain and
that's just glossing over right there. That's just news for you and I to
we'll be learning.
You and I to
over
consume.
The course of the next intermeeting period.
That reporter saying that
is
just
macroeconomic effect.
Fucking news cycle bullshit.
Energy prices being higher. That is a significant thing. Energy prices being up can affect spending. It can affect over time. A sustained period of higher energy prices can affect consumer expectations about inflation. We tend to look through short-term volatility and look at core inflation. But so the question is how long will higher prices sustain? We have to take those macroeconomic
it's like it's doing their job. Oil's doing its job right now.
Those are some of them. I'm not sure if I hit them all, but ultimately, you're coming into this with an economy that appears to have significant momentum, and that's what we start with. But we do have this collection of risks that you mentioned.
Greg Torres from Bloomberg News. I was a little surprised, Chair Powell, to hear you say that a soft landing is not a primary objective. This economy seeing added supply and
suppliers. Yeah, I'm going to make a point here really quick while this guy's talking.
We have primate
you got to understand. I live here.
Moving up.
These suppliers, they go on pauses all the time in the auto industry.
We've had
the suppliers, the small engineering companies,
and since
these automakers, when they go out, forget strike,
we may have higher productivity.
They have shutdowns all the time. They don't tell you about. They've got reduction of workforce hours for the actual
low inflation
manufacturers as well.
In a recession,
if you guys don't believe that shit, you think I'm lying to you? I'll get you a link right now. Hold on a second. Give me one quick second.
So, are you taking this?
You can ask these guys. I got something for you to ask some people because they'll answer you honestly.
A soft landing is a primary objective, and I did not say otherwise. I mean, that's what we've been trying to achieve.
If you want the DL, which you're not going to find on FinTwit, I got something for you.
The real point, though, is the worst thing we can do is to fail to restore price stability, because the record is clear on that. If you don't restore price stability, inflation comes back, and you go through, you can have a long period where the economy is just very uncertain, and it'll affect growth, it'll affect all kinds of things. It can be a miserable period to have inflation constantly coming back and the Fed coming in and having to tighten again and again. So the best thing we can do for everyone, we believe, is to restore price stability. I think now, today, we actually, we have the ability to be careful at this point and move carefully, and that's what we're planning to do. So we fully appreciate the benefits of being able to continue what we see already, which is rebalancing in the labor market and inflation coming down without seeing an important, large increase in unemployment, which has been typical of other tightening cycles. So.
Let's go to Chris.
Hi, thank you. Chris Rugaber at Associated Press. When you look at the disinflation that has taken place so far, do you see it mostly as a result of what some economists are calling the low-hanging fruit, such as the unwinding of supply chain snarls and other pandemic disruptions, or is it more a broad disinflationary trend that involves most goods and services across the economy? Thank you.
So if I understood your question, I would say it this way. I think we knew from before when we lifted off, but certainly by the time we knew that bringing inflation back down was going to take, as I call it, the unwinding of these distortions to both supply and demand that happened because of the pandemic and the response. So that unwinding was going to be important. In addition, monetary policy was going to help. It was going to help supply side heal by cooling demand off, and just in general, better aligning supply with demand. So those two forces were always going to be important. I think it's very hard to pull them apart. They work together. I do think both of them are at work now, and I think they're at work in a way that shows you the progress that we are seeing.
Michael McKee from Bloomberg Television and Radio. In June, you forecast a 5.
I think both of them are at work now, and I think they're at work in a way that shows you the progress that we are seeing.
Michael McKee from Bloomberg Television and Radio. In June, you forecast a 5. What would justify that last move? Because the median forecast is for lower inflation. And given all the known unknowns that you face, how much confidence do you have, can investors have, or the American people have in your forecast?
Well, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much to be humble about. But to get to your question, though, what's happened is growth has come in stronger, right? Stronger than expected. And that's required higher rates. Unemployment, you also see that the ultimate unemployment rate is not as high, but that's really because of what we've been seeing in the labor market. We've seen more and more progress in the labor market without seeing significantly higher unemployment. So we're continuing that trend. In terms of inflation, you are seeing the last 3 readings are very, very good readings. It's only 3 readings. We were well aware that we need to see more than 3 readings. But if you look at June, July, and August, you're looking at really significant declines in core inflation, largely in the goods sector, also to some extent in housing services, and just a little in non-housing services. Those are the 3 buckets. Headline inflation, of course, has come way down, largely due to lower energy prices, some of which is now reversing. So I think people should know that economic forecasting is very difficult, and these are highly uncertain forecasts. But these are our forecasts. We have very high quality people working on these forecasts, and I think they stand up well against other forecasters. But just the nature of the business is the economy is very difficult to forecast.
Given the forecast that you have, what justified not moving today, and what could justify moving in the future if you think?
Well, I think we have come very far, very fast in
some weirdness going on right now.
The rate increases that we've made. And I think it was important at the beginning that we move quickly.
The presser, the feed from the presser.
And I think as we get closer to the rate that we think the stance of monetary policy that we think is appropriate
it's not on my end.
Bring inflation down
I've
to
got
2% over time.
Google Fiber. I've got commercial
the risks
Google
become
Fiber.
more
I've got fucking dope shit.
And the risk of over
I've got
tightening
a little glass
and the
wire
risk
that runs in.
of under tightening that becomes more equal. And I think the natural common sense thing to do is as you approach that,
SPY parked right now, not doing anything.
As you get closer to it, and that's what we're doing. So we're taking advantage of the fact that we have moved quickly to move a little more carefully now as we sort of find our way to the right level of restriction that we need to get inflation back down to 2%.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With your focus on year-over-year PCE, isn't it true that base effects are huge, and that by the time you meet in November, that it's more likely that you'll have a low PCE number that would make you feel more comfortable? And secondly, how would the lack of key indicators
this press conference
like
a little bit longer than
CPI,
expected,
the
so at
jobs report,
3:30, regardless of the
impact
press,
your
we're going to put
approach
up a
in
chart
upcoming
for you
meetings if we were to have
and show
a
you
government
expectations in the rest of the week.
Yeah, I missed the first question. What was the what factors?
The base factors.
Don't forget that the downside move, the downside expected move is 440.45.
So
and the
on
upside
that, we're looking
expected
at
move
just monthly, right? You can look at just monthly readings and see what the increase was from the prior month. So you're right. When you go back 3, 6, and 12 months, you get base factors, but we can adjust for that. In terms of not getting data, again, we don't comment on government shutdowns. It's possible if there is a government shutdown and it lasts through the next meeting, then it's possible we wouldn't be getting some of the data that we would ordinarily get, and we would just have to deal with that.
It's a good question.
I don't know. It's hard for me to say in advance how that would affect that meeting. It would depend on all kinds of factors that I don't know about now, but it's certainly a reality that's a possibility.
But would you feel more comfortable on the base effects that as those kind of fall out of the equation for the next couple of readings by November, would you feel more comfortable at that point?
Yes. I mean, if you're looking, we can tell how much inflation has gone up in a given month, right? And that's what we're looking at. And month by month, what's the reading? And I think what we're really looking at is there's a tendency to look at shorter and shorter maturities, but they're incredibly volatile and they can be misleading. That's why we look at 12-month. But I think in this situation where it looks like we've had a bit of a turn in inflation starting in June, we're also looking at 6 months and even 3 months, but really 6 months inflation. So you're looking at it over that period and over longer periods. That's the right way to go. And we don't need to be in a hurry in getting to a conclusion about what to do. We can let the data evolve.
Weakness inside SPUs right now.
Chair Powell, Edward Lawrence with Fox Business. So I want to focus back in on oil prices. We're seeing oil prices, as you mentioned, move up, and that's pushing the price of gas. So how does that factor into your decision to raise rates or not? Because the last two inflation reports, PCE and CPI, we've seen the overall inflation has actually risen.
Expectation tomorrow?
Right. So, energy prices are very important for the consumer. This can affect consumer spending. It certainly can affect consumer sentiment. I mean, gas prices are one of the big things that affects consumer sentiment. It really comes down to how persistent, how sustained these energy prices are. The reason why we look at core inflation, which excludes food and energy, is that energy goes up and down like that, and it doesn't. Energy prices mostly don't contain much of a signal about how tight the economy is, and hence don't tell you much about where inflation's really going. However, we're well aware, though, that if energy prices increase and stay high, that'll have an effect on spending, and it may have an effect on consumer expectations of inflation and things like that. That's just things we have to monitor.
Just added September 22nd, 446
they're putting more and more of this on their credit card.
Friday.
The consumer seeing record credit spending. How long do you think the consumer can manage that debt at higher interest rates now? And are you concerned about a debt bubble related to that?
So to finish my prior thought, I was saying that's why we tend to look through energy moves that we can see as short-term volatility. Turning to consumer credit, of course we watch that carefully. Consumer distress, measures of distress among consumers were at historic lows quite recently, during and after the pandemic.
Expected downside move into tomorrow was 440.45. Just be careful of that when it's down below S1.
They're not at troublingly high levels. They're just kind of moving back up to what was typical in the pre-pandemic era.
Hi, Jean Young with M&I Market News. Yields along the Treasury curve have risen to their highest in years. What is the Fed's view about what's been driving that increase in recent weeks, and how much of it can be attributed to macro explanations and how much to technical factors?
So you're right. Rates have moved up significantly. I think it's always hard to say precisely, but most people do a common decomposition of the increase, and the view will be it's not mostly about inflation expectations. It's mostly about other things, either term premium or real yields, and it's hard to be precise about this. Of course, everyone's got models that'll give you a very precise answer, but they give you different answers. So, but essentially, they're moving up because it's not because of inflation. It's because it'll probably have something to do with stronger growth. I would say more supply of treasuries. The common explanations that you hear in the markets kind of make sense.
Kyle Campbell, American Banker. Thank you for taking the questions. Just two on housing. You've said slower shelter cost growth is in the pipeline and will reflect in inflation readings as new leases
also
are
remember
signed.
that put gamma,
but there's
first
also some
minor
questions
put gamma
out
is at
there about the way housing costs are
4425.15.
measured. particularly the
second
use of rental
minor
equivalents,
football, or
which
the
are
excuse me,
estimates
the
from homeowners about what their
football is at
homes would rent for if
440
they were
or
in the
excuse me
rental market.
4400.42.
So my question is, how
So
much of the
right
effort
now
to
we're
tame
coming into the
inflation,
first
both as it's
minor
measured and
football
felt
on
by the broader public,
SPX.
hinges on housing supply? And then, as far as a constrained housing supply being sort of exacerbated by this sort of lock-in effect of mortgages being higher now than they were
Expected downside
at the
move
recent
into
historic
tomorrow,
lows,
440.45.
how is that going to impact
almost there,
future thinking
440,
about
89,
taking interest
87.
rates to that lower bound in the future?
So on the supply point, of course, supply is very important over time in setting house prices and for that matter rents. And so, and supply is
Coming
kind
down
of
in a S1
structurally
right here,
constrained.
adding another
But
100
in
pack.
terms of where inflation's going in the near term, though,
Same strike,
as you
446
obviously know, a lot of it
Friday.
is leases that are running off and then being re-signed or released at a level that's not as it won't be that much higher. It would have a year ago
Trading
would have been
S1
much
right
higher
now
than it was
on
a year
S&P
before. Now it
500.
may be below or at the same level. So as those leases are rolling over, we're seeing what we expect, which is measured
S2 sits
housing
at
services inflation coming down.
438.63.
Your second question was the lock-ins. How much is that affecting things, really?
Is that going to affect your decisions to potentially bring rates down to their lower bound in the future, sort of creating that sort of bubble of buying and then a lock-in that sort of stagnates the housing market?
I think we look at I would look at the lock-in, the idea being that people are in very low rate mortgages, and even if they want to move.
Total of 200 contracts right now on 446C for
now,
Friday.
It would be hard because the new mortgage would be so expensive. Play a role in our future decisions in a future future loosening cycle about whether we would cut rates. No, I don't think it would. I mean, I don't think that's. I think we'd be looking at what fundamentally what rates does the economy need, and in an emergency like the pandemic or during the global financial crisis, you have to cut rates to the point that you have to do what you can to support the economy. So I wouldn't think that would be a reason for us not to do that. It's not
Just a
something we're
note
thinking
for
about
you,
at
we
all
are
right
sitting
now,
on the
but
first
down the road, I
minor
wouldn't think
put.
so.
Hi, Nancy Marshall-Genzer with Marketplace.
Gamma on
Chair Powell, you've
SPX on
mentioned several things that would
44.35.
possibly weigh on consumer confidence, maybe cut back
25.15.
spending, possible government shutdown, high gas prices.
Any
At this
closing
point,
below
would
this
the Fed welcome a
44.25.15,
decrease
the
in
next
consumer
level
spending? Would
down
that
is
help you get inflation
4,400.
closer to your 2% target?
I wouldn't say it that way. We're not looking for a decrease in consumer spending. It's a good thing that the economy is strong. It's a good thing that the economy has been able to hold up under the tightening that we've done. It's a good thing that the labor market is strong.
HYG still
The
has
only
not closed
concern-
its gap down below.
It just means this: if the economy comes in stronger than
VIX ripping
expected,
higher right
that
now,
just
trade
means we'll have
4.
to do more in terms of monetary policy to get back to 2%, because we will get back to 2%. Does that answer your question?
1402, 14.07. Slight gap to the upside, and it's bullish right now. VIX is bullish. Apple,
Well, that's always a concern.
bleeding into the close right now,
concern
looking
number
extremely
one
bearish.
is restoring price stability.
Disney with a
because in the long
rollover
run,
and
that's
showing a
something we
bear
have
flag
to do
to
so that we
the
can
downside
have the kind of
on the
economy we
1-minute
really
chart.
want, which is one
NDX
with
still rolling
sustained
lower,
period of tight labor
looking for
market
its
conditions
targets
that
down below at
benefit all of us, as I've said a
15.042
couple
and
times.
14.982.
That
There's
said,
a major,
of course,
there'll be a not major, but that 15,000 mark on NASDAQ
we
will be
also
big.
now, given how far we've come with our rate hikes and how quickly we've come
VIX
here,
screaming
we do
now
have
to the
ability
upside,
to be
closed
careful
its
as we
gap,
move forward
looking to
because of that
trade
consideration.
14.21.
Thank you, Chair Powell. Simon Rabinovich with The Economist. One of the factors in the economic resilience to date appears to be a lesser degree of rate sensitivity than in the past. Obviously, we've talked about households with long fixed-rate mortgages, also companies that refinanced
1 minute,
before
5
last
minute,
year.
30 minute hourly
What
trigger
is your
max
thinking
bearish
about
right
the
now.
efficacy of rates and how that's changed? And then related to that,
Can easily
how do you
still
think
go
about
down
the
to
distributional
438.63
consequences in
with
the
no
sense that
problems.
If you're a relatively wealthy household with a long fixed-rate mortgage, the past year has not been all that tough with rates
Breaking
going up.
through
Whereas if
S1
you're
right
relying
now,
on,
438.63.
your credit card
The
for
expectation
supporting
of the
your
downside if it
consumption.
holds.
In fact, times are getting a lot tougher, a lot more quickly. Thanks.
So why? I guess it's fair to say that the economy's been
This is an
stronger
extremely long presser.
than
3:18
many
in the
expected,
afternoon.
Given what's been happening with interest rates. Why is that? Many candidate explanations. Possibly a number of them make sense. One is just that household balance sheets and business balance sheets have been stronger than we had understood, and so that's spending is held up and that kind of thing. We're not sure about that. The savings rate for consumers has come down a lot. The question is whether that's sustainable. That could be, it could just mean that the date of effect is later. It could also be that for other reasons, the neutral rate of interest is higher for various reasons. We don't know that. It could also
So we're going to switch really quick. It's now 3:19. We're going to take a look at the market where it stands right here. Give me one quick second here.
Candidate explanations. We have to, in all this uncertainty, make policy. And I feel like what we have right now is what's still a very
one quick
very
second
strong
here.
labor market, but that's coming back into balance. We were making progress on inflation. Growth by many forecasts, many forecasts call for growth to moderate over the course of the next year. So that's where we are, and we have to deal with what
turn
comes.
this down a little bit. Hold on a second.
On your second question, which was distributional, but can you be a little clearer about that?
We're going to turn down J Powell in the background. This presser is way too long.
That if you're somebody who has a long fixed rate mortgage, you've been able to endure the.
So we're going to take a look at SPX really quick. This is a 4-hour SPX chart.
Current financing rates are punitive.
Yes, and so the point I would make there is
I want to show you something here that's quite important. So I want you to take a look at this chart with me right now.
by inflation are the people who
This is the current trend up of SPX right here.
all of your income,
Known demand stepping in, right?
all your income on the basics of life,
Comes up here, woohoo, comes up here, woohoo.
heating the basics.
Bought this
And
dip,
prices go up by 5, 6, 7.
woohoo, right? Immediately sold down underneath
Even middle class people have some
to the first minor put wall right here.
It is
Any
for those
closing
as much as for anybody that we
below this trend and this roll that's coming on the
want to do as
outside
quickly as possible.
has more downside to come.
We would like to do that.
So take a peek right here with me. I'm going to slide this over so you can see it.
Making progress.
This is the put wall right here.
The kind of increase in unemployment that we've seen in past things, but
And how you get waterfall selling and puts is if you start getting closes down here
and borrowing are going to feel that more.
and rejections to the downside into end of quarter. That's how we get that downside move over here. If you're an Elliott wave bear, that 430 is the price target to the downside. 430-ish, 432-ish, something like that into end of quarter. So just watch this for end of quarter. If you are a seller, you just have to defend this right here. And there it goes for you right into end of quarter. All you have to do as a seller is defend this right here. So just hold on a second. I want to hit that back right there. Back. How do I go back here? Not back.
And also the second
Pencil.
question is from your recent reading.
So just pay attention to this right here. You have what's starting to become weakness into end of quarter. So any kind of, let's say you're buying this right here,
That sector. Thank you.
So I
right? There's that 445 right here.
we can take away.
They start to sell this down into end of quarter.
Low and moderate Americans.
You get a rejection right here, and you get a waterfall moment
I think during the pandemic,
right there. So 4,400,
transfers that happened.
right? You break 4,400, and the target to the downside
The surveys
is a full
so that
100-point drop straight down. Well, 30-point drop,
financial
depending on what you're trading.
I think now it's a very high
So watch this holding right here on SPOOs and SPX. They are pinning this market down, trying to create fear and more put buying to go to the downside to 430 into end of quarter.
So surveys are showing dissatisfaction
So we're going to take a look at SPY right now and see how that translates.
And that causes people to say the economy's terrible, but at the same time,
Let's take a look at it right now. So this is SPOOs, right? Staying on SPY here, we're going to go to a 1-hour chart.
Answer might be, but I think there's a lot of good things happening on household balance sheets, and certainly in the labor market.
Watch that blood right there. So if you're a seller, if you're a bear here and you're like, yeah, you know what, we're going to keep going down to end of quarter, you need to be selling right there. Let me turn that presser off really quick. You need to be selling any moves higher right up in here and continue to sell down. You will also be watching the hourly trigger and daily trigger moving to the downside to help along with that move to 430. So here's your daily trigger. Here is your hourly trigger, and you will need to get that help here to send us down to that 430 target on SPY. So pay attention to this right here. I want to show you this. And there is your price target here to the downside. Pay close attention to this. Any kind of selling, if you are a bull, as long as price stays down here, we head right down to that weekly trigger. Any kind of closing down here, any kind of selling right here, and you are going to see 430 into September 29th. If we do pull higher, if you're a bull, if you are a bull, watch closely here if you're a bull, for you to get bullish on the market. Here's your daily trigger right there. Hold on a second here. Make sure I got this right here. I want to make sure I don't get this wrong. 443.34. Right there. If you are bullish this market, $44.29. Sure I get that in the right place. Maybe this can show it better right here. If you are bullish on this market, you need to regain. Get rid of that so you can see it better. You need to regain above this uptrend here, and more importantly, you need to be above 445. You have to be above this zone right here, this 445 zone. You have to get above this 445 for an upside target into end of quarter. So this 445, 444.57, somewhere in here, until you're above there, this is a seller's moment in the market. And a furthering of selling in this market into end of quarter. If you are a bull, get rid of that for you. If you are a bull, you have no trade, no long thesis, unless we're above 445 into end of this week, next week, any of that stuff. Any kind of squeezing up here, if it gets sold back down, whoop, below that 441, 440, and you will see 440. You will see 440, or excuse me, 430 on SPOOs. Matter of fact, we'll give it actual price target. Hold on a second here. Trigger screen. Let me show it to you right here. We'll make it simpler for you. 30-minute chart. Just so you can see it, it's right there, okay? Into end of month, I want you to watch this right here. Right there, 430. There's your trend to the downside. Any squeeze is up to this 445. Gets sold right back down into the end of the month down there. Slam to that 430. So if you're bullish, you need to see stuff like this here to the upside to even begin to get bullish again. Does that make sense to you? Otherwise, price target, September 29th, 432 likely. I said it says right now 429.54, but it'll go up 432 by end of month. So 432 end of month, as long as we trade below 443.34 on SPOOs. Not good for the bulls. Now, I've got calls for Friday, and I'm looking for that. Let me show it to you a better way. I'm looking for this trade right here. I'm looking for that trade up, right? And then that eventual sell down right here. So I've got a trade on for Friday, and I want to see that push higher into Friday before we sell down on this event news in here. Now, if your question to me is like, is this bearish on the market? Not necessarily. Not necessarily bearish on the market. I was slightly fascinated by, so you can see it right now, right? This is a better way to look at it right here. Whoop. S1, got another one coming down right there, and I'm trying to capture that right there and try to get that kind of a bullshit downside move right there. Main screen. Let's watch that right now. In one quick second here, I got to do one quick thing. I'm not getting any of your chat because I closed YouTube and Twitch chat on my end, not on Streamlabs, but I get like chat in Streamlabs, but not real time. Dude, I can't believe he's still talking. I can't believe he's still talking in this time frame. So we got a ton to go over here. Now, I will be prepared for this tomorrow, but I have to go through that speech from Jerome and grab those charts that he was showing. There's a ton of, it's not that we don't know those charts. The fact that he broke them out today is what matters. That he's breaking out charts saying, hey, this is what we expect. We're going to expect to hold rates higher for longer. We're going to expect to hold them into not just next year, but likely into the end of next year. He's trying to buy himself time in this conference. And I'm a little shocked here at him trying to buy that time on that conference, or buy that time in that press conference with breaking out charts and trying to show a path. And some of the paths that he's showing don't make sense. I'm kind of scratching my head, especially on the unemployment track that he's looking for to the upside. So we will take a look tomorrow at the unemployment rate. We'll take a look at the rate of inflation for the chart that he showed on that one. We'll take a look at he showed I think he showed inflation, unemployment, and then he showed, I think, the Fed fund rate into next year. And so it's not that we don't know those charts are there. It's that he's pointing towards them in this official press conference and saying, hey, look, this is what we're expecting into next year. So, and we're going to go higher for longer. You're going to get 1-2 rate increases, and we're going to hold them higher into end of next year. So trying to dispel the idea that rate cuts are coming this year, rate cuts are coming in the springtime. Why is he saying that is the real question. And we know why he's really saying that. He was saying that because he does not want the front run to the downside to begin too early. He's trying to still buy himself time, which I'm a little blown away by that. I'm not quite believing what he's saying. He's trying to tell you that we're going higher for longer into late 2024. Unless I got that wrong, unless I missed something, and I'm not a buyer of that. I think that's bullshit. I'll be honest with you. Right now, him saying he's going to continue to add rates and then hold that shit for another year. I want to see if that shit happens. Let me know in the chat if you think that we're going to be up more 50 basis points into December of 2024. I find that very hard to believe. Price target downside S2 Trading 439.93 right now. S2 to the downside. Blasting through right now the expected move for today and for tomorrow. Blasting through it right now. Daily trigger still staying up. Hourly trigger still staying flat, not coming down with price right now. They're not believing this. I'll tell you what, though. Look at this nastiness into this close. This close is filthy. Hold on here. No buyers in sight. Look at this. 0 buyers of this market here and a rug pull showing itself. This market saying, fuck you. Look at this. Nothing until we get all the way down here. 0 buyers in this market. And to further that point, there is nothing, no floor, all the way down there. Woo! Smoking. Trading 439.48 right now. Watch this chart to the downside. S2, straight red bar. No buyers here. No, and I don't see any buyers. Even down here, I got to see no buyers. 0 buyers in this market right now. Panic on Fed Day to the downside. That's what I'm saying, Turkey McNugget. I'm looking at it right now, and I'm like, they ain't fucking believing him. They think he's bullshitting. They think he is lying right now. They're telling you, the market right now is telling you, we do not believe this guy. He went a little strong on the higher for longer. December of 2024? Does anybody believe that in the chat? Does anyone here believe that he is going to increase 50 BPS and hold into December of 2024? He even broke out a chart for like 27 and 28. Like, he was giving huge projections that I'm like, that's all bullshit. He has no idea. He has no idea what we're doing in 2024 in December. He has no idea what we're going to be doing in 2026 or 2027 or 2028. Like, I was like, you got to be shitting me. Those charts are bullshit. Like, they're good for like 3 months. Max. They're good for 3 months. No. He broke those charts out intentionally today. Absolutely broke those things out intentionally today. That was some bullshit right there. Like, I'm shocked that he broke those out. Absolutely shocked. Yeah, the bark was too big for him today. I'm not a believer of. I think he should have not broken out those charts today. I'm gonna say that he went a little overboard. Somebody in the back office, some intern, was like, "That'll translate well." There's no fucking way that translates well. No way. He didn't look as confident as he did before. I don't know who wrote that speechwriter. Whoever that person was, get rid of him. Get him out of there. That was insane. I'm flabbergasted that he broke that chart. As soon as I started seeing those charts, I was like, fuck. I was like, it's like too much sizzle. Too much sizzle. Oh, he was reading from an iPad. Yeah, I didn't like that, man. That was too much sizzle for my taste. I don't like seeing that. He went a little too far overboard. You can, in my view, you can see that they knew they had it to. You can tell from this speech. Let me rephrase that. You could tell from this speech that they went into it with a mandate of some kind, saying, like rule number 1, we have to convince people that it's higher for longer. And some interns raised their hand and said, well, the only way you do that is you tell them where we're going to be in a year. Can't do 3 months or 6 months. You got to tell them a year out. How do we prove that? Let's get some charts out there for them, and we'll tell them what's going on in the next 3 to 5 years. I was like, you don't ever do that shit. Like, because we know that's bullshit, right? We know that none of that shit. It's like someone telling you what volatility is going to be like a year from now. When you get volatility projections that are like 3, 6 months, a year out, it is complete bullshit. All of it, bullshit. They adjust those things They never ever discuss them again at all. Like like they give a projection for a year out, and then you come back 3 months later and you go, hey, what about that projection for the vol curve? And they go, oh yeah, we had to adjust it. So, I'm not buying it at all. And I think that was a bad move by Jerome Powell. Absolutely not a good move. S2 on the way up. Expectation from here. I'm going to give you a big expectation. Into September 30th, we are going to trade 430. Absolutely. Bulls in their thesis right now. Garbage. Jerome Powell to me today. Garbage. I'm calling him on his bluff here, and I think they're going to front run this down on his ass. I'm going to front run this shit down, and I'm going to almost assure you here. I'm going to make a prediction here. They're going to make that guy fucking eat those words by the time we get down there. They will be cutting rates by the time we go down there, which is going to be sometime in the spring to summer. That shit about December, he is out of his fucking mind. Out of his mind. And whoever told him to do that is out of their fucking minds too. Never should have shown those charts today. Yeah, he had the iPad out today. I don't know who told him to do that. Dude, out of his mind. No one's going to believe that shit. Parked right now on a rug pull, ready to blast to the depths of hell. Watch. I want you to watch right now, book map right here. Just parking right now for a collapse into this close. Woohoo! Where's S3? I got to look at S3. S3 is way down here. Price target into the bell. 437.33. Price target into the close here. 437.33. We'll see if we can get there. We will see if we can get there today. Woof. Let me know right now if you're a bull. Do you think? I got to get rid of that line. That's just a trend line. Gotta throw that in the trash so you don't have to see it. Let me know if you think if you're a bull out there, were you one happy with that presser? Number two, not only were you happy with that presser, do you think that helped you in your thesis higher for longer? Do you think we're gonna have rates higher for longer into 2024, December of 2024? I find that hard to believe that he gets there. We have an election coming up. I'm fucking flabbergasted that he's trying to push that bullshit narrative. I'm serious. Yeah. If you're a bear, do you think that we sell 444 and go down to that 430? Are you a believer in that trade now? You're scared? That was not the J Powell that Bulls wanted, in my view. That was a bad look from Jerome Powell. Not a good look. Not a good look. There's your S3 right there, so you can see it to the downside. S3 on this one right here is 437.33. Right here is S3. I mean, do I think we squeeze? Fuck yeah, I do. But, dude, I'll tell you what, I think we squeeze into the end of the week. But I'm telling you what, these sellers, man, they are going to be up there waiting for you. These sellers are waiting for you. There's your S3 right there. These sellers are like, fuck you. Look at that damage done right there. Any squeeze up. Expecting more downside to come. Price target, September 30th, 430. We're trading 438 right now. Might as well go down there. Might as well go down to 430. Show that right there. There ain't no reason now not to get down to 430. So 430, end of month. And I'll be honest with you. There is a high probability of 420. By end of month or even into first week of October. That is vicious. No, Bears winning again. Bears win like 1 out of 100 times. You got to give them their due. Bears never win, man. They haven't won since 1894. You got to give them a little bit of win. Yeah, there's a move. There's a downside move here coming. It's not today. I don't think I don't think you get 430 today. I don't think you get 420 tomorrow or something like that. But you're gonna get a major rejection above. You should be looking for it. 443 major rejection, and you're gonna be looking for some big downside. Let's look on that SPX one more time. Let's look at SPX really quick. You can take a snapshot of this at home, okay? Give one quick second. So Weeble, I want you to pay attention to this very closely, okay? Extremely closely here. You can snap. Let me mute my camera here. You can snap this and keep this for yourself. I'm going to show you something here that is not looking good for bulls. So you can just take this right here. This is a daily chart right here. Not good. Do you see the white line coming down right here? See this rolling that's just starting? There it is right there, starting early for the bulls. That is not what you want to see. So look right here at a daily chart. You get that move down like that right there, right? This is the 18th right here. And if you keep doing this shit right here, it does not end well. It blasts down right here. There's your 420. And it just starts hammering to the downside. Not good today for bulls. If you want to capture this right here, if you are a bull, you need to be above that line right there. Until you're above that line, you ain't got nothing as a bull. 444.50, 449, something like that. Dude, bulls, man. Woo! Bad day today. Oh, that shit's still there, isn't it? Woo-ee! Downside price target to start, 433.22. 433.22 on SPX. God damn, bulls. God damn. This should trigger some pretty nice panic in the market here. Well, what is that? What's showing up on my screen right there? What is that stuff? Hold on here. That's some weirdness showing up on my screen. Bulls. Woof. Woof, woof, bulls. Bulls now trading down into the close to 438.63. Let me know in the chat what you think here, because I'm going to tell you, it ain't looking good. They're waiting for one more confirmation, maybe two, or one or two confirmation, but I'm going to expect not only that 430, but they're going to make this shit nasty in the springtime. That Jerome Powell presser was not what the market wanted to hear in any way, shape, or form. Brad, take it easy, brother. You're gonna get 30. Dude, 3,000 is gonna come faster than you think. 4,300. You're gonna see that come faster than you think here. Faster than you think, and you're likely gonna see a major market roll coming. We're sizing up for it today, believe it or not. So pretty good. If you're a bear out there, congratulations. It's not looking good for bulls here. You've got a couple more big moves you got to do. Let's look at SPX really quick one more time on SPX. I mean, you got more shit to do, but you got it pretty much. Let's look at SPX on a larger time frame. Let's go to SPX back on the daily time frame. And it's balls in your court, bears. Ball is in your court. And show it right here for you. Ball is in your court. I'm going to show it right here in a big chart for you. And you see that flattening of trend, 129-day trend right there. starting to flatten and roll, right? And you see this kind of stuff like this happen here. It's a daily chart right there, some kind of this kind of shit right here. You get fair warning here if you're a bull. Fair warning. This kind of shit starts happening, and we start crashing. We start crashing. We ain't there yet, but we're looking at it. I can show it to you right here. It's already showing itself. Getting a roll on 27 EMA, roll a flattening of the 129. We are there. We are there. Congratulations, bears, dude. Sellers, congratulations. Congratulations if you're a bear. Oh, you're gonna get more than 435.6. You're gonna get more. You're gonna get more down than that. You're setting up a major trend for like 6 months to about 6 months, about 6 months to a year. You're setting up a major downside trend. Major downside trend. You're setting it up right now, currently. So we will see. Whoop, hold on a second here. You are setting up a roll in the marketplace right now as we speak. Trading S2 right now, trying to break up into this close. Let me know what you think in the chat. I'm probably like whenever we trade that, I'm gonna chart that out, but I'm probably gonna put a major hedge on the market. Not today, but in the next week or so, next 5 sessions, maybe I said 6, but next 3 to 5 sessions, I'm probably going to put a year out put on this market. So I'm pretty bearish here. I'm more bearish than I'm letting on right now, or maybe that I talked to you about. But that today, Jerome Powell not impressing the market here. Market showing extreme weakness on that press conference, and the market is setting up for a major roll over the coming months. Maybe the next. It's starting right now, and it should take 3 to 6 months to fully realize itself. But dude, I'm telling you what, that was no bueno. No bueno. And I'm long calls to Friday, so we'll see what my call's doing to Friday. But dude, like an actual, like, if we hit that 444, 446, anywhere in that range at any point, dude, I don't know, like, major trend, like that's major trend. That's like 3 months, 6 months. They sold 17 zillion puts. I got calls here, so I got calls for Friday. So, but even so, I'm looking for that. I'm looking for that rejection up there. I really am. I want to see if the sellers step in. If they do, if those sellers step in up there, I'm going to be joining them. I am definitely going to be joining them with some size. Talk about a Santa rally this year. I don't know, man. You might get like a Santa rally inside of a range, like a range Santa rally. But if you think like all-time highs, that's going away. I'm going to assure you of that. The door is closed to bulls here. Door is closed. You're going to see bearish CaptainJimJames coming out real soon. Like full bear. We'll still trade calls, by the way. We'll trade all the rips higher too. We'll trade all those rips higher. We'll trade it right down too, though, at the same time. Fuck, dude, Jerome. You think that intern got fired today? Probably. How about this? I'm going to make another prediction. You're going to see Jerome come out again. You're going to see another major presser from him in the next coming weeks. Next week or two. In the next week, you're going to see Jerome come out, and he's going to try to talk the market down from crashing. Guaranteed. Guaranteed. Yeah, you're probably going to be switching to bear here. Not right now, but you're going to be switching to bear here real soon. Real soon, you're going to be switching to full. If you're a full, like full bull, it ain't looking good, bros. And I'm a bull, so it ain't looking good. Like, if you're a bull out there, go home and read bear stories tonight. Yeah, I got calls for Friday right now, so we'll see if they hold. But dude, I'm telling you what, they're gonna get so many. Well, I guess you know what could save a bull is if you get everybody all bared up. If everybody knows, and they all start fucking hedging this market, it could give some decent squeezes. But I've seen this before. I can show it to you. It does not look good. Does not look good. Not a bull's friend here. No, I don't think I'm being taken to this, Chad. We'll come back and check those calls on Friday. I'm not selling; they're staying right on. So I'm not believing we're getting a market crash today. We're on a 1 minute chart here. We're not on a hour chart or half hour chart. We're placing like 3-day calls on a 1 minute chart here, so I still feel good. What's my DCA on 446s? I got a DCA of 25 cents right now. We're at 16 right now. Good question. What else do you got here? Let me see what else you guys are saying. Hold on here. I'm missing a bunch of this chat. YouTube chat. Think there's any possibility of bouncing in mid-October, move back towards 460, 470 by January? Not right now. That's a good question. So right now, I need you to understand out there something. I want to be crystal fucking clear with you, okay? Crystal fucking clear. I need to be crystal clear with you guys, okay? Like, no matter what anyone out there tells you, okay? Crystal clear. I want to show you something here, okay? I want to show you what happens when you get across, okay? Matter of fact, I'm just going to delete this whole fucking thing. I shouldn't. But can I hide it all, maybe? Hold on. Yeah, I'm going to hide all the drawings. Okay, listen to me closely here, okay? It's crayon time for you, okay? I'm going to give you crayon time here. I'm going to give you crayon time. I want you to pay fucking attention to me closely. You have time if you're a bull, but I want you to see this here, okay? This is SPX over here, okay? I want you to see something, okay? I want to draw your attention to this. We are not there right now, but I want you to see something here, okay? You see this violent-ass move down here? See the pull up higher? Give you a chance to get out? That's the blast down right there, okay? They give you a second chance to get out. Right? Violent blast down here. Third chance to get out. You got a chance to get out there. Chance to get out right there. Chance to get out right there. And I'm warning you before we ever get there. I'm going to give you this warning, okay? Before we get to this point. I'm giving you a warning today. A warning. I'm going to show you how this happens, okay? You have a quick squeeze up. If they step in and sell down below this, it's a fucking bloodbath. There's your 420. You close that gap. You squeeze back up here. Right? They give you a second chance. And this fucker comes right down on top of you. And there goes the big doozy right there. So I gotta be honest with you guys. Please don't question this stuff. And it just goes to town to the downside, okay? Like straight town. It just goes straight down to the downside. So we're not there yet. We aren't there yet, but I'm warning you right now. I gotta warn you because I want you to see this blood here. You see this blood that we're in right now? You see this blood down here? And it just starts weakening and weakening. We start heading down. This is no-go. Bulls, no-go. If you want to get bullish on the market again, if you want to get bullish in the market again, you must be above 44.69.16 on SPX. You have to be above, and holding. Above and holding 446015. Fair warning to you. If you're a bull, please, please heed my warning. Please, for the love of Pete. Look at that. Right into 4 p.m. Traded straight down into S3 into the close. If you are a bull, I'm going to give you an early crash warning. You got a fair chance of a major downside move. You have a fair chance of the entire bull run also being over on any rejection of that 27 EMA on a one-day chart. You have some real thinking to do. If you're long this market on the underlying part of this market, I'm giving you, if you have real money in this market, I'm giving you a fucking warning today. Watch the fuck out. Watch out. Bulls still have a chance. I mean, they can squeeze it up. They get above that line. They get above that 27 EMA. They can still turn around, but if you're a bear, you still need 2 or 3. Let's go back to that chart real quick. Hold on a second here. I got to tell you something else. If you're a bear, or bull or bear, it doesn't matter. I want to show you something else, because what I'm saying to you is also not being as clear as I need to be here. Remember, on higher time frames, now we trade a 1 minute chart, a 5 minute chart. It still applies. It still applies for a daily chart. Okay, so let's look at. Let me see if I can mute this. It's not confirmed yet. Calm down, bulls. But I want to show you guys something here. It's not confirmed yet. This is the finger trap, right? This is a one-day chart for SPX. You never get caught in this shit. My warning to you, though, as a bull, is if we break below this, this is where the confirmation comes in. So look closely with me. If you are a bull, and at any point, if you get a rejection right here, right? This is guaranteed money. It's like guaranteed that we're going down on any break and rejection of this 129 right here. It's like guaranteed. So it doesn't matter if it's a 5 minute chart, 1 minute chart, doesn't matter. So I'm giving you warning. There you go. You got your warning. You see it. Pretend this is a 1 minute chart. You got to break down below. The expectation is we trade that now. They're going to give a bull a chance, right? And the bull's going to say, oh, we're still long here. They send you right back down in here. Pound it, pound it, pound it. Get underneath. And if they get underneath this red line, death. Death. Death for the market. And that shit lasts many months. Let me see if you guys have any questions here. Let me go to we're not gonna turn it off just yet. Let me ask you guys let me find out in the chat with you guys. We'll leave it up for a little bit longer. I got a fuck ton of work now to do with that shit that he pulled today. I'm like, fuck, I gotta go in and see all that stupid shit he was showing people. Let's If you have any questions on YouTube or Twitch, feel free to ask right now. Oh yeah, let me crack a beer. Oh, good job. I got my first beer in a week. There you go. Beer 30 right now. When Tom Lee, hey, by the way, if you were a bull yesterday, if you were Chase, I forget, 2 or 3 bulls yesterday wanted to put size on the market for the upside. If you did not at this point, congratulations. I said to wait until today to put that size on, and if you didn't, thankfully you did not. Hopefully you did not put size in the market. Yesterday we were getting a lot of questions about buying the market yesterday and the low for some significant money. And I said, no fucking way. We'll wait until tomorrow to find out. And I'm not bearish in the short term. I'm bearish. I'm bearish definitely at a 430, and I'm definitely so in this week I'm bullish. Over the next 2 weeks, I'm extremely bearish. And then I'm looking for some confirmation for a huge market roll here. Yeah, it's pretty bad. It's pretty bad. Like, Jerome, dude, whoever wrote that shit for Jerome, fucking fire that motherfucker. Sorry, I should be saying that. I'd be firing that fucking intern, like, gone. The guy's gone. He can kiss, dude. In my view, I'm watching that today, and I was like, oh, fuck, no, don't do that. Don't do that. Don't do this. Don't do that. You're overselling it. And the market is telling him, you know what the market's telling him today? You ain't fucking doing that, whether you want to or not. You get what I'm saying? So there's like a market that's telling him, oh, you can say that all you want. We'll give you the summer, maybe the spring, but we ain't giving you one full fucking year. We'll force you into cutting rates by, just call it July or September of next year. We'll make you call. We'll just make you cry uncle. Yeah, dude, those charts, man, they ain't pretty. They are not pretty. They do not look good for a bull. They look really ominous for a bull. No, Chase wanted to buy calls yesterday. We want to put a large, sizable sum on 450 Cs for end of month. I'm not on that trade. No fucking way. I think it's irresponsible. If I was to do that, it would be irresponsible for myself to do that. I'm not. There's no fucking way. Too many things saying fuck no. You put down $50,000, $100,000 on that trade. It is scary, super scary. Let me see what you guys are saying here. I'm short-term bullish in the rest of this week. I think the dealers will fuck around with this shit. They're going to squeeze it up higher as the puts roll in, and then you get the roll later. There's a high chance of a good sell heading into end of quarter. Like a serious major sell down. Let me see what you guys are saying here. My thesis for upside theoretically is by October, he signals that there will be further rate increase and folks front run the pause or trapped, front running the pause, trapped. I see the pause as bearish, so I don't see it as bullish. I don't. Do you see it as bullish? A pause being bullish in the market or no? Yeah, day trader, I see that. The market doesn't matter if you're a day trader. I agree with that statement, 100%. You don't care if the market goes up or down overall, but I'm talking about investors. We have a lot of investors that watch this show, and I can't lie to them and tell them that it looks good for them right now. I can't. I own the stock. I own Tyson Foods. I own Budweiser, a bunch of other fucking shit for my kids and stuff. But this don't look good. This does not. This looks like a hedging opportunity for market participants that actually invest and own this market. Limit buyer, take it easy. Have a great day. I love SDAO shares. I do. Not shares. I like SDAO, calls. I don't like buying them today. I think it's later in the week. Between now and Monday, there's some chance likely, some kind of squeeze likely, and you'll get a better buy-in for that move. It's possible. There's a 20 to 30% chance, maybe a 30% chance that we could start like heavily selling net right now. There's a fair chance of it. It's not great, but there's a fair chance. But there's a greater chance that we squeeze, just for the sake of dealers, and then we make the way down. So, oh no. What do you guys got from? Let me see what you guys are saying here. Okay, I got you, Chad. Right, I agree. The pause is bearish. What I'm suggesting there is the market drops into mid-October. Market pivots in a year bullish on a rate increase signal. Yeah, Chad, I've heard that argument. I've heard the argument that we slammed down into 430 and we just continue trend to the upside. Let's look at that real quick. How about this? That's a good one, Chad. So let me bring that one up really quick. Let's go to the Webull chart right here. So if we're following trend, right? So here's your 430 right here. Let's say we close up even this gap down below. Right? Watch this closely here, okay? So let's pretend right now we keep going down, right? We blast through. Maybe if you're super bear, we close all that. We'll even give the bear that right there, okay? But let's say it doesn't matter. Let's say we go down here. It doesn't matter if we go right here. Doesn't matter if we go right here. Let's say we do either one of these, right? Either one doesn't matter. So your thesis is that we continue up into the end of the year, right? So let's say we squeeze higher. Say we squeeze right on 430-ish. So we come right up here. We squeeze up, right? You really can't make that thesis real. You can't really make that thesis real unless you retake 443, right? Like you have to retake this, right? So let's look at this from the perspective of us. Pretend this is a 5-minute chart, right? I see your thesis here, but my point to you still stands, right? Where this thing, hold on a second here. Let me draw this out so it's exact here. I don't want to mince words here, right? You break down, right? So if this was a 5-minute chart and you told me I'm bullish here, right there, you tell me you're bullish, I would say, yeah, maybe to right there you're bullish, but your long-term thesis is not bullish. The only way you have a long-term thesis of bullish here would be if you break above, right, your previous high, right there, right? You come back down. Look at all the work you need to do to have that thesis. You need to come back down right there. And then you actually need it to turn up, right? You know what I'm saying? You've got that blast down. You come up here, down, and then only then can you have the end of the year bull thesis. Your end of the year bull thesis, you need all of this to happen, right? You need all that shit to happen. Then I think you can give that end of year bull thesis. Your bull thesis would be sound to me. Your bull thesis, your bull T would be sound. It would be a sound argument. But right now, it's not, right? Right now, almost the guarantee is that we blast down, at a minimum, break this right here. And the more likely scenario is we sell this. The more probable scenario, we sell that down. You can already see it, right? I can show you countless examples of this on any time frame. Any time frame, I can show you countless examples of how this goes. And what ends up happening is they trap you, and then you get your bloodbath down there. So unless this is flipped upside down, No. No. Yeah, you agree with it. You need confirmation for that trade. So Chad, you need a bunch of work to be done. You need a bunch of work to be done for that like bullish call for that run. You could get that run inside of that trading zone, but not like that 3,800, 3,072, 0. That shit does not look like it's going to work. We're being told right now, no. They're telling us. They're saying, fuck you, no. Plan for more down. So that's what we'll plan for unless we reverse to the upside. See what else you guys are talking about there. Yeah, did you get the putback? The putback spreads are fucking awesome, aren't they? I love those trades. Put ratio spreads, bullish, bearish, I don't care. They're phenomenal. Have you ever said if you are long, you are given a chance to get out, or if you're short, you're given a chance to get out? Yeah, you're normally given a chance to get out of the market. Even in COVID, when we had the crash, they gave you a chance to get out of the market. So leading into COVID, the market was anticipated to roll over. If you're a new market participant, if you did not trade before 2020, the COVID crash, there was an expectation of a roll coming already. But let's say you weren't ready for it. I don't know how you fucking weren't. But if you weren't, we still had a major squeeze higher, and they gave you a chance to, in an orderly way, even with an unorderly crash, they still gave you a moment to exit before it got crazy. Thanks, Mr. Talking Monkey, for the heads up. Let me see what else you guys are saying here. Let me see if I can read some of your questions here. 14,915 for potential bounce on NASDAQ. Bounce at 430. Bearish Ireland reversal. TLT going to break below $91. High rate environment will likely kill the debtors. Increased likelihood of default. Squeeze next week. What else we got here? Limit buyer, take it easy. Let me see here. Risk management. Absolutely, Steve. Mean right now, Tesla, will we have a bounce tomorrow so I can get out of my Tesla long positions? Lord Pente, are your calls just for tomorrow or not? Can't believe I'm on screen right now. It's kind of wild to see myself on a screen. I'm watching myself on Twitch. Kind of weird. Yeah, I'll do a can't believe I'm on fucking like a big full screen right now. Sorry about that. Hold on, guys. Look at that blood, dude, on SPX right now. It's wild. So we're gonna go to let's go to a trigger screen here. Let's look at Tesla. Let's see Tesla. Let's see if you need the tool. If you're a Tesla, let's see if you need the tool. Let's find out if you're a Tesla bull. Do you need the tool? Let's look at the tool here. Positioning on Tesla is short. Right? Short positioning on Tesla. You had the bull cross right there. Do you see it? Whoop, whoop. You had the first test right now of Tesla, right? Scratch that. Hold on a second. I drew that. Looks like dog shit. Squeeze up, right? Woohoo! Top of the trend, right? Here's top of the trend right here. Right? We squeeze on up. They sell trend. We consolidate down. Get above the 1 in 5, right? Come back down up here. Failure to make a new high. Failure. What happens? We talk about this to show you guys. Failure to make a new high. You guys kill me. What do I say all the time to you? Lord Pente, where are you? Stay in this chat with me. What do I tell you about a failure to make a new high? What happens on a failure to make a new high? Bam. Down to the hourly trigger. And you caught the cross right here. You had ample Ample. Right there. There's your cross. You were told, get out. Ample opportunity to get out. You should have gotten out right here. At worst, right there. Breakdown underneath hourly trigger. Smash down to the downside, leveling out a little bit. 1 minute chart starting to level out. Can I get out of my Tesla calls? Let's find out if you can or can't. Look at that. Woo! Can I get out of my Tesla calls? I don't know, man. I'll tell you what this looks like to me. I'll tell you what this looks like to me right here. Whoop. Told you no. Looks like that. Maybe you'll be given that right there. That's my expectation. If you're going to try to enter calls again, you need price to regain hourly trigger at 267. You actually need a new high up here. You need to hold 267. You need to get above 274, back test 268 for a leg higher. Until that happens, no go. Psh, psh. Look at that beautifulness right there. Sold that trend like it was nobody's business. If you are a Tesla bull, unfuck yourself. Unfuck yourself anywhere in here. I don't care if it goes all the way up. Get out right here. Get out right there. You are not promised this part of the trade. No promise. If I was a seller, I would be trying to sell this right here on any attempt from Tesla to go high. I'd be trying to sell that shit down to the depths of hell. Where's the price target if there is a rejection to the upside? We got it right here. I'm going to show it to you right now. Let's say they give you a chance. Downside expectation, 253. Downside expectation, 250. 250. Let's just call it 250. If you want to get bullish again in Tesla, there it is right there. You can snap that if you want to take it home, but I'm telling you what, man, if you're a bull, dude, any push higher, get out and reposition. Get out right here, and then you reposition later right there. You're now a buyer over there. Let me see what you guys are doing there. So I gave you Tesla. Now look at A, B, and B. Yeah, look at A, B, and B. Hold on. Ooh, Airbnb, baby. What'd you do? Airbnb is in death and destruction mode. Oof. Let's look at Airbnb for you. Airbnb. Ripping down to its monthly trigger today, 137.94, pin strike. On its monthly trigger, if price at any point is below its monthly trigger, it is super bearish. You want to see what happens when we get underneath the monthly trigger? Right over here. We get underneath the monthly trigger, blast down. We blast down. Watch this. Watch this. See this bear plane right here? See that bear plane right there? That confirmation on the monthly? Look right there. Bam. Downside, right? Downside off that, right? Watch right here. There's that monthly trigger, right? There's that daily trigger. You know what the bears are looking for here? Up here, and then blast down. Erase that entire move right there to 132 on Airbnb. They're trying to sell that bad boy. We're just going to make it 128 right there. Whole move erased. All of that move erased right there. This entire move erased. Entire move gone. There it is right there. Entire move erased. If you want to get long again on Airbnb, it is above 141 right here. You had a nice little down move right here. Got up right here. Failed and went to the downside. Need to be above for a bullish thesis on Airbnb. Above 142, above 142.28. And even then, you need a confirmation trade. So you need that bounce, and you need to begin to make your way higher to get bullish. You're not just bullish getting up here. You have to confirm that we're staying and begin to make a leg higher to even get bullish on Airbnb right now. What do you guys got for me? What do you guys got for me out there? What's going on out there? CVS. I fucking love SDAO. SDAO is my favorite way to short the fucking market. It holds up like it holds up under squeezing. You put enough time on it, and it eventually hits. Like it's like bam. The only thing that I would recommend on SDAO is pay very close attention. Listen to me closely on this one. Pay very close attention to liquidity in your position. If you've never traded SDAO, you might want to wait to trade SDAO and just watch the liquidity come in and out of SDAO. On the call side specifically, watch the liquidity because you want to be jumping in when other people are jumping in and exiting before they exit. So watch SDAO. The options chain on SDAO are your friend. It's a very insightful way to find out how bearish and bullish we are in the market, to pay attention to that options chain. I like this full screen stuff. I should do like a, what's that guy's name? Who's that guy? Meet Kevin. I should do like a polo shirt, a pink polo shirt, start parting my hair and fucking put some blonde highlights in my hair. Fucking get my teeth whitened for like the 4th fucking time. Put a bunch of pinks and purples behind me. I shouldn't have said that. What else you guys got? Yeah, I saw that video too, by the way. I watched it. You know what? I shouldn't say this because I don't want to say mean things about people, but you know what it reminded me of? It reminded me of the Zoolander with the guys inside the in the Jeep and they have spraying the gasoline everywhere. You guys remember Zoolander the movie? And they're like all at the fucking gas station jumping out of the Jeep. Everybody's got their fucking t-shirt or their polo shirts on. All right, I think we got everything. Yeah, the gasoline fight, exactly. All right, so I'll see you guys tomorrow. I will have something important for you tomorrow. I'll have something important for you tomorrow. We're gonna dissect what Jerome just tried to do. I don't know what he was thinking. I don't know what he was. I think he did too much cowbell. That's what I'm gonna leave it. I'm gonna post that on Twitter. Jerome Powell, too much cowbell. I can't say that. I shouldn't be saying. I gotta delete this from the fucking video because I don't want to disparage him. I shouldn't have said that shit. I apologize. Me, Kevin, if somebody ever tells you that, I apologize to you fully. Seriously. Look at Spoon. Like SPX is just fucking hanging dong right now. Big old red dog. Looks like it's got an STD. Look at that STD, man. There's SPY right there. Look at SPY right there. Fuck me. All right, so I'll see you guys tomorrow. You guys got anything for me before tomorrow? I shouldn't have said that shit. It's really terrible. I want you guys to know that like 3/4 of the stuff I want to say to you, I don't. Like 3/4 of what I want to say to you, I don't say to you because I'm gonna get in so much fucking trouble. Let's see. What are my thoughts on a small bounce between tomorrow and spot? I said that. Yep. I'm long calls. I am long calls due to dealers into the weekend. I am long this market calls into the weekend for dealers to rip it back higher. But I am also looking to put a major hedge in the market. So I am anticipating some real downside to come. So I'm like bullish for the next few days. That's only a mechanic of options market. That's it. That's the only mechanic that I'm thinking about right now is that the options market are going to squeeze out, or not squeeze out, but try to reprice. And then you're going to see people get bearish. Dude, people are going to be buying puts into this close. They're going to be buying them all week. Like the put flow the spice is going to flow for the bears. It's like the put buying is going to fuel the upside rip. Like the extreme bearishness that comes from this is going to fuel that rip higher. So, yeah, an unhinged version of Cap. I can't because the people are going to be like, "What a fucking douche." Like, try to hold my breath all the time publicly. I'm like, I'm not that guy. I'm not like the guy that's like, fuck that guy and fuck this guy and fuck that guy and fuck that guy. Like, I don't want to do that shit. It's not who I am. So, all right, I'll see you guys tomorrow at 9:30. I'll see you guys tomorrow and on Friday as well. I do have I will be gone. I think October 18th or 19th, I think. 19th, 20th, 21st, 22nd, something like that. We'll be gone for that, and I don't think I have anything else. I don't know. I'm gonna ask my wife and see if I got anything else planned. We've got some small camping trips and shit still in store for the year, but none of that stuff's big stuff. Yeah, you got to hold back. I don't want to disparage people. It's not cool, especially if I'm not in front of them. I give them a chance to like defend themselves and shit like that. So I apologize to you, Meet Kevin, if I did.